very first and foremost, you're seeing the shorter end of the yield curve begin to come down at a much faster pace, whereas the expectation for the longer end of the yield curve is likely to remain where it is. And that just tells us that the discount factor within equities, which is so reliant on the long-term rate of the yield curve, is likely to stay where it is. And that means that longer duration growth stocks are likely to be more penalized as compared to value and small cap oriented stocks that tend to be priced on the shorter end of the curve. They are likely to have an asymmetrical benefit compared to longer duration stocks. And that's what we're seeing play out. So if you look at the comparison of equal weighted S&P 500 versus the market cap, you're seeing, a much stronger bounce of the equal weighted S&P 500. As you mentioned, if you look at more of the defensive stocks, they're also benefiting at this point in time. So you're seeing a bit of that catch-up trade take place as investors just, try to understand this period of uncertainty and this recuperation that we got from the sell-off at early August.
Yeah, let's hope we don't have this similar whiplash again. Bonds have been on a 4-month rally. The question is whether that's exhausted or fully priced for the series of rate cuts.
Absolutely. I mean, one way we are seeing that being played out is in gold. So safe haven assets such as bonds as well as gold are performing very well. We've seen.
So seeing here, according to Nikkei, Japan won't supply iPhone displays as Apple ends LCD use.
By China, Turkey and India are holding that strength, and we are seeing tremendous amount of demand coming in from these two central banks and acting as a very important anchor for gold prices. And now that, the broader consensus view is more bearish on the dollar, that again is another very important tailwind for gold as a safe haven asset.
Anika, I guess what I'm trying to understand is in all of this, if this is a catch-up trade or if this is the regime shift that people have long awaited to happen if it is finally here, which of the two does it appear to be?
I think it is a regime shift. It started off with the great rotation out of large cap growth into value and small cap. We saw a bit of a pause when there was this, strong sell-off that took place in the market. And now that we've seen, equity valuations recuperate somewhat to that level that we had initially seen, in that recuperation, we're seeing that great rotation trade continue to play out. So I think it very much is a defensive plus, looking at undervalued segments of the market that stand to benefit as we see that disinversion of the yield curve take place.
Well, one thing for sure is that the banks have had a pretty good run. And the question is, as we go into the cutting cycle, whether that endures, Anika.
Well, there are two factors for the banks. Clearly, it's obviously rates play a very important factor, but also the growth outlook in, respective economies. So if growth is in line with a softer landing, banks still stand to benefit. However, if we do see a sharper, more protracted slowdown, then that will impact banks, and we will see, a knock-on effect in the performance of the banking sector as well.
Well, it certainly will reduce the cost of deposits. Anika, thank you so much for being with us. Anika Gupta there of Wisdom Tree, setting the agenda this Monday morning. Other stories trending on your Bloomberg terminal, this is what we've got. Volkswagen is considering factory closures in Germany for the first time in its 87-year history. After years of ignoring overcapacity and getting worse at competing, the German auto giant's moves are likely to kick off a broader reckoning for the industry as Chinese rivals overtake their European car makers.
And meanwhile, VP Kamala Harris joined President Joe Biden in declaring that U.S. steel should remain domestically owned and operated. It's just the latest headwind to this proposed sale of the company to Japan-based Nippon Steel.
Tesla plans to produce a 6-seater variant of its Model Y car in China from late 2025. That's according to reports from Reuters. Tesla has asked suppliers to prepare for a double-digit increase in the Model Y output at its Shanghai factory.
Now, coming up, tensions are still high across Israel. Prime Minister Netanyahu has been pushing back on protesters' demands for a ceasefire. We're going to have more on that next.
And the bar isn't too high for a 50 basis point cut. That's according to Mark McCormick of TD Bank. He joins us a little bit later this hour. Context Matters on Bloomberg.
everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest, weekdays at 9 a.m. Eastern, only on Bloomberg Television.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. It's Jobs Day, and Bloomberg has the report under surveillance.
It's from super hot to solid.
This is normal.
I think people underestimate the behavioral aspects when it comes to the labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
So what is bad on September 6th?
Nobody really has a full answer on it.
I don't know what counts as good news these days.
It's a big debate.
The August Jobs Report, Friday on Bloomberg.
We say yes, they say no all the time, but they also murdered these people. And now we need maximum pressure on Hamas. I don't believe that either President Biden or anyone serious about achieving peace and achieving the release would seriously ask Israel to make these concessions. We've already made them.
That was the Israeli Prime Minister Benjamin Netanyahu standing firm as hundreds of thousands of protesters took to the streets over the government's failure to secure a ceasefire for hostages deal after 6 Israeli hostages were found dead. President Biden told reporters in Washington he planned to speak to Netanyahu eventually, with the Washington Post reporting over the weekend that the U.S. plans to present a take-it-or-leave-it ceasefire deal to all parties soon. Joining us now for the U.S.'s reaction is Bloomberg's Anne-Marie Jordan. Anne-Marie, good to see you this morning. It sounds as if this was a fairly pivotal week inside Israel and externally. Is Netanyahu doing enough? And a one-word answer, and then he went inside. President Biden responded no.
Yes, and he met with his national security team and those individuals that have been flying back and forth to the Middle East, meeting with Qatari and Egyptian officials to try to negotiate this ceasefire. One of those officials, an individual part of this negotiation, speaking to the Washington Post, said, you can't keep negotiating this. This process has to be called at some point. Does it derail the deal, given the events over the weekend with those 6 hostages found dead, with the fact that Israel, the United States, saying they were shot dead, those captors, by Hamas? Does it derail the deal? No. If anything, it should add additional urgency in this closing phase, which we've already been in. We've heard this a lot, though. So does the context change the fact that potentially could a deal get over the finish line now? The United States is calling this take it or leave it. We do know that the head of Mossad was actually in Doha yesterday. So potentially reading the tea leaves, maybe things are pushing forward in terms of a deal. Netanyahu is under a tremendous amount of pressure. When you see those pictures out of Israel yesterday, protests on the street, labor strikes, people not wanting to go to work. They want to see something done.
And meanwhile, in the U.S. in general, it is this last gasp, this last stretch for campaigning until the election. I know Libby Cantrill, whenever she's on with you, always says, Anne-Marie, don't pay attention until after Labor Day. Here we are after Labor Day. What does it mean for the candidates and for campaigning?
Well, basically, pollsters will say that people's minds start to become more focused after Labor Day. Summer holidays are over. Kids are back to school. They can start paying attention and thinking about who they're going to vote for. We should also note that starting soon, you can vote early in some states. So it is full-on election swing. 9 weeks today, November 5th, is when Americans officially go to the polls. So you have this race that's basically frozen right now in the polling. You could see see Harris in our latest Bloomberg Morning Consult poll. She's really closed that gap that Biden was unable to attain when he was in the race. And she's ahead in some of these states, but within the margin of error. And even yesterday when she was in Pennsylvania, clearly making a play for those Union Joe
Seeing here, Bank of America Global
talking
Research
about
raises
how
the UK's
US
GDP
steel
growth forecast
needs to
for
remain
2024
domestically
to
held in US
1.1% from
hands. You can
0.8%.
see the fact
And also at
that
the same
she
time,
said,
seeing S&P
"Don't believe
500
the
E-mini
polls.
futures
This is
down
going to be tight. This is
0.5%,
going to be
NASDAQ
neck
futures
and
down
neck.
0.8%,
Don't believe the
and Dow
polls.
futures down
Don't believe the enthusiasm
0.4%.
just yet. You
As
have
well
to
as that,
go
we do
out
see
and
Brent
vote."
crude
You're right,
futures
Sharice,
falling
we
over
did go
$1
after
to
the working vote. This is going to be
$76.42 a
fight
barrel.
for the future of every worker has the right to organize. So it really is playing in to the union's hand. What cuts through in that blue wall? What is it that really cuts through in Pennsylvania?
Well, I think it was obvious where she was yesterday on Labor Day. She also made a play in Detroit, Michigan.
Yep.
That is about car manufacturers, the UAW. This is something that Trump has gone after this administration because they have made a push to electric vehicles, which has unnerved some of these rank and file union workers who are concerned about their future job prospects. And then she went to Pennsylvania, where she talked about not just to steel workers, but also this is a place where Republicans will criticize her for flip-flopping.
Yep.
You know, she made that famous quote, "I'm against fracking." She's now walked that back a number of times. Those statements are key to places like Pittsburgh, to places like Detroit.
Anne-Marie, really appreciate it. Bloomberg's Anne-Marie Horder, who will, of course, be back in about 40 minutes' time with the surveillance gang. Okay, coming up, Cathay Pacific cancels some Airbus flights amid engine component issues. We're going to have the details for you on that next on your brief.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I
At 5:30 a.m. Eastern Time, we do see Germany calling for bids on an auction of 4.5 billion euros of 2.7% 2026 bonds. The 2-year Bund yield is on the prior 2.38%, with the 2-year bid to cover on the prior 2.1%.
I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
It's your Bloomberg Brief. Danny Berger and Manish Cranny in New York. Shares of Rolls-Royce, an absolute roller coaster ride this week. They're bouncing back up some 3% this morning, but they dropped more than 6% yesterday. That's the most in 2 years. Cathay Pacific had canceled multiple Airbus flights to inspect engine component issues, and Rolls-Royce has been moving on it because they are the maker of the engine in question. Bloomberg's Benedict Campbell joins us now from Berlin on more on this. Benny, how much should we understand this as a Cathay issue or something gone very wrong at Rolls-Royce that balloons into something much bigger?
Yeah, that is really the big question at this point. When the headlines first crossed yesterday, a little bit spooked. And is this an industry-wide issue that will affect not just Cathay and their fleet, but airlines across the world? This is a fairly widely flown plane at this point. There are about 1,500 of these engines out there, mostly on the smaller variant, the A350-900. But Cathay said that it affects both types, the 900 and the 1000. For now, it appears that this is contained to Cathay, but it's early days. We've just sent some headlines that JAL, the Japanese airline, they're inspecting their planes. Lufthansa, for instance, they said that they're closely monitoring it. Qatar Airways is a big operator of this plane. So that's sort of what we're doing right now. We're running through the checks. We're running through the airlines. Nobody's come out since to say we found similar issues. Potentially, the good news is that this is contained to Cathay. Also, that it's something that's fairly easily fixable. They don't have to take the engines off the wing. The turnaround is relatively quick, it seems. They've been able to repair some of the engines already. So all of that points to this issue being maybe more annoying than catastrophic. And you can see it in the Rolls-Royce shares today. They're up marginally again after that fairly epic drop last night. So it seems like investors are hopeful this can be contained.
So, Benny, the word there is contained, and therefore the question is about risk to Rolls-Royce and Airbus. If we're in containment zone, that risk is lower.
Correct. I mean, but the other thing you have to remember is Rolls-Royce is a stock that's sort of prized for perfection. You know, the shares tripled last year. They're up a lot this year again. And the narrative around Rolls-Royce was that this is really a company in a positive turnaround and a good story to sell. You know, the A350 was selling well. They are the sole engine supplier on that aircraft. They really are getting costs under control. So anything like this, where people are spooked and maybe reminded of past issues on other engines, that's something that they don't want. So if they can contain this, then great.
Benny, thank you very much. Benny Campbell in Berlin on the latest there on the Cathay Pacific story. Other stories on the front pages. This is what we're tracking for you. First up, Bloomberg. The U.S. drafts sanctions against Venezuelans over the disputed vote. Treasury Department close to announcing 15 individual sanctions on the Maduro-affiliated officials. Additional visa restrictions are planned by the State Department.
Now, Manus, this on Axios. The Brazil X-ban has been upheld by the Supreme Court panel there. Musk has been refusing to comply with the law. It was a unanimous ruling, and Musk also accused the country's top judge of acting as a, quote, dictator for suspending X over misinformation concerns and failing to appoint a legal representative for that platform.
The FT leads with the story on housing costs. This is big in the political narrative here in the United
Just
States.
less than 5 minutes away now until we do see Germany calling for bids on an auction of 4.5 billion euros of 2.7% 2026 bonds. The 2-year Bund yield is on the prior 2.38%, with the 2-year bid to cover on the prior 2.1.
Is all from Gallup, and as I say, it's a big political issue here in the U.S. Think about house prices. Average house price is nearly 40% higher since Biden took office in 2021.
And a huge part of the problem, as this article lays out, is just supply. And that's what makes policy so difficult. Anything that really stimulates demand could be an issue if you don't have supply.
So we'd also see here the Bank of America Global Research raising the UK's GDP growth forecast for 2025 to 1.1% from 1%.
But at the same time, give first-time home buyers a subsidy, and that's where economists are concerned.
Yeah, I mean, the promise is, and these are promises, which is $25,000, maybe bringing another million potential homeowners in there who can't get on that housing ladder. But can you construct 3 million new housing units and really push Wall Street aside from that deal? We can debate that.
terms of how we should deal with the challenges that are, facing the world and also internally, I think it's just an opportunity also, an angle. And you could see that in a lot of activities that are picking up in this region, simply because it's a region that is actually a bright spot amongst very few in the world today. And people always talk about the flavor of the month. Actually, I don't want to sound too, large-headed, but actually we will be the flavor of decades. We are determined, we have long-term plans, and we are very clear and committed on our commitment to the investment community at large. I'm not talking about one individual country, but at large in the GCC, that we mean business, that we are willing to take every step possible to make it easier for investors to do business in the region, that we are willing to do a lot of structural changes, including actually making it very predictable, very consistent policies.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain World Cup.
This is a three.
As the economic picture.
Covering the intersections of Hollywood.
So we are shortly expecting our German 2-year Bund results.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger, alongside Manus Cranny. Let's set your agenda.
It's a pivotal week for rates and risks. Stocks hover near record highs. The bond market awaits Goldilocks confirmation. Digging in, the yen rallies after the BOJ governor Ueda doubles down on rate hikes. T. Rowe Price says brace for a shock. And mounting tensions, protests and strikes hit critical levels in Israel. Prime Minister Netanyahu stands firm on his ceasefire terms. Danny, welcome back. Good to see you. And we have big risks at play this week.
We do. Summer has certainly come and gone. And it is a binary risk with jobs data this Friday. Mike Wilson at Morgan Stanley saying that it is a key determinant in whether equity valuations hold up. We're about a third away from all-time highs as of the close on Friday. We dropped by nearly 0.5% this morning. Clear nerves in this market. Your U.S. 10-year yield, little change, but both bonds and equities are on a 4-week winning stretch. Will this week confirm or deny that? U.S. dollar versus the yen, weaker by about 0.7%. Manus, as you mentioned, it was a letter to the government basically saying we are going to hike if everything goes to plan. So those concerns about volatile markets derailing them, that is not the case. So again, you get that strength coming from the yen again this morning.
Oh, yeah, well, it's a question of deja vu, isn't it? Whether we go back to what we had in the very first week of August, which was a jolt, excuse the pun, from the jobs report, and then layer on top of that a carry trade which unwound really quite aggressively. And if you look at this week's numbers, Danny, it's a question, you got the yen in play at the start of this week, you're counting down to the jobs report, and we've had those adjustments in the month of August, nearly 1 million jobs less than we anticipated. So it's about veracity of data as well.
There is something different in this market heading into this report versus the last report, though, and that is this series of defensive plays coming into the fore. You have utilities, the best performing sector in this equity market over the past month. You have gold on
So seeing the German 2-year numbers here, average yield at 2.41% with a bid cover of 2.5. So that is Germany selling 3.738 billion euros in their auction of a top-up of 2.7% 2-year shats.
To the tighter measure of the S&P 500. So it's a question of whether rate cuts come into play. Do you go for value and breadth, which is the conversation we had with Anika just a short time ago.
It certainly is. And again, Manus, as you point out, the other important conversation this morning is the yen and whether we get some sort of redux of what happened last month. Let's get over to Bloomberg's Ven Ram on this, our currency analyst within the Bloomberg house. So Ven, you have this concern that yet again, we could have another volatile yen, that all of the concern of last month has gone away and we're right back where we are. How much does UEDA telling the government that we could hike again put into risk the carry trade?
It does imperil the carry trade a whole lot, Danny. Morning. And summer has come and gone, yes, as you mentioned, but the market's complacence hasn't gone anywhere because, you know, the Bank of Japan is very clearly saying that, look, they are going to hike rates. Why do they want to hike rates? They want to hike rates because real rates in Japan are pretty deeply negative. If you look at the 5-year real yield in Japan, it's south of 105 basis points negative. So that negative real rate is not a good thing for an economy that is growing at a pretty decent clip and where inflation is doing its rounds. So the Bank of Japan is very keen to raise rates, and you know, all this talk about market volatility is not their concern. Of course, they may have come out and assuage some fears, but that is just addressing sentiment on the day. If you can't rely too much on that, the Bank of Japan's policy remit is to guide the economy and make sure that inflation is well anchored, and that's what they're trying to do. And therefore, the risk of an unwinding of the carry trades remains and is going to be the emerging, if not the emergent theme in the next quarter.
Well, we're certainly going to debate whether there's another wave of structural flow to repatriate into Japan. We're counting down to the jobs report this week. You're going to get jobless numbers, you're going to get JOLTS, and then it's the non-farm payrolls. The risk is that this is lighter. You know, as Danny says, it could be binary for the market. How binary can it be on Friday?
Well, I think the number that's going to do it for me, Manus, is the jobless rate. If it ticks higher than the 4.2% forecast, then the Fed is going to be pretty upset about it, because that means that the labor market needs some rescue effort, and that is what they will provide. The question really is for the markets is whether it's going to be a 25 basis point move or a 50 basis point move. Looking before the data, it looks like 25 basis points is what we should be aiming for. But, you know, if the jobless rate ticks higher, then that is going to put a sense of urgency to the Fed as to how high the rate is in relation to where the economy is.
Okay, Van, we're counting down. We'll track that data through the week. Van Ram on the FX markets. Our guest this morning is Mark McCormick, Head of FX and EM Strategy at TD Bank. He weighs in on the Fed's path ahead, writing this: the main risk is, our view is that the Fed leadership finds itself needing to go back to neutral stance sooner than we anticipated. We no longer view the bar for 50 basis point cuts as overly high for the coming meetings. He joins Danny and I now. Mark, Danny used the word binary. Let's get to the data on Friday. Is it fill or kill? Is this one single piece of data, fill or kill, for the 50 basis point cut to come true in September?
Yeah, I think absolutely. I think this was, if you go back to the last report, it was the straw that broke the camel's back in terms of where the markets went in terms of volatility, what it was thinking for the Fed. It basically pulled in four cuts for this year, almost 4 cuts and change for next year. So this report is going to be quite pivotal, just because we know that Powell has acknowledged that they're ready to cut, and now the market's trying to figure out, can we do 25? Can we do 50? But I think the market also has to be mindful. It doesn't want to drop the ball on inflation. The Fed's done a lot of work on inflation, and there is a little bit of a divergence here between sticky and flexible inflation, which is also something to keep in mind as well.
Well, Mark, I know you think that macro volatility is still too low and that the carry trade will continue to underperform. Why is this a market that's ripe for disruption?
I think a piece of it is that markets have gotten complacent again. I feel as if markets are, especially the FX market, it's known as a serial monogamous. It can only focus on one theme at a time. And the theme that the market's focused on is only the US. And this is what I think is interesting about the currency market, is it's always relative. So you've got to compare one thing to the next. The US has slowed, and a lot of the leading indicators that we track, data surprises, data trends, consensus revisions, they all justify that things have moved in a direction where the Fed can get out of restrictive. I think what the market's missing, and it's completely ignored, and we got this view when we were in Asia visiting clients as well, is that maybe the market's adopted to a very slow growth in China, but all the other pieces outside the US are connected. European export growth is connected to China. China is connected to other parts of the world. And I think what we're seeing is that the impulse from these other places is much faster deceleration than what we're seeing in the US economy. And also, if you look at the global manufacturing cycle, it's also very weak and it's decelerating. So I think a piece of it here is you still have a tremendous amount of uncertainty. The French have to deliver a budget to Brussels this month or early next month that's likely to be rejected. We just saw the elections in Germany, which moved into an uncertain direction. We also have the US election as well. So if you take where our models are at in terms of volatility, we're kind of back to this rubber band metaphor, where if you start to pull things a little bit too far, when they get a pop. And that's what we're starting to see, is the markets got very complacent, I think, over August. Our positioning and our short-term valuation models are skewed, and we are just not priced for any surprises again.
It's interesting that you talk about we're not paying enough attention to those global issues in Europe and in China. If there is a synchronized slowdown, more aggressive perhaps than we are anticipating at the moment, how will that reverberate to the dollar?
So I think a few ways. One, it's going to be good for the dollar, particularly against the euro. I think this is one of the ones where markets kind of get a little bit over their skis. The pendulum goes too far in one direction. Again, we focus only on one theme. If you're just focusing on Fed pricing, the dollar's still cheap on rate differentials. If you're looking at global growth dynamics, the dollar, again, should be stronger. And again, I think a lot of this boils down to maybe their central bank reserve diversification. They're not price sensitive. They kind of come in the market, do what they need to do, but they're not really driven entirely by fundamentals, so they can move things a little bit too far, too fast. So I think the big trades are very simple. One is that we are short Kiwi. New Zealand dollar right here looks very ripe for a correction. You've got a local slowdown. You've got a central bank that's very aggressive. And again, it's got a high beta to the risk in the dollar. So the way we're looking at this is we are short euro dollar through a put spread. Gives you a little bit more time over the couple of months to play through some of these events. But we do like New Zealand dollar. So it's basically a function of picking currencies that are sensitive to risk, sensitive to global growth, and just don't have a great local story. And those are the ones where the dollar should rally. But the other side of this trade is essentially to be long on G10 crosses.
What are you doing with the yen then? T. Rowe Price telling Bloomberg that they think another shock is on its way with a BOJ that is willing and wants to hike. Are you preparing for a shock, Mark?
Yeah, we've been out of consensus on the BOJ all year. We were expecting the BOJ to hike in July. We expect them to hike again in the fall. I think it's very clear, if we kind of go dust off the playbook from a couple of years ago, is every central bank that started was behind the curve. Neutral rate was higher than they thought. They had to go until something kind of broke a little bit and then kind of try to walk things back. And BOJ is in the same position. And again, as we talked about, I think last time as well, is I think there's a concerted effort by the government, by the pension funds, by the central bank to get money back into Japan. So the BOJ's got to raise rates to assist the pension funds to repatriation. And again, I think that would all help to normalize the currency. So I think, what's critical is that they're ready to go. And as they highlighted, central banks are always going to tell you when there's a shock that shock can stop them. But that is, again, just a moment in time for them to kind of suggest and try to clear market anxiety. But to me, the fundamentals, medium term, longer term, all suggest stronger again, more BOJ action. And again, further undermining of the carry trade, which is one of I'd say our highest conviction is we need more vol. We need more defensive markets in through the fall, and that the carry trade is going to continue to suffer. And it's more of a structural flow, not a tactical position that people are just going to unwind in a month or so.
Can you just build on that structural flow? Because that's the point that T. Rowe Price made. It's a structural repatriation back into yen, but that's not just from dollar. That's going to be a global repatriation, or majority of that will be on yen. And where does that take dollar yen to?
It's definitely partly linked to the end. We've tried to figure this out a little bit. Like, does the euro rally if the carry trade unwinds? I think one of the ways to do this, you can look at the BIS data, you can try to look at positioning data, you look at valuation data. I think one way we do it, which is unique, is we run FX portfolios, and those portfolios assist in our understanding of what's driving markets. If you look over the last 5 years, one of the best performing strategies has been the carry trade. So if you kind of look at the performance of the carry trade in the short term versus kind of the longer term, what we're kind of seeing is that with the high Sharpe ratios that were delivered on a carry strategy in FX, this is not something that just, hedge funds get squeezed out of in 1 month and then the whole thing is done. So I would say we are measuring carry trade in terms of trillions of dollars. And those trillions of dollars are driven by the will be driven by the repatriation of Japanese that have pushed investments abroad. I would consider a pension fund investment into U.S. tech as a form of a carry trade, along with people, again, having to use currencies on an hedge basis to allocate those trades. So I would say, again, yes, we are talking about months and quarters of carry unwind, not just, squeeze. And again, I think that's partly driven by the performance of the strategy, which has been one of the best performing strategies that we see across our factors. And it's one that once it does well, it attracts more flows into it until the system changes.
Hey, Mark, this has been interesting as always. Thanks for joining us this morning. Mark McCormick of TD Bank. Okay, coming up, Prime Minister Netanyahu has been doubling down on his ceasefire terms with fresh pressure from Israeli protesters. We're going to have the latest for you next.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs. Taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
We say yes, they say no all the time, but they also murdered these people. And now we need maximum pressure on Hamas. I don't believe that either President Biden or anyone serious about achieving peace and achieving the release would seriously ask Israel to make these concessions. We've already made them.
A defiant Israeli Prime Minister Benjamin Netanyahu, he's standing firm even though protesters have been taking to the streets demanding a ceasefire in Gaza. Those protests spurred by 6 Israeli hostages who were found dead over the weekend. President Biden then told reporters in Washington that he planned to speak to Netanyahu eventually, with the Washington Post reporting over the weekend that the U.S. plans to present a take-it-or-leave-it ceasefire deal to all parties soon. Joining us now for more is Bloomberg senior editor Bobby Ghosh. Bobby, at what point can Netanyahu no longer be defined? At what point does he actually need to listen to the protesters?
Well, as long as the protests are coming from the left, and that seems primarily to be the case, he can hold out. What needs to happen for him to change his position is for there to be a split within his right-wing hard right-wing coalition. We haven't seen that yet. As part of his governing coalition, those parties are still very much behind. In fact, they are, in some cases, to the right of him. They want even more military action against Hamas, against Gaza, and in the West Bank. So as long as that consensus holds, his political position does not change. But this is a man, famously, his 9 lives, but you have to now think that he's down to maybe half of those lives. That he's exhausted 8.5 of them. These protests are very serious. They're the largest protest since the 7th of October. Hundreds of thousands. There was a strike that only lasted half a day, but it's a significant shot across his bow. What we have to see now is whether any of those right-wing parties now stands up and says, this has gone far enough.
Do you get a sense from Biden's one-word answer in terms of is Netanyahu done enough? No. Is something shifted in the U.S. spectrum?
No, I'm not yet convinced that the Biden administration is prepared to go any further than it has. This take it or leave it plan essentially has been on the table since the end of May. And for whatever Netanyahu says, there is consensus in Israel and in Washington that it is Netanyahu who's standing in the way of the ceasefire deal, much more so than Hamas. The British have gone a little farther ahead than the U.S. They've announced the suspension of some arms sales, not a great deal. That creates an opening for Biden. If Biden wants to follow that example and even sort of issue a temporary block on some arms sales to the Israelis, I suspect that is the maximum that they will be prepared to do. And even that, I'm not so sure.
I just can't help but wonder if we're in a scenario where an American citizen has died, one of the hostages was a U.S. Israeli-American citizen, if there's an unwillingness from the Biden administration to do something like that, because if this doesn't cause it, then what would?
Well, what you heard from Netanyahu, there is sort of a preemptive strike at Biden by saying, I don't think President Biden, if he is serious about permanent peace in the region, would ask us to make these concessions. So he's sort of saying back off. And that word that Biden used, ultimately, that he'll speak to Netanyahu ultimately, that's not strong language from the American president. So it would appear that even the tragic death of these 6 Israeli hostages, the fact that they happened only in the last 48 to 72 hours means that if a ceasefire agreement had been arrived a week ago, 2 weeks ago, a month ago, 2 months ago, they would be alive and potentially at home with their families today. That's a very powerful piece of knowledge for folks in Israel to have. And the anti-Netanyahu protests will try to build on that. But I don't think that's moving any needles in Washington.
In terms of the negotiation, from all sides, there's going to be a number of points that they want to win on. Where are we in terms of Israeli forces remaining on that Gaza border, that Gaza-Egypt border? Is that one of the biggest sticking points?
Yeah, that's the biggest sticking point. It's called the Philadelphia corridor. It's the border between Gaza and Egypt. The early drafts of the plan that the Biden administration put forward basically required Israel to withdraw from all of most of Gaza, including the Philadelphia corridor. But Netanyahu came back and said, no, we want to stay there. And that seems at the moment to be the biggest sticking point. He's adamant that he's not going to get out of there. Hamas is insisting that they have to because that's the sort of pivot around which this entire deal now turns.
Bobby, we really appreciate your time this morning. Bloomberg's Bobby Ghosh. Okay, let's get a quick check on your commodity market this morning. We are looking at weaker both Brent and iron ore and copper, down some 3 1/3% for iron ore. Manus Goldman out with a new forecast.
Yeah, they're basically saying, look, there's limited upside for steel in China. The environment for iron ore remains challenging. And we've heard this from some of the biggest steel producers in China last week, 10 days ago, talking about this is 2008, this is 2015. So that's the state of play within the Chinese economy and certainly taking iron ore lower.
Yeah, and it's a problem because Goldman had been one of the biggest cheerleaders of the industrial metals. But yeah, they've cut it by almost $5,000 a ton. Okay, Manus.
It is a big week, as Danny and I have been saying, for you in terms of jobs, jolts, jobless claims. It is a feast along with manufacturing and services. We bring it all to you here on Bloomberg. Good morning from New York.
power, money, culture. As Linda Aman tells the story of Asia's rise through the people who are helping to shape it. The Serum Institute was a major player in the fight against COVID-19.
We're in a race to procure raw material that was sanctioned.
And now CEO Adar Poonawalla is bracing India for the next pandemic.
I'm not losing sleep over which day and when it's going to come out, but we're definitely prepared.
Latitude, encore presentation this weekend, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The top names at Jackson Hole are on Bloomberg.
I'd like to see us move toward a more real-time data set. So using new technologies, maybe some of the AI technologies, maybe we get better data as we move forward, but we've got to really focus on that with our economists and our analysts about, where is the data coming from and can we rely on it?
Nobody covers Jackson Hole like Bloomberg. Context changes everything.
It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. Let's get you set up for this trading week, a shortened traded week. Manufacturing PMIs, those come out at 9:45 a.m. Eastern. They'll be followed by ISM manufacturing at 10 a.m. And then it is a marathon of data, specifically jobs data. We're going to get jolts on Wednesday, ADP and jobless claims on Thursday. And then finally, Manus, it is the big one. We're going to round out the week with U.S. payrolls report on Friday. 165,000 is the current estimate.
Yeah, let's hope it's not deja vu from the start of August, where it's a little bit of a jolt from the blue. A couple of stocks to keep an eye on. Boeing, as I said at the start of the show, Wells Fargo slashes or downgrades the stock, setting a street low target of $119. We're at 169 and change at the moment. U.S. Steel, perhaps the most important point is Harris yesterday on the campaign trail saying U.S. Steel should remain American-owned and run. But Danny, it's dollar yen. It's almost like a redux of the beginning of August. We've seen the strength in the yen. UADA writes a letter to the government going, I'm still for hiking rates. There you go. A little bit of a leg higher for yen, lower for dollar.
Yeah, and it's up nearly 1% versus the euro this morning. It is a UADA saying, look, we are going to be hiking should, as you say, the economy and inflation data hold up. But it is not a BOJ that has been spooked by market volatility, and that's what many traders had hoped for. Instead, we heard from Mark McCormick of TD saying that he does expect this continuous unwind of a carry. That is not that it all goes at once, but it's a slow-moving progress of hike after hike, eating away at the ability to hold yen as a carry trade.
Just to coin what T. Rowe Price actually said, they called this yen carry trade unwinding the San Andreas fall to finance. Mark McCormick at TD says it's going to be quarter after quarter. It's going to be trillions of structural repatriation from U.S. assets. People who bought tech, this is the interesting point, people who bought tech stocks, funds that bought tech stocks essentially as a carry trade, buying the dollar asset, funding it in yen, and that's got a big consequence for the bigger tech play.
Yeah, we hear this all the time. I still have yet to meet a fund that's actually done this. I want to hear from them. I literally have not heard anyone actually doing this.
Give us a call. You're very welcome to come on the show. It's the end of your day, but you're always welcome.
Yeah, I think that's a good invitation. All right, it's a busy week. Surveillance takes the reins from here to walk you through it all. This is Bloomberg.
To succeed in Wall Street, what skills do you need? You need to be somebody that claws people in the back, people that you have to be tough, you have to be fighting people all the time. What are the skills that really take to succeed in Wall Street?
Great question. Of course, you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out. Which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings. They came in 2 cents ahead. One of the pennies was currency, the other penny was lower G&A, blah, blah, blah. Forget it. Big calls on big stocks. My very first piece of research I published was very negative at a time nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, and you can build an entire business, in fact, an entire industry around it.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
up-to-the-minute business news whenever and wherever it happens. I'm Anne-Marie Hordern in Ukraine, and this is Bloomberg.
We're at an inflection point, and it becomes difficult to know, are you moderating into a soft landing, or are you moderating and then slowing down much more sharply?
We should expect to see over the next several months probably still some more softening in the labor market.
On average, the consumer's doing fine, but there are pockets of weakness here. And I think the Fed has to be attentive to that.
The consumer's searching for value because they don't have the stimulus dollars they had a couple years ago.
We do think that what's on the horizon is the risk that inflation actually picks back up again.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started. Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now with your equity market on the S&P 500 pulling back just a touch. We're down 0.5% on the S&P. Coming into September on a 4-month winning streak. The week is absolutely stacked. Let's talk about payrolls. The estimates look like this. The median for Friday, 165 on headline. That's up from 114. For the unemployment rate, Lisa, 4.2%. That's down from 4.3.
So basically, everyone is saying the important day is going to be Friday, pretty much across the board. This is the big test for an equity market that typically does poorly in September. Let's just put it there clearly. But clearly to this week, everything hinges on that with sort of the drumbeat up to it with the JOLTS report, the beige book, some of the ISM services that come out on Thursday as well.
Here's a flavor of a question we're going to ask repeatedly over the next few days. How bad does it need to be to go 50? How bad does it need to be? Seth Carpenter, Morgan Stanley. Lisa, we think a print around or below 100K this week will clearly put a 50 basis point cut on the table.
Yeah, this to me seems to be one of the key questions. We heard from Citigroup that it was 125. That would put 125,000 jobs. That would put 50 basis points squarely on the table. Key question is whether the Fed has given up the idea of a 2% inflation target. And this is something we're going to speak with some of our guests coming up. If they sort of tacitly acknowledge that they would prefer to rescue the labor market over achieving that 2% inflation target, that opens up the door to a 50 basis point rate cut, even without severe labor market pain. Question to me is bad news bad news? And Stuart Kaiser just sort of hammered home on this over the weekend, saying bad news is bad news and good news is good news. Don't get your hopes up that a 50 basis point rate cut is really going to support an equity market that kind of has the balance of risks to the downside.
The labour market at the centre of absolutely everything. It's been a really busy couple of days on the campaign trail at AMH, courting the union worker vote, a big theme of the last 24 hours.
Absolutely. Kamala Harris yesterday in Pennsylvania alongside Joe Biden. Joe Biden, of course, went ahead and said, we usually hear from him that he's proud to be the most labor union friendly president, and she will be too. This was him basically giving his blessing to the union voters that Harris will follow in his footsteps. And she came out and she said, U.S. Steel, that company that has been the back and forth between the United States and Japan, U.S. Steel should remain in domestic hands. You're going to see a lot of this because guess what? We are 9 weeks today from the U.S. election. And what did Libby Cantrell tell us? Enjoy your summer holiday. Start paying attention to the polls after Labor Day. Well, here we are.
Okay, not to go on a rant in the morning. It is Tuesday morning. But there is this feeling, are we really talking about policy here, or is this sort of messaging? Is this sort of a vibe kind of to give out there that I'm on the same vibe with Joe Biden? Joe Biden never said he was actually opposed to this deal in the way that he was going to undermine it or actually scrap it in itself. Same question with Harris, right? How much is this a viable company without some sort of infusion of cash? And oh, by the way, a competitor that tried to buy them was rejected for making an anti-competitive bid because essentially that would control all the steel assets in the United States. So when you take a step back, how much is this noise and how much is this actual policy?
You know, the last month is just about vibes. I hope the next week isn't just about vibes. We're a week away from an actual debate between Harris and Trump. Are we actually going to get that debate a week from today?
Yeah, we're supposed to have the debate. It better happen. And right now, I think both camps want to see it happen. If you look at the polls, we're pretty much frozen now until that debate to see who is going to take the edge. Yes, Harris has absolutely closed that gap with Biden lagging behind Trump. And in our Bloomberg Morning Consult poll, you do see her head in the swing states. But all of this is within the margin of error. And it's really important that that debate, I think, significantly is taking place in Pennsylvania. This is going to be the must-win for the Democrats, and this is something that was able to put Trump over the finish line in 2016.
2 months away from a general election. If you are just joining us this morning, good morning and welcome to the program. Here are your scores in the equity market on the S&P 500, 5%. In the yields just a little bit higher, back to 390.54. In foreign exchange, lots to talk about with dollar yen. Dollar yen down to 145. It's a break of 146. Some yen strength out there. Governor Ueda recommitting and reinforcing this idea that they're going to hike interest rates sometime soon. We can park the Japanese story just for a moment. At least the data this week, ISM, services and manufacturing, ADP, take your pick, payrolls Friday. I'm losing count.
Well, payrolls is really the main event. And pretty much every note over the weekend was talking about how this is going to make it or break it with respect to the tone in equity markets. Just to give you a flavor of what we heard over the weekend, payrolls are almost all that matters for equity markets. That's Citigroup's Stuart Kaiser. The true test will likely come with the August jobs report on September 6th. That is Mike Wilson. That is on Friday, but the drumbeat up to it. The JOLTS data on Wednesday, really key. Tomorrow is as durable goods. Today, we're going to get ISM manufacturing, but ISM services may be even more important on Thursday, along with jobless claims. Really, to me, ultimately, though, this is all leading up to whether or not we really see true weakness, because a lot of the data that we got over the past few weeks kind of rebutted the weakness that we saw briefly that caused the huge hiccup in equity markets. Can you see this rotation into small caps without that jobs report being good news, and good news is good news?
We mentioned this last week. Going into August 2nd, a couple of things happened. It wasn't just a bad payrolls report. It was the ISM manufacturing read and the employment subcomponent coming in really, really weak. So, Lisa, in many ways, that's something to watch a little bit later this morning.
Whether it was an anomaly and whether it matters, because pretty much as soon as we got that number, there was an entire peanut gallery of people coming out to tell us that it is inaccurate, and for anything to trade off the manufacturing ISM data is bonkers. And we heard that from one person after another. And then other people said, this is a reason why the sky is falling. So which is it? And that's the reason why, it'll be interesting to get confirmation of that and how much just sort of gets overshadowed by what happens on Friday.
A lot of data just around the corner. Coming up on this program through the next 60 minutes, we'll catch up with Marvin Lowe of State Street with stocks near all-time highs. Terry Haynes of Pangea Policy as Harris makes a big play for union workers, and Neil Dutta of Renmac ahead of a busy week for economic data. We begin with our top story. Stocks kicking off September near all-time highs as traders await key payrolls data this Friday. Marvin Lowe of State Street writing, the Fed put is alive and well, with Powell's desire to preserve the still strong jobs market becoming job number one for the Fed. Marvin joins us now for more. Marvin, welcome back to the program, sir. I want to start with Friday and payrolls and the question we teased at the top of this hour. How bad does that number need to be to open a door and leave it wide open for a 50 basis point cut?
Yeah, the Fed clearly got concerned with the last payroll report. It was down, closer to 100,000 for sure. I think that what we're looking for is a confirmation that that's the actual trend. Whether the number is 1 to 125, I think it's somewhere in there. But probably more important, it just shows how quickly the labor market could be decelerating, which is really what the Fed was guarding for at Jackson Hole.
Marvin, how different are things right now going into September 6th compared to how we were set up going into August 2nd? How much has changed?
Yeah, I mean, certainly, you know, the Somme rule and you know, the headlines that got really puts the spotlight on the jobs market. I think going into the July report in the beginning of August, there was still a view that we were moving towards a more balance of risk in terms of how the Fed was looking at the markets. I think what I heard from Jackson Hole is that we've moved away from really worrying about inflation. Certainly, the PCE print that we got last week showed that we didn't need to worry about it as much, and the balance of risk is certainly on the downside of the labor market. That's a pretty significant change. Just to put these two ideas together, when John asks how bad does this number have to be for the Federal Reserve to go 50 basis points, are we basically stripping out some of the scenarios where the Fed could cut 50 basis points, and that could be a good thing for risk assets? I was never in the camp that 50 in September was a good thing. You know, I really felt that if they really felt they needed to go that hard, there was something that they saw that they were really, really worried about. I think that they would rather go a very methodical 25 basis points. We could argue if November is part of that in the middle of the election, but really kind of that 25 basis points going into next year. I think that's soft landing in my mind. I think anything more aggressive than that really shows that the recession risk has gotten higher. If you put that together with what you write here, the Fed put is alive and well with Powell's desire to preserve the still strong jobs market becoming a job one for the Fed. It raises this question, is there a possibility that this Fed is too late? And is that kind of what 50 basis points says? Yeah, it certainly is a possibility. We're not seeing it in the data that we're focused on. You know, we do think that there is the potential that we get a revision or you know, we get some anomalies that kind of came out of that 114 number. The weekly claims numbers still seem to be fairly solid. And, you know, really the engagement of the consumer attitudes out there are one that are still somewhat supportive of a continued jobs market. So we don't necessarily see the need for the 50, but you know, certainly the market is going to be focused on the recessionary risk that comes out of that number.
Marvin, would 50 look political?
It would. It would. Unless we get a number that we can't argue, you know, a 20 basis point increase in the unemployment rate, something like that. It's always going to be political. There's always going to be one party that's going to be happier and one party that's not. So I don't think you can avoid it, but 50 certainly puts a spotlight on it even more.
Given we are 9 weeks to the U.S. election, how focused do you think the Fed is? Obviously, they're on the data, but at that conversation they may have about not wanting to look political in nature.
Yeah, I mean, you know, certainly it's something they're probably talking about in the corridors. You know, I don't think we're going to see that in the minutes ultimately. Remember that they did move the November FOMC meeting to a Thursday rather than a Wednesday because they were worried about potential market fallout, in my view, in terms of making that movement. So they're certainly cognizant of what's going on in the political landscape. And given how energized this election process is, you know, they need to be guarding against it. Kind of having said that, the data is really job one for them in terms of what they're looking at. You know, I think that's really the only thing that's dictating it. But, you know, for sure they would rather avoid any signs of being political in this process.
Marvin, let's finish on dollar yen. It's a break of 146, 145.88. We're negative about 0.7% on the session at the moment. So that's some yen strength for you. There was a document submitted to the government by the Bank of Japan Governor Kazuo Ueda, who basically reiterated that the BOJ is intending to lift interest rates once again. That's fueled a little bit of a further leg, a move lower in dollar yen. And Marvin, when I asked you how much has changed in the last month or so, I think that's a question we're thinking about in regard to the FX market as well. Have we released enough tension from foreign exchange? Do you think we've cut the link between what is developing with dollar yen and what is happening in equities?
I mean, I think that some of that carry trade that you're inferring did start to go back on maybe over the last couple of weeks, but the amount of froth that we had kind of going into that last rate hike from the BOJ has certainly been released. And now we're going to be able to trade a bit more on the fundamentals of what's going on in Japan rather than just really those interest rate differentials.
Marvin, thank you, sir. Marvin Lowe there.
Thank you.
Of State Street. Lisa, 145.89 on dollar yen.
You asked this question, and I think it's the right one. Is this releasing enough pressure on an overweight of the dollar that we have seen pretty consistently over the past almost 2 years now? And this is Kit Jukes' response from Societe Generale. The best the dollar can do as this long position unwinds is to fall slightly and slowly rather than faster and further. And he talks about how net foreign buying of U.S. bonds and equities was a record high in 2023 and has continued this year. So it is not just about sort of positioning on some sort of long-short carry trade basis. The carry trade is what everyone has been doing by piling into U.S. assets, as the U.S. exceptional story has really been the dominant theme over the past 2 years.
We've accumulated a big dollar position over the last couple of years, and we'll see how much of that we can unwind in the next few weeks. The next big stop is Friday. For payrolls Friday, the estimate is something in and around 160, which is up from the 114 we printed just about a month ago. Equities right now on the S&P 500 negative by 0.5% on the S&P. With an update on stories elsewhere, with your Bloomberg brief, here's Danny Berger. Morning, Danny.
Good morning, John. Hewlett-Packard says that it intends to pursue a $4 billion damages claim in London against the estate of the late British tycoon Mike Lynch. HPE won a British civil case over the collapse of Lynch's company, Autonomy. It's now waiting for a ruling on just how much is owed. Lynch and his daughter were among those killed when his luxury yacht sank in Italy last month in a severe storm. Cathay Pacific has canceled almost all of its scheduled flights from Hong Kong to Singapore. It's inspecting the engines on its Airbus A350 planes. Sources told Bloomberg that engineers are checking for deformed or degraded fuel lines on the Rolls-Royce-made engines. A component failure had forced the return of a flight from Hong Kong to Zurich on Monday night. The airline says it's already found the same component failure across a number of engines. Elon Musk's Starlink has reportedly informed Brazil's telecom regulator that it will not comply with a court order to block X until its local accounts are unfrozen. Brazil's Supreme Court ordered the blocking of X based on the platform's allowance of hate messages and false information about the country's electronic voting system. Musk had then threatened to seize Brazilian government assets unless property belonging to X and SpaceX is returned. And that's your brief, John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, courting the union vote.
When unions are strong, America is strong.
We will continue to strengthen America's manufacturing sector.
A busy 24 hours of campaigning for the Democrats. That conversation up next, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's
focus in on European politics.
Makes you wonder how politics might play out.
It's Jobs Day, and Bloomberg has the report under surveillance.
It's from super hot to solid.
This is normal.
I think people underestimate the behavioral aspects when it comes to the labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
So what is bad on September 6th?
Nobody really has a full answer on it.
I don't know what counts as good news these days.
It's a big debate.
The August Jobs Report, Friday on Bloomberg.
Summer's over. Summer's over. Summer's not over.
Really?
Decent weather this week in New York City. Get out there, enjoy the weather.
Okay.
We're blessed to have great weather in New York this week.
Is this your crusade? This is your popular cause?
Just, you know.
You want summer to be longer. You think that Americans end their summer too quickly. Is that basically the shtick?
We're not children anymore. You know, summer might be over if you've got to go back to school.
How can you say this? In Europe, they have a 2-week vacation. They have actually a month vacation. August is basically a vacation in Europe, right? So what happens
in which
after
case,
that?
for the Europeans, you can make the case the summer might be over.
So essentially,
you know, they've had their 1 month off.
Rachel?
How many Americans took a month off?
Also, now's the time for actually really good deals because people think summer is over. In September, you can get amazing resort deals.
Summer's over for the kids. Yeah. I get that. For the adults,
I'm going to
not
be
on board.
I'm going to be off for the rest of the week. I'm going to continue my summer.
Do what you've got to do.
No, you can't this week. Big
Take
data.
your time.
That's true. It's going to be it's big
Come back on Friday for payrolls. Equity futures right now on the S&P negative by 0.5% in the bond market, just about unchanged. 390.34. Under surveillance this morning, courting the union vote.
We know the simple truth. Wall Street did not build America. The middle class built America, and unions built the middle class. When unions are strong, America is strong.
We will continue to defend Social Security and Medicare and pensions. We will continue to strengthen America's manufacturing sector.
So here's the latest. The Harris campaign dining in on the union vote over Labor Day with events in Pittsburgh and Milwaukee. Attention now turning to the first and only scheduled debate between Harris and Donald Trump just a week away. Terry Haynes of Pangea Policy writing the debate is now the next known unknown and likely is the fulcrum upon which the election turns. That growing perception of a neck-and-neck race makes the stakes even larger. Terry's with us for more. Terry, wonderful to catch up with you, sir, once again this morning. Let's just start with that Labor Day campaigning blitz. Where are we in terms of the union vote and the union worker vote, and who are they lining up behind?
Happy summer or fall, John, depending. You know, I think there's a big difference between union leadership and union rank and file, and you didn't have to go very far outside of Pittsburgh to figure that out. I mean, the line that the Biden-Harris people are purporting or to portray essentially is that the union leadership will help keep the rank and file in line and voting for, but that makes the mistake of looking at the union movement monolithically, when in fact there's a very big difference between, let's say, the teachers unions and the electrical workers and the steel workers and the Teamsters. So you know, I think you have restive union membership who are really concerned about economic issues fundamentally, and that cuts into a union majority for the Democrats.
We've seen that in the rank and file when it comes to our own polling, Terry. What does Harris need to do to meet the rank and file voters, not just the union bosses?
Well, she needs to talk a lot more about economic consequences and what she proposes to do about them. You know, feeling the pain on economic consequences is a good and essential part. It's also the easy part when, in fact, monetary policy seems to have the whip hand on solutions in a world where no politician will do anything about fiscal. But she's got to get in there and talk about it, because that lack of appeal, that restiveness, that concern about the lack of what the existing administration has done is at the core of Trump's appeal everywhere in Pennsylvania outside the Philadelphia suburbs.
Terry, when it comes to Pennsylvania, how are you reading the polls? Our poll has her ahead, but all of this is within the margin of error.
Oh, very much so, and I agreed with what you said at the top of the show. I think she's righted the ship in terms of where Biden was, but Biden wasn't really that far down. This is it is the usual sophistry in one sense to say it's a turnout race and it's an enthusiasm race, but it is, and. The entire game in Pennsylvania is going to be essentially two things. One is maximizing the vote in the Philadelphia and the Philadelphia suburbs, and the other thing is to cut into Trump enthusiasm in the rest of the state. And she's got her work cut out for her in the second part. At best right now, she's tied in Pennsylvania, I think.
Just as a reality check, Terry, you put out the idea of some of the quiet voters who really don't register in the polls. This idea that there are Trump supporters that give Democrats less of an advantage in certain swing states. Can you sort of explain your idea there?
The essence of the idea is that, and I think Trump works in this way too, is essentially that. There are core Trump supporters and there's the Republican Party, and they're not at all the same thing. But what you need to do is get to a point where Trump's view is he needs to maximize the people that are already for him. The Harris idea essentially is, I've maximized the number of people in the party that are already for me. I need to kind of move to the center and pick off the undecideds. Trump's bet essentially is that the enthusiasm from his core supporters washes out the broader Harris appeal. But given the enthusiasm gap that exists today, which clearly is more in Harris's direction, I'm not sure that's a winning bet on Trump's part.
At this point, Terry, I just want to finish with this question around U.S. Steel, because we were talking about this earlier and whether this is just a vibe in terms of Harris talking the same kind of talk that Joe Biden did, or is this actually going to be a policy where this deal is not going to go through with Nippon taking over U.S. Steel, even though there isn't necessarily a viable takeover candidate that can infuse this company with that kind of cash? What do you make? Is this basically just vibes?
Yeah, it's more vibes than anything else. There's a lot of, particularly in Western Pennsylvania, there's a lot of visceral pushback on the idea that United States Steel, essentially the original steel conglomerate, is going to be taken over by a foreign company, even one as forward thinking as Nippon Steel. But there's a situation where people understand in those areas in Pennsylvania, essentially that promises towards Americanizing industry have been made for a couple of generations now, and they haven't stuck and they haven't been followed through upon. So what Harris risks, frankly, in Pennsylvania is deepening the cynicism that already exists there.
Terry, appreciate your input as always. Terry Haynes there of Pangea Policy, much more on industrial policy and manufacturing, not just in the United States, but around the world in just a moment. Coming up on this program, VW considering factory closures in Germany for the first time in its 87-year history. Shocking news over the last couple of days.
And how much is this the beginning of something more? There was one analyst who put this out there from Citigroup. VW is recognizing just how serious the situation is. We're living in a difficult geopolitical world, and Europe has not won that battle.
Shocking, but not surprising.
Exactly.
The direction of travel over the last couple of years for that industry and for that country as well. More on that story in just a moment. From New York City, welcome back from the summer. Welcome to fall, apparently.
Good for you.
From New York City. Good morning.
many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Putting together a three-week winning streak on the S&P 500, kicking things off this morning. Good morning. Negative by about 0.5%. On the NASDAQ, negative by 0.7. On the Russell, we pulled back by almost 1 full percentage point. On the month last month, on the S&P 500, a fourth consecutive monthly gain for stocks and bonds alike. For the front end of the yield curve, the two-year yield declining for a fourth straight month. Switch on the board and turn the page. The two-year right now, 392.70, up a single basis point on the session. Lisa, going into payrolls on Friday.
Yeah, to a time when there's really a question about how far the Federal Reserve can cut rates without serious pain. To me, this is the ultimate question of this week, which is essentially, can you keep seeing this wonderful sort of nirvana rally and everything with bonds going down, but that actually being positive for risk assets, or do you get a reality check with there actually being the weakness the Fed would ultimately be responding to?
The two-year on the month down by more than 30 basis points, unlocking some real dollar weakness, the worst month for DXY, going all the way back to November last year, I believe. The dollar index on the month down by a little more than 2 percentage points. But last week going against the grain, because last month we had the worst month of the year, but last week we had the best week going back to April.
Yeah, well, okay, so this is the issue. And frankly, for the dollar, what you're dealing with is the rest of the world. The rest of the world was looking a little bit better, and the Federal Reserve was going to cut rates, and that was going to add to this weakness. But now the question is, how far can some of these other countries go in terms of growth and in terms of rates that really could let the dollar weaken that much more? The ECB is a perfect example, and we asked this last week. How much can they really afford not cutting more than the Federal Reserve, given the weakness that they see everywhere else? I think the Bank of Japan is fascinating, its own story in and of itself, but there's a larger story of how big the overweight in the sort of long dollar position is and how that could potentially unwind over time as people realize that it's not just the U.S. exceptionalism story alone.
So let's turn to the BOJ. Dollar yen, a break of 146, just south of that right now at 145.98. A much stronger Japanese yen off the back of some comments from the Bank of Japan Governor Kazuo Ueda reiterating today that he's willing to raise interest rates once again. Not news, just reiterating something he's already said, this time in a document given to the government. How close are we to another rate hike at the Bank of Japan?
He seems to be hinting that it's fairly soon, especially because the data has been fairly good. This comes at the same time that it hinges on the U.S. and how close are we to real declines in benchmark rates. It's kind of tenuous right now. I'm curious to see how people are positioning and where the balance of risks is. Right now, is the balance of risks really to the upside in terms of yen strength or to the downside in terms of dollar strength? And ultimately, it feels like yen strength is kind of taking the front end right now.
This is your yen strength. Dollar yen, 145.98. Under surveillance this morning, some top stories. We'll start with this one. Israeli Prime Minister Benjamin Netanyahu facing growing pressure to accept a ceasefire deal. Hundreds of thousands of Israelis taking part in labor strikes and protests across the country after the bodies of 6 hostages taken by Hamas were found dead in a tunnel in Gaza. Deeply depressing news, AMH, over the weekend, and the pressure really ramping up on the Israeli leader.
Absolutely horrific news over the weekend. But now you did have Biden meeting with his national security team and those negotiators that are working with Qatar and Egypt to try to get this deal done. Biden confirmed it's very close. The Washington Post over the weekend talked about this idea that the U.S. is going to present this take-it-or-leave-it approach. And one U.S. official speaking to the Post said, you can't keep negotiating this process to be called at some point. My question is, given what happened with these hostages murdered in that tunnel, does it make a ceasefire negotiation easier to access now or not? I will note, reading some of the tea leaves, you do have the head of Mossad yesterday in Doha for talks. Potentially that's going to open up a pathway.
There's no good answer here. I mean, that's basically what you're seeing from everybody, that there's no neat or good answer, especially because it looks like the message to the people who are guarding hostages is to shoot them or to kill them if the Israeli soldiers are coming after to rescue them in a military way. So you have a nation in mourning. You have a population that's suffering with the polio vaccinations, trying to stave off mass disease that we thought we had eradicated. And you have a situation where we don't have a sense of who's negotiating with who has supported this point, and what's going to be behind it, because some of the big players, Iran, have been quiet, as well as some of the others.
How close are we to a deal here? We were given the impression over the last couple of weeks that we are a lot closer than maybe we had been, say, a month ago. How close are we to a deal?
Well, remember Amos Hochstein was here just a few weeks ago saying it's now or never, it has to be done. They were talking about this bridging agreement, which really goes back to what Biden proposed at the end of May. Remember when Biden came out and proposed that ceasefire agreement, he said that had Israel's backing. It clearly didn't have all of Israel's backing at the moment, because we probably would have already been there by now. They have been discussing this agreement, this idea of take it or leave it. This has been going on for weeks. We have seen countless trips by Bill Burns, by Secretary of State Antony Blinken, by Brett McGurk from the NSC. It's hard to say where we are now, especially given the horrific events over the weekend.
A story that is firmly on our radar throughout this morning. Any more headlines, we'll bring them to you. Stateside, first world problems. Picture this. Sunday, you've got ABC on. You're waiting for the USC-LSU game. You've got ESPN on. You're in the middle of watching the USP Open. Then just like that, DirecTV customers find out they don't have access. Programming going dark at the start of the college football season and ahead of the final week of the US Open tennis tournament after the pay TV service and Disney failed to come to terms, Lisa, on a new contract.
This is the second year in a row, I believe, that it cut off during the US Open. Did you experience this yesterday?
No, I don't have DirecTV.
Okay, well, this is the issue. Basically, people are saying DirecTV is really annoyed at Disney because they're saying that essentially you can't sort of give people the sense that they're getting these channels and then snap off the best parts of the channels at the key times and say you can't have access to those unless you also pay for this. It's a switch and bait, a bait and switch, whatever. The point being, they're pushing back against this, and Disney's saying we can do what we want, we need money, get over it, and this is what's happening. And so you just wonder how much this is going to keep going on, and at what point are some of these Disney networks, et cetera, going to just bypass some of the cable and just entirely.
So who's got the leverage? Do they need Disney more than Disney needs more than?
I don't know the answer to that. I mean, I think that that's sort of the key question.
I think it depends about your viewers, your subscribers. More than 11 million DirecTV subscribers. What are they asking for? Are they tennis fans? Are they college basketball fans? Or are they political junkies? Because this is also happening ahead of the ABC debate next week.
You'll find that anywhere. You'll find that anywhere. Yeah. Can we say the P word on TV? I would be absolutely.
Yeah.
If I was at the end of that. Yeah.
You'd be what? Go ahead.
Can we say that? I'm not even sure.
Yeah, you can say that. Go ahead.
I'm not going to bother.
Okay.
Everyone knows what I mean.
You're miffed.
Yeah.
Yes, that.
Honestly, I could just say this. It ultimately comes down to how big of a sports fan are you? And aren't you willing to pay for that sports fandom? And that's essentially what Disney's willing to wager.
You'd go somewhere else, won't you? Ultimately. And quickly. I would have done it immediately.
Okay.
I was waiting for a sporting event. I'd sign up for something else straight away.
Really?
Yeah,
just out of rebellion?
I'd love to know what the numbers look like. We'll catch up with an analyst later and we'll see what that churn will actually look like the longer this goes on. Let's turn to this story. We talked about it. Shocking news out of Germany. Bloomberg reporting that Volkswagen is considering closing factories in Germany for the first time in its 87-year history. The decision coming as the automaker is losing ground in the race to produce electric vehicles. The move would set up a showdown with unions across the country. Bloomberg's Christoph Rohwald joins us now for more. Christoph, welcome to the program, sir. We'd love your thoughts and sort of big picture if we can take a step back. And unfortunately, we only have a few minutes. I know this could take hours. How did we get here?
Yeah, I think this is basically like a situation that unfortunately has been in the making for several years. I mean, the sort of structural issues that have beleaguered Volkswagen for many, many years have been like well documented, and one of the core points was really the competitiveness of their domestic German operations, and that was like probably not addressed in a sufficiently sort of aggressive and efficient way with the Chinese market growing and with the company doing pretty well elsewhere. But all this has changed in a pretty dramatic fashion, really. The Chinese market really struggling. Volkswagen is losing market share there for several quarters already, and that really sort of like puts the spotlight on their domestic German operations, which have been struggling from like high costs and poor efficiency for many, many years, really.
Christoph, the scary thing for the Europeans is this is not just VW. We had a similar conversation with Stellantis. Their factories are operating well below capacity. The conversation we had with Stellantis, though, regarding Italy, with the Chinese manufacturers looking for a manufacturing base in Europe. Is this going to be a pure shutdown potentially, or would they be open? Would the Germans actually be open to selling some of those factories to a Chinese automaker?
Yeah, I'm not seeing that like they will probably sell like any specific assets or like whole factories to like a foreign manufacturer. What they will probably be trying to do is to sort of like restructure the operations to some degree, that they might be able to like sort of specialize on like different components, different technology, move more into like the software side of things. But nevertheless, the point you make is absolutely right. I mean, the competition in Europe for domestic manufacturers by Chinese rivals, by Tesla first and foremost, that is not something that's going to go away. So they will really need to review pretty dramatic and strategically like really critical decisions in order to be able to regain competitiveness on their home market, really.
I was looking at this data from Just Auto yesterday, and it was talking about how auto sales in Europe are still nearly a fifth lower than pre-pandemic levels. And this really has to do with VW, Stellantis, and Renault all operating still factories at suboptimal levels. What kind of shutdowns could we see, and why is there such, I don't know, laggard demand for cars in Europe?
Yeah, I think that is one point, is the sort of like slow recovering car demand since the pandemic. On the other hand, what you mentioned, that's a super important point, and that's the big issue of overcapacity in the European automotive industry. And that was something that many manufacturers, not just Volkswagen, but you just mentioned Stellantis, the same goes for pretty much all legacy manufacturers, goes that they've been struggling really big time to reduce this overcapacity, partly because of political pressure as well. It's, of course, deeply unpopular when you try to cut jobs and close down factories in your market. That's specifically an issue for Volkswagen, where the German state of Lower Saxony is the second biggest shareholder with a 20% stake. So any sort of move to cut down capacity by Volkswagen will definitely face some fierce resistance. And that's a quite similar situation with other manufacturers in Europe as well, given the French ones, Renault, PSA, or Fiat that you just mentioned in Italy. Like the political resistance, that's quite pronounced in each and every like European country.
Christoph, that's where I wanted to ask you, the fact that workers occupy half the seats on the supervisory board. So anything Volkswagen wants to do, potentially following in the footsteps of Stellantis and cutting costs, how can they actually go about that?
They will, in some way, shape, or form, need to find a consensus with the worker representatives, with the labor unions, and that's going to be really, really difficult because, as Jonathan mentioned already, I mean, the measures that they mapped out yesterday include some pretty painful cutbacks, but they will have to come to a compromise. And having said that, with all the negative headlines out there, this is not the first time that the company has like faced a pretty substantial crisis. They have been there in the mid of the 90s. They have been there in 2005, 2006, and that was something where, under like this really fierce competitive pressure, at the end of the day, the unions, the key stakeholders, and management were able to come to an agreement and to like form like a joint plan forward to really move in this case the company out of this pretty dramatic crisis situation.
Christoph, I wanted to share the words of the VW CEO with our audience. I know you're familiar with them. The economic environment has become even tougher and new players are pushing into Europe. It's this line that stood out for me. Germany as a business location is falling further behind in terms of competitiveness. For such a long time now, Christoph, particularly in the Eurozone debt crisis, Germany was seen as the bastion of economic stability. It was meant to be the thing that Southern Europe was trying to replicate, wanted to become as it grew older. And Christoph, where are we with the German economic model? How did we come to this place? I guess we're going to finish where we started. To hear these words from the VW CEO, Germany as a business location is falling further behind in terms of competitiveness. What is the government actually doing to tackle this?
Yeah, I think what we've seen regarding the German economy is a bit of a perfect storm. There are multiple factors there, and all like coinciding. Basically, after the energy crunch that was triggered by Russia's invasion of Ukraine, energy crisis shot up big time. There have been like a big issue in Germany before, a pretty significant cost factor, and that was something where like the energy supply of German industry has really become a lot more expensive. That's something where regulators, where the government really struggled to react, and that's still having a pretty pronounced impact. At the same time, Germany in particular has also really struggled to reduce bureaucracy and red tape. It's incredibly difficult to found a company, to establish a company, and to operate a company. There are lots of different rules, lots of different regulations, and that is something that has been criticized for a very, very long time, but very few people really took action to change that. And all that contributes to like a really difficult market situation that now, as you mentioned, the Volkswagen CEO has pointed out is a pretty severe lack of competitiveness on an international stage when you compare it to other regions in the world, be it in Asia or the US.
We could talk all morning about this, Christoph. Appreciate your time this morning. Thank you very much, sir. Outlining two things. One, the mess we're in, and two, how difficult it will be to actually clean up.
Especially given the fact that this is overcapacity, it's a lack of demand, and it's something structural that's happening. And Artie, I mean, as you were talking, I'm wondering how much does this dynamic of Germany's lackluster growth and its competitive disadvantage have to do with the elections we saw over the weekend, with the first far-right candidate elected going back to World War II? People are looking for change, and that is sort of the struggle that the existing government, Olaf Scholz, has to deal with.
It's certainly going to play a bigger part, a much bigger part in the politics if they have to shut down factories in that country. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. The U.S. is laying the groundwork for new sanctions on Venezuelan officials. It's a response to Nicolas Maduro's disputed re-election. Bloomberg has seen documents showing that the Treasury Department is close to announcing 15 individual sanctions on officials accused of undermining the July vote. Venezuela, meanwhile, has ordered the arrest of rival presidential candidate Edmundo Gonzalez for alleged crimes, including forging a public document. Bank of Japan Governor Ueda doubled down that the BOJ will continue to hike rates if the economy and prices perform as expected. Ueda submitted the remarks to a government panel chaired by outgoing Prime Minister Kishida. Around two-thirds of economists surveyed after last month's volatility still see the BOJ moving again by the end of the year. Huawei is preparing to launch new products at an event that takes place just hours after Apple's debut of the iPhone 16. Huawei plans to unveil the world's first commercially ready smartphone that folds twice. That's according to people familiar with its plans. Apple is launching its new family of iPhone handsets and accessories on September 9th. In China, Huawei pushed Apple out of the top 5 device makers in the June quarter. And that's your Bloomberg Brief. John.
Danny, thank you. Appreciate it. More from Danny again in 30 minutes. Up next on the program, pushing ahead to payrolls.
The labor market report is going to be the big one. If we do see signs that things are slowing down too much, slowing down to the point where we might have a slump, I think they are going to be ready to take action.
That conversation up next. The payrolls report just a few days away from New York. Good morning.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Our first job is to intimately understand and anticipate the consumer's needs.
It's an incredibly fun job, for sure.
To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
Competition's moving faster. The world is moving faster.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. New episode September 11th, only on Bloomberg. Brought to you by Workday. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Live from New York City, welcome to the program. Stocks just a little bit softer. We're negative 0.5% on the S&P, no drama. Yields just about unchanged, 390.73 on a 10-year. And in foreign exchange, the euro weaker, 110.37. Against the dollar, we're negative by a third of 1%. Under surveillance this morning, we're pushing ahead to payrolls.
The labor market report is going to be the big one. If you factor in some sort of bounce back and you get a labor market report that's in the 100,000 range, that's going to sort of say, I think pretty clearly, a bit more of a slowdown than we wanted. If we do see signs that things are slowing down too much, slowing down to the point where we might have a slump, I think they are going to be ready to take action.
So here's the latest. Investors are waiting a slew of jobs data this week that could determine the Fed's path forward. Neil Dutter of Renmag has been saying the Fed is late on cutting rates and he's worried about the labor market. He joins us now. Neil, welcome back to the program, buddy. I want to start with Friday and ask a question I've already asked this morning, so I'll ask it twice. How bad does that number need to be on Friday to open a door for you to make it your base case? They're going 50.
Well, the way the rest of the street is talking, it sounds like it needs to be pretty weak. But, you know, I think that that's part of the problem, right? Because you're almost talking yourself out of going 50 when the data up to this point are already consistent with 50. So I think, you know, I thought the Fed didn't want to be data point dependent. And that seems like what they're doing right here. So, you know, I don't have a good sense. I mean, I think if you get another uptick in the unemployment rate, it's probably a lock. But, you know, at the same time, you know, we tend to overweight the establishment survey to begin with anyway. So it's hard to know. You know, we'll see how it comes out. But I think even if the number does come in better because, you know, let's say there were some one-off factors in the last month that kind of unwind, what's the overall slope of the data? We already know what that is. It's weaker, right? I mean, if you look at the Conference Board labor differential, which was released last week, consumer attitudes about the labor market are deteriorating, full stop. And consumers tend to spot changes in their local economies before the data. They know when the pink slips are going out. They know when factories are hiring people. They know when there are help wanted signs in their neighborhoods. But the fact that consumers are telling you that the labor market situation is getting worse suggests that there's still probably a pipeline of weakness that's still in front of us with respect to the labor market.
Neil, you mentioned the establishment survey. I just wonder this Friday for you and from the clients you speak to, are you more likely to put more weight on the household survey given the difficulties that we've been having?
Well, I think one of the benefits right now of the household survey relative to the establishment survey is that, you know, it's about revisions. I mean, we just got a fairly significant downward revision to the establishment survey up to March 2024. We sort of knew that was coming, but what does that tell you about whatever the payroll number prints in the coming week? Whatever the number is, it's probably going to be weaker in reality, even irrespective of whatever is published. The good thing about the household survey is that the ratios in the job survey aren't really revised, right? I mean, maybe there are changes to population estimates, but ultimately it's those ratios, the unemployment rate, prime age employment. Those ratios don't really change. So I think there's a signal in the fact that the unemployment rate has been going up for 5 of the last 6 months. It tells you that there's a slackening in the labor market.
Neil, I gotta say, there's this question about whether we've overly gotten confident about the soft landing. And I look back at history, and there are only 3 soft landings where the Fed has orchestrated a rate cut coming down from high rates where you haven't seen a recession. That was not the case in 2008, 2001, 1989, 1981, 1980, 1970, 1960, and 1957, even though it looked like it was going to be a soft landing. How confident are you that this time the soft landing thing isn't a head fake?
Well, I still think, I think part of what's happened in markets is that we went from pricing in no risk of recession to some risk of recession, and it happened very quickly, which is why we got that sort of hiccup in markets, maybe a month or so ago. I still think soft landing is the overall sort of base case. But I do think that the Fed has a role to play. I mean, when I hear people saying that, well, maybe they should string out a bunch of 25 basis point moves between now and the summer, I think that's kind of ridiculous. I mean, the fact that core inflation is running below 2%, frankly, if you look at it since last summer, we've been below 2% annualized on a monthly basis most of the time, believe it or not. To me, that suggests that they're already too tight. So going 50 on the first go is not a particularly big risk because we know that they're way above neutral. And if you string out a bunch of 25s, getting back to neutral will take a long time.
Okay.
And that puts the economy at risk in the process because it would mean that you'd be running a restrictive policy stance in the interim period.
Just quickly here, Neil, does this mean that if the Fed were to cut for 50 basis points, and every analyst that I've read says that probably risk assets would sell off immediately on the knee-jerk reaction of a 50 basis point rate cut, you'd be saying this is the time to go buy?
Absolutely, because it tells you the Fed's trying to get in front of the 8 ball. I mean, there's nothing about the economy that the Fed knows that the rest of us don't. They don't have an edge like that significantly. This is more about them coming to recognize that's something the rest of us already do, namely that the unemployment rate's gone up and that inflation's slowing.
Neil Dutta making it easy. Neil Dutta of Renmac. Neil, it's never that easy, but we appreciate your take, sir. Thank you very much. This is complex stuff. It's difficult. Fed's been caught offside a couple of times. I think Neil's argument that he's been making over the last several months, if the 5.5% interest rate was the right policy for last July, what's the right policy for this July, this August, this September? And the argument Neil and others have made, to make it very simple, it's not 5.5%.
And it's substantially lower. It's not just 25 basis points lower. So if you're going to do it, why not just do it? Why sort of dribble it out over time to sort of suggest certain things? If you actually believe it should be substantially lower it. I guess on the flip side, you have to wonder why there still is inflationary pressure in areas like rent and housing, et cetera. And I would love to have Neil back on to talk specifically about housing, which he says is a red flag. At the same time that people are saying if you lower rates, you're only going to get increasing costs and not necessarily that much more volume. So real question here.
We can do that next week, September 11th, CPI in America. We've got to deal with the payrolls report first on Friday. The estimate in our survey, 165. Coming up next, Matt Orton of Raymond James, Henrietta Trays of Vader Partners, Sucharita Kodali of Forrester, and James Camp of Eagle Asset Management. From New York, the second hour of Bloomberg Surveillance. Up next, you're watching Bloomberg TV.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
I think we got a lot better at how we allocate among these geeky equity factors. We've gotten a lot more systematic. For our first 20 or so years, it was probably me and a handful of people saying, what's a reasonable long-term allocation? And we stuck to it. Not to get into an AI kind of theme, but we let the machine decide more. And it took me a while. I probably slowed us down 2 years on this, because I think it's my job as an old man at the firm to kind of say, you're going to change to what? But I'm reasonably convinced it's just at least a little bit better than us. We did price trends since I wrote my dissertation in the late 80s and early 90s. But in the last 5 years, tremendous weight, not just to price, which it was historically, but to fundamental trends. Tremendous exposure to more esoteric trends than just your famous stocks, bonds, currencies, and commodities.
What?
Suddenly, I'm walking around and somebody is talking about trading milk, and somebody's talking about trading sugar, and somebody's talking about trading my favorite, Malaysian palm oil. We found the sweat equity of pushing into newer markets. They're smaller capacity, you know, in basic value investing around the world, and value in a broader sense than just quant multiples, considering quality, more of a Graham and Dodd sense. You can run a Lonnie.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest, weekdays at 9 a.m. Eastern, only on Bloomberg Television.
Earnings season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs.
Taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
We don't think this is the point to sort of chase risk, broadening out, more balance, more protection at this point in time.
You're in an environment where the carrying cost of being wrong is extremely high.
It's the perfect time from an active manager perspective to monetize that volatility.
If you get rates down, and that is going to accelerate economic activity, you can buy ahead of that.
That's where investors are really focusing on right now, is how do they position for the thing that we know is coming, which is the Fed delivering its first rate cut.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance begins right now on a 3-week winning streak on the S&P 500, on a 4-month winning streak. Your scores look like this, pulling back by 0.5% on the S&P 500, on the NASDAQ down by 0.6, on the Russell, on the small caps we're down by 0.9, going into a week that looks like this. It ends with payrolls on Friday. It begins with an important data point this morning, ISM manufacturing. And Lisa, this was the beginning of a really big move through early August. ISM manufacturing and the subcomponent employment spooking a lot of people.
Giving a sense that maybe employment was weakening and the labor market was weakening more than people previously expected. This is the concern. How much is the weakness that we're seeing in some peripheral data going to become the dominant force in an otherwise Goldilocks type of scenario? It's a reason why I read note after note over the weekend with a lot of negativity. First of all, September tends to be a crappy month for performance of assets. It has been for the past 4 Septembers for stocks, 7 Septembers for bonds. But there's a larger question of how leveraged is this market to a soft landing that has been elusive in most times last couple of years.
That weakness in early August, I think, prompted this line in Jackson Hole, Wyoming, from Chairman Powell. We do not seek or welcome further cooling in labor market conditions. A question this week, will we get some?
And the Consumer Conference Board, which Neil Dutta was just talking about, the fact that when you look at some of the responses, people are concerned now a little bit more about the labor market. When it comes to the whole Fed debate, Marvin Lowe said, we asked him about this, and he talked about the fact that 50, he's one of those 25 until December, string them out, which Neil Dutta calls ridiculous. But how much does a 50 basis point cut before an election that is on a knife's edge look political? That's my big question.
Let's deal with Neil Dutta's line first of all. We're told they're not data point dependent, but there is one data point on Friday that we think the size of the move on September 18th is dependent on. Seth Carpenter, Morgan Stanley, around or below 100K, 50's on the table. Andrew Honhorst of Citi, he thinks 125 and unemployment staying at 4.3%. 50 is very much a go.
So zooming out, is the Fed actually trying to effectuate certain policy, or is it trying to send a message to markets about the weakness or strength of the U.S. economy? Those are two different things. If they want to effectuate a policy, to Neil Dutta's point, and many of these economists as well, the benchmark rate should be substantially lower than where it is now. That's even according to the Fed's view. So why string it out over time? That's basically Neil Dutta's point. That's ridiculous, because essentially, if you think it should be lower, lower it. At a certain point, if they do lower it, that would send a message to markets that maybe things are worse than they had previously expected. And that's the reason why analyst after analyst expects this to be a negative event for risk assets. That's sort of the balance of risks that the Fed is dealing with, the messaging component of their mandate, along with the actual rate and what is actually appropriate for this economy.
Which is why if you want to get really drunk playing a game, a drinking game, which you probably shouldn't play, but if you wanted to play that, this is the game you would play. Gradual, methodical. Every time you hear those two words from Fed officials, drink. And you'll be drinking a lot based on the speeches we've had over the last month.
Yeah, although interestingly, you would not be drinking if you were listening to Fed Chair Jay Powell. And that is interesting. And people have noticed that. Is the Fed Chair Powell maybe not playing the same drinking game because he would like to go all at once? Interesting that we're going to get some speech, some words from the Fed's Williams on Friday after we get the payrolls report. That I think will be really fascinating because maybe they can really message how they plan to interpret that data into the size of the rate cut this month.
Maybe you would be drinking. It turns up, spikes the punch bowl, Chairman Powell and Jackson Hole. That's what he did, right?
Party time.
It's party time. That's what it felt
it's the
like.
Fed put. Basically, Emily Rowland will come on.
The Fed put is back, according to Emily Rowland and so many others. Equity futures right now on the S&P 500 negative by 0.5% in the bond market. As Lisa mentioned, quite a run for both stocks and bonds. Going into what is traditionally a weak month of September. 4 consecutive months of gains for equities. 4 consecutive months of gains for bonds. Yields lower for the last 4 months on a 10-year, 390.54. Yields just about unchanged on the session. Coming up on this program, we'll catch up with Matt Auden of Raymond James as traders prepare for a massive September. Henrietta Trey's of Vader Partners with Kamala Harris calling the union vote, and Sucharita Kodali of Forrester as retailers look to boost consumer spending. We begin with our top story. Stocks nearing record highs ahead of a crucial September for the Federal Reserve. Matt Auden of Raymond James writing, "We cannot rule out some downside as investors digest the aggressive rate-cutting cycle currently priced into the market. But as long as the pattern of higher highs and lower lows remains in place, I would continue to use downside opportunistically." Matt joins us now for more. Matt, last time we spoke, you said we're slowing, we're not breaking. Is there something about Friday that could change your view?
Good morning, John. Great to see you again. And I think Friday is going to be very informative because it'll give us another glimpse into what's happening with the labor market, which I've long maintained is the key to holding the consumer in place and this economy together. So a weak print following the weaker print from July would certainly be more concerning. I don't think it's an all-out cataclysm for the rest of the market because there's still a lot of other pieces that fall into place. But I certainly think if you do get a very weak print, say 125 or less, the Fed will likely cut by 50 basis points. And I think that effect can also help provide some positive signaling. But when I look at the balance of risks, when I look at just how earnings season has come in, I really think the strength of the underlying economy has been largely underappreciated by a lot of market participants. I just spent the past week traveling to meet with clients, and a big portion of their portfolios really hasn't been levered to a lot of risk. And so when I look at where we are right now, I still maintain that even if we get a little bit weaker of a job print, there's still a lot of opportunities to invest in higher quality assets where businesses are generating free cash flow and that I expect to do well regardless of the economic environment.
Matt, I've heard a lot of people say this. A lot of people aren't in the risk market and really have a lot of room to play catch up. And yet the Wall Street Journal put this article out this morning that stock allocations account nearly for 42% of U.S. households' total financial assets. This has fueled more millionaires when it comes to 401k accounts than you've seen ever in records going back decades. How do you square that with this idea that people are not overly invested in risk assets?
You know, Lisa, it's a great point, and I think it just highlights how distorted zero interest rate policy has been to really the entire asset market over the past 14 years. Asset owners have done better than those who haven't. And that's led to a bifurcation across the entire consumer class, which was made a lot worse by the inflationary pressures that we've seen. But what I would say to that is, even though asset owners are levered to the overall equity market, when you look at general positioning with respect to cash balances and how those looked relative to 2-3 years ago, positioning to me is still largely neutral, I would say. And when you look at investor sentiment in particular, investors have been fighting this rally tooth and nail that something has to go wrong. We continue to hear about the need for 50 basis point cuts, that the economy is deteriorating more rapidly than we think. Yet corporate earnings are good, guidance on balance is positive, corporate margins are still sitting at record highs. And so to me, that means that there's a lot of opportunity for those who want to do their homework and look in the equity market. And that's why I've been encouraging clients to lean into this broadening market. You can still own some of the mega caps and high quality businesses, but look a little bit down market cap for businesses that are throwing off free cash flow, that are higher quality and really under-owned by the market.
How receptive are investors to this message, given the fact that they've done pretty well, that they can sit in cash? I mean, we were just talking last week with people who are saying essentially this idea of $6 trillion that are on the sidelines, the sort of cash on the sidelines, is kind of bogus because it's happily there. I mean, it's not going anywhere. How much are people actually moving?
It's such a good point, Lisa, because we also forget that rates aren't going back down to zero. I mean, maybe we'll be back down to 2.5% or 3% or wherever the neutral rate ends up landing. So there's always going to be a reason, I think, for some money to be sitting on the sidelines. But a lot of the conversations I have with our clients are focusing on the opportunity cost of staying in cash versus what they would give up. And a big concern for clients right now is, how am I going to match the same yield and not take too much risk? And what's really nice about the market today is that there's a lot of opportunities to not reach far out in the risk spectrum in fixed income, where you can still get a very respectable yield, particularly if we see a backup around some of the offside interest rate pricing heading into the end of the year. And dividend payers are largely under-owned. Valuations are still fair. They're throwing off very respectable rates of cash to investors. And so you have the chance for capital appreciation as well, which you really haven't had that combination of yield plus appreciation in a very long time. And that has been well received by investors.
Matt, before we get to the end of the year, though, we do have an election 9 weeks from today. You're talking to clients. How concerned are they about November 5th?
Yeah, they're very concerned, Anne-Marie. I think I have not had a single conversation where elections has not come up. And that's been around many, many different parts of the country. And I think a big question with respect to the elections is just, what is that going to do with respect to taxes? I think there's a lot of entrenched views on one side or the other. And so just understanding the overall market implication, I think, becomes more challenged when individuals have such big views. And my main message to these clients, like we talked about last time, is just don't try and play the market based on who you think is going to win. Think about the market in totality, what's going right, and try and find some of those durable secular growth trends that are going to be in place regardless of who wins this election. Take, for example, infrastructure spending. Manufacturing, reshoring, bringing jobs back to the country seems to be a goal of both parties. There's a lot of opportunities in the industrial space that lean into that, and also lean into artificial intelligence, like electrical equipment companies, utilities. So there's plenty of ways to play this without being political, and that's where I always try and bring the message home to investors.
Utilities up around 20% in 2024, up almost 7% in July, up more than 4% in August. Matt, how stretched is that trade?
I think it's certainly stretched from a near-term relative perspective, but when you look at what we need to actually realize AI monetization and the data center growth that's being projected, we do not have enough energy in this country, John. And so I've actually been able to talk to some senators and representatives in Congress about what their plans are to make sure there's power, especially across the Sun Belt. And they have told me trillions, with a T, trillions of dollars are going to be spent over the next 3 to 5 years in order to build out the grid. And so you want to find some of the utility companies that are able to provide those electric utilities, but also might be leaned into some of the trends going forward, like sustainability and growth, because that's still going to be the way forward in order to provide enough power. So there's definitely long-term opportunity, but don't chase the trade. Wait for it to come to you should there be a pullback in the market.
Well, it's certainly a popular trade. P for popular, Matt. Very popular. Matt Orton of Raymond James. Thank you, sir. Appreciate it. Equity futures right now negative by 0.6% with an update on stories elsewhere. Here's your Bloomberg Brief. It's Danny Berger. Hey, Danny.
Hey, John. Dissatisfaction with housing costs has hit a record high in rich countries, according to the FT. Citing a Gallup's analytics poll, half of respondents in OECD nations are unhappy with the availability of affordable housing. In the U.S., that figure is almost 60%. Researchers partially blamed a lack of construction for the affordability crisis. Tesla shipments from its Shanghai factory rose for a second straight month in August. Prelim data from China's Passenger Car Association shows Tesla shipped over 86,000 Model 3 sedans and Model Y SUVs. That's up roughly 3% from a year ago, some new momentum after a first-half slowdown. Huawei is preparing to launch new products at an event that will take place just hours after Apple's debut of its iPhone 16 on September 9th. Huawei plans to unveil the world's first commercially ready smartphone that folds twice, according to a person familiar with its plans. In China, Huawei pushed Apple out of the top 5 of device makers in the June quarter. And that's your brief, John.
Danny, thank you. Before we work out whether we need it to fold twice, do we need it to fold once? Have we actually demonstrated that this is something people need?
I spent some considerable time watching videos of the folding. And there's a theory around the folding. There are a couple theories. Number one is you could actually drop it and it won't hurt the phone as much if you drop it on the right side.
Right.
And then there's the other issue of you can get more screen space, so you could fold it out. And then there's the third way of it just looks really cool and modern.
Isn't it just becoming a laptop?
Essentially, but isn't that what you use it for?
I wonder if it helps with butt dialing, because it's folded and it's not just in your pocket.
Oh, you have those problems?
I still have those problems.
Okay.
Really? You're a butt dialer?
Don't you just hold the... Oh, right, okay. Up next on the program, on a campaign trail, it's America First.
It is vital for our nation to maintain strong American steel companies. U.S. Steel should remain American-owned and American-operated.
That conversation just around the corner, live from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Keely Lyons deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Power, money, culture. As Linda Aman tells the story of Asia's rise through the people who are helping to shape it. The Serum Institute was a major player in the fight against COVID-19.
We're in a race to procure raw material that was sanctioned.
And now CEO Adar Poonawalla is bracing India for the next pandemic.
I'm not losing sleep over which day and when it's going to come out, but we're definitely prepared.
Latitude, encore presentation this weekend, only on Bloomberg.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley.
It's Jobs Day, and Bloomberg has the report under surveillance.
It's from super hot to solid.
This is normal.
I think people underestimate the behavioral aspects when it comes to the labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
So what is bad on September 6th?
Nobody really has a full answer on it.
I don't know what counts as good news these days.
It's a big debate.
The August Jobs Report, Friday on Bloomberg.
A beautiful summer's morning in New York City. Good morning. Equity futures negative by 0.5%. I can hear TK. It's un-American. Okay. Yields are unchanged on a 10-year, 390.
It's just not accurate. That's just not, okay, I guess it is technically until September 21st, but
by definition, it is accurate,
okay,
actually.
Is this basically your calling card for this particular cycle?
I'm just trolling people who really care. I don't care that much.
Make summer great again.
I really don't care that much. Make September great again. September scary is a real thing for a lot of people. The anxiety of winter just being around the corner.
It's my birthday month. September is a wonderful month, naturally.
Happy birthday, Bramo.
Thank you. Well, it's not for a while.
This is like the promo for Bramo's birthday. An early promo. All right. Under surveillance this morning on the campaign trail, it's America First.
It is vital for our nation to maintain strong American steel companies, and I couldn't agree more with President Biden. U.S. Steel should remain American-owned and American-operated. And I will always have the back of America's steel workers.
So here's the latest. Kamala Harris aligning with Joe Biden and her opponent Donald Trump in opposing the proposed takeover of U.S. Steel by Japan's Nippon Steel. Harris catering to the union vote over Labor Day weekend, just 1 week shy of the first presidential debate set to air on ABC. Henrietta Trace of Vader Partners writing, Harris is ahead in the polling nationally, but the Electoral College remains extremely tight and continues to favour Trump and the Republican Party in our view. Henrietta joins us now for more. Henrietta, welcome back. We'll turn to the polling in just a moment. I want to start with the steel issue first of all. On this issue, is there any daylight whatsoever between the two candidates?
There's no daylight between the two candidates, and frankly, there really can't be. I have some really fantastic clients who were asking this question a year ago. Where are the presidential candidates going to be on the X versus Nippon Steel deal? And the answer is effectively they're going to say they're against it for the duration of this election cycle. If anything, you should expect for none of this to be concluded until after the election. There's no reason for a rush, and there's no other alternative for any presidential candidate. The alternative of saying, yes, I think Japan should come in and buy one of the most, American brand companies in the Rust Belt before an election cycle is sort of unthinkable. So this should have been well understood and predicted many months ago, if not a year ago.
Henrietta, though, this time next year or January 21st after the inauguration, if one of these individuals becomes inaugurated and then backtracks, how is that going to affect them in the future?
Well, I think what you need to think about is that the regulatory agencies have the option to go in and study the issue, whether it's DOJ or some of the other administration agencies. Go in and say, look, what are the cost benefits here? And then either give it its blessing or not. During that interim, they're going to have to go a long way towards giving the unions what they need to the point where they get unions on board. That's the only way that this progresses. So the burden and the onus is really on the company, on Nippon Steel, to make sure that the unions are behind them. And once that occurs, then you have a situation where the deal can go proceed, but it's never going to be, you have my blessing. It's either going to be, there haven't been enough issues to derail this or proceed in, the free market society that we live in.
Henrietta, in Pennsylvania, Kamala Harris said, let's not pay too much attention to those polls. You were one individual that thinks Trump has the edge when it comes to the swing states. In Pennsylvania specifically, why do you think he has that edge, even though she is doing the work there and going to places like Beaver County?
Pennsylvania has slowly become more and more Republican leaning, and a big part of my bias towards Biden in that state early in the year was mostly because he's Scranton Joe. He was, raised in the state, and I think that carries a lot of weight. Kamala Harris is deploying Joe Biden in that area, and I think Tim Walz goes a long way towards speaking to that demographic. But it's an issue where we see the unions play out, where the top of the union structure, for example, has strong support for Kamala Harris as the Democratic candidate who has, minimum wage issues in mind and is fighting for unions. Joe Biden famously went on the picket line. Kamala Harris has been on the picket line. But then you have the members themselves of, the million-person strong Teamsters Union, for example, who are very conflicted, and they personally support Donald Trump and his brand of politics. So I think it's a harsh disparity between people at the top of the unions and then their rank and file members who may prefer to vote a different direction. And it's slowly been trending more and more red, getting closer to Ohio, which consistently has voted for Trump +8, +9, and is now +12 in that state, which is just right next door.
Trending red, especially in Western Pennsylvania, but it has a very popular Democratic governor. Does that not favor Harris?
It does have a very popular governor, and that's great. And I think Shapiro has been an exemplary speaker on the trail. His speech at the DNC was notable in terms of getting support, but you really have to just keep that trajectory open. What the Harris campaign is trying to do right now is turn out youth voters. We saw a 178% voter registration uptick amongst Black women in America in the last 3 weeks or 5 weeks since Kamala Harris has been the campaign frontrunner. We saw a 148% increase in Latino females in registering to vote in the United States. So it's all about voter turnout in these high urban density areas where Kamala Harris is going to try to run up the numbers and get it on par with 2008 with Barack Obama, who won the state overwhelmingly. So that's the trajectory that they're trying to pursue. And you're not going to see that translate into the polls. For reference, all these new voter registrations, those are not going to be taken up in the polls because pollsters are not reaching those new voters. So they also have a higher propensity to vote than somebody who's been on the rolls for years or decades. So I think that there could be a sleeper voter in Pennsylvania and other states nationwide, which is these new registrants that Kamala Harris has turned on in the last couple of weeks.
When you look at the polls, Henrietta, what's the main campaign issue of this campaign cycle?
Right now, it's immigration and abortion. Those are the two top issues. When you look at voters and they say it's the economy or inflation, those are no longer reliable data sets because they skew partisan one way or the other. If you like Donald Trump, you think the economy is trash and we're going to a recession. If you like Joe Biden or Kamala Harris, you think the economy is improving. You feel good about your own personal finances. You feel good about your state's personal finances. And you feel like the inflation issue is coming down, which it is at 2.9%. I think that the Federal Reserve lowering interest rates in a couple of weeks is going to be really powerful for that message as well. But you keep having these upticks and fears about recession that keep being unproven and unmerited. And that is something that needs to resonate with the American voter, but they don't receive that information due to partisan leanings. As a result, the most reliable data that you can look at as an investor watching the polling is where do you stand on immigration and where do you stand on abortion? And that's really what's driving the gender divide, which is outrageous. It's so big this year. It really is becoming men versus women in this election cycle.
So let's put abortion aside for 1 second. With immigration, what is the daylight between people who are for much more stringent types of rules and those who would like to see a more measured approach? I mean, how much is this really dividing between Republicans and Democrats? And how much is there really room to negotiate?
You know, it's interesting. There's not really that much of a divide. Democrats have come very far to the right in their latest bill that was rejected by Republicans in the early part of this year at the request of Donald Trump to say, you know, let's keep this issue front of mind. But Joe Biden has introduced and signed some of the most extreme executive orders that have more than halved illegal immigration since the beginning of this year. And we're now down to pre-2020 levels when he took office. So I think that the Democratic Party has gone far to the right on this issue. It's really a question of whether voters are prioritizing immigration or not. Everybody is pretty much in favor of increasing drones at the southern border, boots on the ground, expanding, judges in the area, having a more streamlined asylum process so we can process illegal immigrants more quickly, and certainly compelling Mexico and southern border country nations to improve economic situations in their region so that they do not have this surge of immigration at the U.S.-Mexico border. So I think it's really about who talks about it in what kind of a way, as opposed to what functionally do we want to see.
2 months to go. Henrietta, thank you. Henrietta Trace of Vader Partners. The countdown to the U.S. election continues. Coming up next on the program, retailers looking to get a jump on holiday spending. That conversation just around the corner.
The top names at Jackson Hole are on Bloomberg.
I'd like to see us move toward a more real-time data set. So using new technologies, maybe some of the AI technologies, maybe we get better data as we move forward, but we've got to really focus on that with our economists and our analysts about, where's the data coming from and can we rely on it?
Nobody covers Jackson Hole like Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
Max Kettner, HSBC, with this to say. High-frequency data have improved. Jackson Hole brought the Fed put back with a vengeance. We remain overweight equities. The bull is still bullish. Equities right now negative 0.5% following a third week of gains on the S&P and a fourth consecutive monthly advance on the S&P 500. Putting back just a touch on the NASDAQ, we're negative 0.7, but outperforming the equal weight on the S&P 500. Just stripping out the muscle of big tech is where some of the bigger gains have been.
Yeah, for 2 straight months. And the interesting thing about Max Kettner is that his bullishness was really idiosyncratic, I would say, compared to some of the other notes, basically saying the Fed put could also spark a rally in, quote, junk assets, such as U.S. small caps in the coming weeks and months. Other people disagreeing. I mean, Mike Wilson has been sort of on this train for a while, talking about how they're not going to outperform. He doesn't make sense. But others, I mean, Stuart Kaiser, that was a notable shift for him as well, talking about downside risk, especially if bad news is bad news and we do get that downside surprise.
Mike Wilson teed up the potential of maybe a repeat of August 2nd if we get a bad number. When we last spoke to him, not saying a perfect repeat of August 2nd, but something similar. Bad news is bad news.
Which we have seen kind of bleed into markets, and you can kind of see a precursor. I mean, today's action, you can't really derive too much from it, but you can see the underperformance coming from, guess what, small caps. There is this fear being baked into markets that maybe we have overestimated the chance of that soft landing, and that might be the trade to unwind. We'll see. I mean, that's the argument that Mike Wilson is making.
Let's turn to the rates market. Front end of the curve, the 2-year will sit there, 393.32. 4 straight months of yields declining at the front end of the curve, down by more than 30 in the last month or so. Teeing things up on Friday, really a conversation about whether they go 25 or 50. I mentioned Andrew Honhorst of Citi. This is his note this morning. If we get 4.3% and 125 on payrolls, that means for them, the Fed goes 50. A drop in the unemployment rate back to 4.2, and they think maybe the Fed just cuts 25. So I know we've said this a few times now. The Fed says they're not data point dependent, but for basically Wall Street, the difference between 25 and 50 is whatever Friday brings.
When you take Andrew Hollenhorst and then you take Neil Dutta and you put it together, put both of those views together, what I get is focus more on the actual unemployment rate and maybe not on the headline number. Basically, to understand exactly where this dynamic is. Basically, we're talking about the Sahm rule that Claudia Sahm has shifted herself away from as being sort of declarative, as still being front and focus. If we really do get that sticking, that's going to really make the difference.
I wonder also if economists are willing to put a bit more weight on a household survey versus the establishment survey, given the revisions we've seen over the last 12 months. You mentioned this last week. I had this question this morning from a viewer who turned around and said, are we going to put more weight on the ADP report and never mind non-farm payrolls? And I joked whether people would be willing to just chop 60, 70K off whatever the number is on Friday.
Yeah, because essentially that's what the revisions have done. Some people have taken a look at the ADP survey of private payrolls as being more instructive than the overall survey, even though it purports to not even be predictive of the survey that we get on Friday. All this goes to show people doubt the data. And this is one of the conundrums that the Federal Reserve faces when they're data point dependent. If this is really going to make the difference about whether 50 basis points or 25 basis points, that it might be revised out of relevance in 3 months, what are we doing? And I think that that was sort of the point that Neil Dutta was making.
Isn't that what we're all asking every single morning? What are we doing?
Make summer
what
great
are we
again.
doing? We've got plenty of time to talk about this throughout this morning and throughout the week. I want to finish on the commodity market. Copper down by 2.3%. Huge revision over at Goldman Sachs, led by Dan Stuyven, who's come out with this call on copper. The call was 15,000 a tonne. That was the target for next year. Lisa, it's now a little north of 10K. That is a big, big revision.
Yes, this is a question about whether it's a massive overhaul of the view just more broadly, or whether it's also a sort of a changing of the guards at Goldman and sort of a revising of the overall outlook at a time when maybe the supercycle in commodities isn't happening as quickly as people previously believed. The heart of this is just basically China. It's slowing a lot. It's unclear how people can really get out from under that. And frankly, the data over the past couple of days just confirmed that.
Weaker demand. That's the latest on copper. I actually want to sit on crude just for a beat longer. I think a really important development over the weekend was on the White House X account when they tweeted the following: oil production has hit record highs under our administration. Now, for anyone following this over the last few years, this has been the story. And Republicans have been able to come out and say oil production is being held back by Democrats because Democrats have been unwilling to come out and say, actually, that's not the case, because oil production has been at record highs. And you have to think about why. And the why is really quite obvious. Progressives are unhappy with some of this. Now, I think what's interesting about this moment in US politics, particularly for the Democrats, a key pillar of momentum for Kamala Harris has been the unwillingness of progressives to pin her down on unpopular issues on the national stage. And it is interesting to me that the White House feels confident enough to come out and now address this head on and just write oil production has hit record highs under our administration while we also continue to accelerate our transition to clean energy. Are they finally going to start making the point that a lot of people have been asking for a long, long time?
They shored up the base. Where was she this weekend? Pittsburgh and Detroit. They are going after individuals that care about the future of the energy sector, base metals, oil and gas in this country. And this is an obvious shift to the center 9 weeks ahead of the election.
It's a huge shift, particularly for the leader of that campaign now, given her previous views 4 or 5 years ago.
She has the privilege of catering to the center because she didn't have a primary. And that is essentially what we're seeing. And the question is whether it's actually representative of how she will govern if she is elected.
Certainly how they're campaigning, and it's turning out to be a huge advantage. Under surveillance this morning, a top story for you in the FX market. Bank of Japan Governor Ueda repeating the central bank will continue to raise rates based on the economic outlook. Ueda submitting the comments to outgoing Prime Minister Kishida. About 2/3 of economists surveyed by Bloomberg still see the BOJ hiking again by the end of the year. In foreign exchange, a stronger Japanese yen. Lisa, dollar yen down at 146.
Yeah, and you asked a good question earlier, just how much more momentum is there behind some sort of strength in the yen? How much of an overweight is there still in the dollar-heavy trade that we saw for the better part of the past 2 years? And that ultimately is what we heard from Kit Jukes of Societe Generale. He was talking about the record purchases of U.S. bonds and equities. This isn't just an FX trade.
No.
This is an unhedged U.S. asset, U.S. exceptionalism trade. Is this something that is poised to be unwound? And it's just a little bit of softness in the dollar, the best case scenario, and that's basically what he's looking for.
How painful might that be for equities? We'll see. Let's turn to this story, the latest out of Venezuela. The United States laying the groundwork for new sanctions on government officials in the country. Bloomberg reporting the Treasury Department is set to sanction 15 people affiliated with leader Nicolas Maduro, accusing them of obstructing the holding of free and fair elections. Just compare and contrast where we are now to where we were 12 months ago, when there was a real conversation about easing sanctions even further on Venezuela. Then things started to change a number of months ago.
And part of that also had to do with the energy story, right? And making sure that you can keep oil prices and thus gas prices in check, especially in an election year. This comes a month after that election. Authorities said that Maduro had won, but the electoral data by the opposition suggested otherwise. Also, what did we see over the weekend before these sanctions are about to be rolled out? DOJ puts out a press release that they actually seized a plane that they said Maduro has been using, coming from the United States, $13 million purchased through a shell company and smuggled. How do you smuggle a plane out of the United States? That's my question.
Yeah, I've got the same question, actually. I've also got a question for foreign policy in the State Department. Carrot versus the stick. They tried the carrot and it failed. Are they going to start using the stick more?
That's what it looks like when they're laying the groundwork for these types of sanctions. To your point, carrot didn't work. Now here comes the stick, and they're already doing it. Yes, the sanctions are being rolled out, but they're also starting to do things like seize jets.
That's the latest on Venezuela. The latest on Cathay Pacific Airways, cancelling some flights due to new inspections of its Airbus A350 fleet. The airline are focusing on deformed or degraded fuel lines for the Rolls-Royce made engines. No other airline has come forward with similar issues. What do you make of that, Lisa?
Well, I make that this is a story because everyone's looking for problems with planes. I mean, how often do we talk about problems with planes since what happened with Boeing? And is that basically what we're looking for? On the flip side, how much are some of the industrial production snafus that we're seeing with Rolls-Royce and Boeing related to leftover pandemic supply chain issues and also the workforce and what happened there? Those were my two takeaways.
Let's hope it's isolated to this very, very specific issue. The latest on retailers looking ahead to the holidays with summer coming to a close. So Charita Kodali of Forrester saying this: the companies that seem to be winning are Amazon and Walmart. We already know that retailers are planning to promote more this fourth quarter. Sucharita joins us now for more. Sucharita, welcome to the programme. Let's talk about back-to-school shopping first of all. How strong have things been over the last couple of days? What do your channel checks look like?
Well, the challenge is that the National Retail Federation a couple of months ago predicted that it would be the second highest back-to-school season ever. But the underlying thesis there, the underlying story, is that the numbers are not up. When you're the second highest, that means that last year was the highest. This year is down from last year. So that's really not a great thing for the retail industry. And I think that it really is pointing to the shopper is just sick of the levels of inflation, and they are pulling back on a lot of things, including these essential goods for their children during the holiday season.
They started planning for the holiday season a long, long time ago, as you know, Sucharita. And we all know, based on the calendar, Thanksgiving comes late. The holiday shopping season is shorter. They've got experience of dealing with this. How do they address issues like that?
Promotions, that's really what it comes down to. And what you have is just more promotions, deeper promotions, promotions across a greater number of items. And you see that consistently over and over again. And I expect that to be in big numbers this year, too. There was a little bit of a reprieve in 2022 because of supply chain issues, and retailers felt that they could raise prices without necessarily having to discount as much. But it seems like we're back to those 2018, 2019 promotional levels. You also have Amazon coming in with 2 promotional vehicles annually, which is a big deal because it's pulling forward things like sales for back to school. It's pulling forward shopping for the holiday season because people are shopping in October, not November.
You said something in your notes that really struck me. You said Labor Day isn't usually a huge weekend, except maybe for some back-to-school offers, but most of that shopping is accomplished before September 1st. I was thinking about that yesterday as I was frantically on Amazon ordering note cards and binders and things that I had been negligent about earlier. So, Trey, you just think that everybody is so organized and they're all out there shopping for it, or is everybody on Amazon at the last minute trying to get all those supplies that you need to provide for your kids heading to their first day of school?
Well, there are definitely a lot of people shopping on Amazon. When we see Amazon's numbers, that is pretty clear. But there are also a lot of people shopping at the stationery and the office supply stores like Staples, certainly Walmart, Target, Costco. They are all beneficiaries of this time period too. But when we look at surveys, when we look at numbers, people do actually do a lot of shopping in August. Some people are very organized and do get it together in July. And the truth is, a lot of schools are already open. So it doesn't make sense to be shopping for things like clothing and electronics after the school year has already started.
So, Trina, I've got to say, the retail earnings were kind of all over the place. And I'm wondering what your takeaway was. You were talking about a more discerning consumer and potentially some pushback with respect to inflation. Do you get the sense that this is one pinpoint on a downward trajectory, or is this sort of the trough that you see with a greater propensity to spend later in the year?
Well, when we look at those numbers being all over the board, really the positive numbers are Walmart and Amazon, and a number of other retailers have really been challenged this past year. Even Lululemon, which had historically been doing really well with double-digit year-over-year growth, has experienced single digits. Which these are sort of canaries in the coal mine that the rest of the outlook for retail for the rest of 2024 may not be so strong. When will it recover? I do think that as interest rates go down, which will likely be through, of course, the rest of this year, 2025, we may see some rebound. But the truth is that retailers don't have a lot of pricing power right now. So they have to be much, much more cautious about how they are charging shoppers, and shoppers are shopping around. They are looking for everything from secondhand goods to bargains wherever they can find them.
Sucharita, one thing I noticed last week, whether it's at the checkout counter, they were selling candy corn, or going through some of the aisles and they already had Halloween candy and costumes and lights up, and it wasn't even Labor Day. Is that a trend that these holidays are being brought forward even earlier than usual?
Yeah, and it may seem like it's earlier than usual, but the truth is that this is a trend that's been going on for years now. It is not unusual to have the setup of Halloween happening as early as late August, and certainly, definitely through September. Retailers are dependent on seasonal items because it drives people into the store and it gets them actually there for a couple of purchases, and then ultimately, especially if you're a mass merchant with lots of categories, you've probably had the experience of, walking out of the store with hundreds of dollars worth of goods. So that ends up being standard. We'll likely start to see holiday promotions as well, probably as early as September. Everybody, kind of thinks that they are behind if they don't. And certainly with Amazon having another Prime Day deal offer set in October, that's absolutely going to promote for the rest of the industry as well.
Starbucks loves it, don't they? You notice that, Bramo?
Okay.
Signs go in the window in the middle of August.
You try to tweak me? You try to get me excited about this?
You get excited about that?
About what? Fall and pumpkin drinks?
Yeah.
Oh yeah, I'm a big pumpkin latte person. No, I'm not a big pumpkin latte person. I'm not somebody who goes out with hundreds of dollars.
Morning.
No, I mean, look, yeah, I know you're a big Halloween person. Big.
Really into it.
Yeah. Lots of candy corns.
Let me thank our guest, Sucharita Kodali of Forrester. Thanks for joining us this morning. Huge Halloween kind of guy.
Oh yeah, big time.
Massive.
You should see on his door, massive skeleton, plastic skeleton, kind of hanging down there with glow.
They're just throwing out candy for the kids. The end of October.
You're the person who hands out.
Super into my community, into the city.
He puts all the lights off on Halloween. Don't come here.
That's who I am.
I know.
Lights off, don't come in,
and
don't
if they come in, you give them 3 pennies and a thing of cut fruit.
Yes. Berries, some sliced apple.
That's actually
expensive.
Yeah. They're good gifts. I didn't say I was cheap.
It's like, kids, stop rotting your teeth.
Let's give you an update on stories elsewhere this morning. Apples will do that too. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Airbnb is lobbying New York City officials to scale back a local regulation that outlaws most of its short-term rentals. In a blog post this morning, Airbnb said the regulation hasn't stopped the rise in NYC rents. Instead, it's just left travelers without affordable accommodation, priced out by record-high hotel rates. The rule came into effect nearly a year ago. The city has yet to signal a willingness to amend the law. Goldman Sachs has slashed its forecast for copper by almost $5,000. The bank had been one of the biggest cheerleaders of the metal, but analysts writing in a note that sluggish Chinese demand will delay an expected rally. Goldman expects prices to average about $10,000 next year. Its previous target, set by former analyst Jeff Curry, was $15,000 a ton. Fans of Oasis are looking back in anger at Ticketmaster, with prices skyrocketing for the group's hugely anticipated reunion tour. Ticketmaster is using dynamic pricing to set rates, adjusting based on real-time demand. Basic standing tickets were initially advertised at around £150, but rose to $350 after a few hours as fans rushed to the ticketing websites. And that's your brief, John.
Danny, thank you. I know it's all relative. It's always all relative. But relative to the experience of getting Taylor Swift tickets, I think Oasis fans did all right, didn't they, over the weekend? $350 versus $150 versus like stories of thousands and thousands of dollars stateside.
Were you able to resell these, though, at $10,000, $20,000?
Face value, you can't.
So that's the reason why.
Has to be face value, yeah.
Well, Deutsche Bank's Rick Reeder is struggling, according to his note.
Who's that? Jim Reed?
Yeah.
Rick Reeder's BlackRock.
Sorry, that's right.
All right, let's get our people right. Up next on the program, dear me, the Fed's next big catalyst.
You know, from a risk management standpoint, you have to start pushing rates a little bit lower, gradually, but you're over tight. So the direction of travel, I think, is what matters to the Fed, not necessarily every single data point.
That conversation up next. You're watching Bloomberg TV.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Pause. Yes. No. You don't get to drop that in.
No, but just
5 seconds before we come back. I was in the Halloween Day parade in the village once. Okay. How old were you?
I was 16.
What did you dress as?
I guess cowgirl. It didn't matter. We just got in there.
Do we have photos?
No, let's just move on. Come on. Let's talk about the Federal Reserve.
I will move on, but I want to see pictures of this. Equity futures on the S&P, negative by 0.5, yields up by a single basis point on a 10-year, 391.68. Mislav Matejka of JP Morgan, still somewhat cautious here. Sentiment and positioning indicators look far from attractive. Political and geopolitical uncertainty is elevated, and seasonals are more challenging again in September. The latest view from JP Morgan. Under surveillance this morning, the Fed's next big catalyst.
What you're seeing is mission accomplished on inflation, or something very close to there, and now you're worried about the unemployment rate. And if that continues to drift higher, from a risk management standpoint, you have to start pushing rates a little bit lower, gradually, but you're over tight. So the direction of travel, I think, is what matters to the Fed, not necessarily every single data point.
Here's the latest. Markets looking ahead to Friday's payrolls data. The estimate in our survey sitting at 165K. Investors hoping the data will confirm the widely expected Fed rate cut in just over 2 weeks. James Camp of Eagle Asset Management with this to say. If Fed officials want to avoid a recession, they might as well make a more meaningful cut, i.e. 50 basis points or more, since the inflationary backdrop for additional cuts may diminish by the end of the year. James Camp joins us now for more. James, let's talk about the end of the year. Let's skip the short term and get to the interesting part. Q4, do you have inflation picking back up?
Yeah, John, we do. We've got a couple of things. One is base effects, which we've talked about quite a bit. The second, owner's equivalent rent is going to tick back up. The seasonals are also not favorable for inflation. So our modeling tells us that we're going to get back to what I call a post-COVID normal 3.25% inflation rate. We actually think that's where inflation settles out long term in the new economy.
You think that that's actually important for the Fed to do in order to keep this rally going. Isn't that right, James?
I do. I think one of the things that they're going to have to look at is how much runway do they have after the seasonals pick back up in inflation. And this is really one of the most interesting times, Lisa, I've seen for the Fed, because there's such a confluence of different things. And I think the real crux of it is we are just in a different economy. And I think the core inflation rate is going to be more the pre-financial crisis era with the 3.25%. And the other part of, I think, what the Fed has to look at is we're not getting any help from the fiscal side. We're not likely to get help from the fiscal side into 2025 in terms of deficits. And deficits are an inflationary impulse as well. So the Fed's going to have to settle in with a longer-term inflation rate higher than 2.
If the Fed does not tacitly acknowledge or even verbally acknowledge that they are going to accept an inflation rate above 2%, does that indicate to you that they're going to be late to the game and not cut rates enough?
I think it means that they're going to have a terminal rate higher than the market wants. I mean, the market has been cheerleading for Fed cuts all the way back to the end of last year. I think we had 8 priced in as we started 2024. Our base scenario has us with a terminal funds rate still with a 3.5 handle. So the suggestion that the Fed is going to change and cut in September is likely, but the extrapolation into a real aggressive sort of back to the post-financial crisis normal of ultra low rates, I don't think is in the offing at all.
James, how easy do you think it will be to get the committee together and pointing in one direction when they come together, I think September 17th before the decision on the 18th?
What's interesting, John, about the Fed, the Powell Fed, is there's always been a unanimous vote. I actually don't like that. I'd like to see dissent, and I'd like to see the actual 8 to 4 or whatnot. But yes, he's going to have to get consensus, and the likelihood that he can coalesce around 50 is probably not likely. But I still think that would be the preferred policy response, at least at this point.
James, how do you think, and this is just pure scenario analysis, of course, and I don't know if this is your base case or not, how do you think the market would trade on dissent, given that we're used to anything but?
Well, I think it would be a unique thing for this Federal Reserve, but it's not historically. I mean, we typically do have more give and take, and we do have more sort of insight into some of the disparate comments within the Fed. What we see instead is some of the Fed speak, after the meeting, and we have sort of surrogates, ex-Fed governors, et cetera, sort of doing that heavy lifting. But Powell has been very much a consensus type Fed chairman, and I think we will probably see that again September 18th.
James, just real quick here, how much then are you betting on a steepening curve, that essentially the Fed is going to cut rates and that's going to allow long end yields to climb, because that's essentially going to imply a higher inflation rate over the long term?
At least I think that's exactly where we're going. We're back to where we ended last year in terms of the 10-year yield. I think 10 years are overbought here. I think the inflationary backdrop is going to be suggestive of a more positive yield curve, and that actually may be okay. That may be helpful for the banking system. It may be helpful for some of the funding mechanisms of the deficit, et cetera. But I do expect at some point, and we've got 2s to 10s close to uninverted here. I do think at some point in 2025 we see slope in the yield curve again.
There's only a basis point or 2 in it right now. James, appreciate your time, sir. James Camp there of Eagle Asset Management. James, thank you, sir, with an interesting view on the end of this year, Q4, inflation picking back up.
Yeah, and this is something that other people have talked about. But the interesting aspect of this view is that doesn't mean that the Fed shouldn't cut rates, and maybe even cut rates significantly, but that the Fed has to come out and basically say, look, we are in a more inflationary world, but we can't torpedo the labor market as a result of the additional inflation. We just have to accept it, and that is new.
The third hour of Bloomberg Surveillance just around the corner. Here's your lineup: Kevin Gordon of Charles Schwab, Matthew Dolgin of Morningstar, Greg Dacko of EY, and Brent Schutte of Northwestern Mutual. From New York, that's all coming up next. This is Bloomberg.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the Quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very
Secured
quickly.
overnight
So
financing rate down at 5.32% for August 30th from 5.33% August 29th.
Use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
We're at an inflection point, and it becomes difficult to know, are you moderating into a soft landing, or are you moderating and then slowing down much more sharply?
We should expect to see over the next several months probably still some more softening in the labor market.
On average, the consumer's doing fine, but there are pockets of weakness here, and I think the Fed has to be attentive to that.
The consumer's searching for value because they don't have the stimulus dollars they had a couple years ago.
We do think that what's on the horizon is the risk that inflation actually picks back up again.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Welcome to September, live from New York City. Welcome to the third hour of Bloomberg Surveillance. Good morning to you all. And let's begin with the scores. On the S&P 500, negative by 0.5%, pulling back and just chipping away at a 3-week winning streak on the S&P 500. On the NASDAQ 100, down by 0.7. On the small caps, the Russell, down by 0.9. The data this week, there's a lot of it, so let's go through it together. It kicks off a little bit later this morning at 10 a.m. Eastern Time with the ISM manufacturing. We'll get jolts through the week. We'll get jobless claims, an ADP report. We'll get another ISM and an August jobs report. Lisa, I think pretty much everything comes this week.
And it comes with this drumbeat of a question. Are we seeing true weakness in the economy, or is this a strong economy that can afford a sort of soft cutting cycle from the Federal Reserve? This ultimately is the key question. It's no longer about inflation. It's about, is bad news with a labor market that can really rectify some of the questions that came from with last month's labor market report.
And what is bad? What is bad news? Bad relative to expectations, bad relative to the trend? Because right now we're looking for 165. 165 doesn't sound too bad.
It doesn't, but it is lower than the trend, and it does come at a time where revisions tend to be 60 or 70,000 lower when you look back on it. So at what point are we looking at the actual headline number? And this is something that Neil Dutta raised. How much are we looking at actually the unemployment rate? The idea of what kind of slack do we have in the economy? How many people are exiting the labor market? There are some real questions about what a number is that's good or bad if you have an employment base that's actually increasing to the degree that it is.
Well, let's run with this. Let's pick out a bank that's looking for a 50 basis point cut on September 18th. And the difference between going 50 and going 25 is 0.1% on unemployment. If we stay at 4.3, Andrew Honhorst and the team over at Citi believe that they go 50. If we come down to 4.2, he thinks they go 25.
Ultimately, this comes down to messaging. How can the Fed justify a 50 basis point rate cut unless they see something that looks like actual weakness? And at this point, I just keep going back to, if that scenario bears out, could that be good news for the market? Essentially, it's not that big of a difference, but the Fed's going to be much more accommodative as a result. Can you really get that? I guess I'm wondering. He's kind of alone in that kind of call.
And if all the strategists are saying that Powell wants to make sure he has consensus, how much easier when you have, say, someone like Raphael Bostic, who over the weekend was saying he's still focused on getting inflation down to 2%. How much easier is it to get someone like him on board to 25 as opposed to 50 when Marvin Lowe says 50 will look political?
On Wall Street, we're still talking about the destination. And ultimately, is it in the low threes, the mid threes, somewhere close to 4? And I think the conversation we've had on this program repeatedly is the Fed is offside by as much as 100 basis points, maybe even more. At the Federal Reserve, I still hear them talking about the journey. Gradual, methodical, gradual, methodical. You hear those two words on repeat in Fed speeches over the last few weeks.
And that indicates that they want to move slowly, that they want to move 25, 25, 25. Ultimately, when you take a step back, I find it very interesting. We talk about the destination, methodical, gradual, to what? We aren't talking about the destination. And I think that's the reason why James Camp was really interesting. We were just talking to him about how essentially inflation is going to be higher. The Fed's going to have a higher terminal rate. They're not going to address this because guess what? They've got no agreement and they have no advantage to really addressing it, but they're all saying maybe around 3%. Is it substantially higher than that if they start cutting more aggressively this year?
The opening bound 1 hour and about 26 minutes away to kick off the month of September. Equity futures right now negative by 0.5, advancing for 4 consecutive months in both equities and bonds. Yields dropping again last month on a 2-year by more than 30 basis points, dropping just a little less on a 10-year maturity, but pulling back nevertheless. We're at 390.92 on 10s, advancing on the session by almost a basis point. In the FX market, the euro against the dollar, 110.37. We're negative by 1/3%. Coming up this hour, we'll catch up with Kevin Gordon of Charles Schwab as stocks hover near all-time highs. Matthew Dolgin of Morningstar, I'll get that out, as DirecTV customers are left in the dark over a Disney dispute, and Greg Dacko of EY on why he sees softer economic activity to end the year. We begin with the big issue. Stocks kicking off September near all-time highs as investors await the Fed's next big data point, August payrolls. Kevin Gordon of Charles Schwab seeing a 25 basis point cut this month, saying while the Fed has made a definitive shift in the risk management practices, with labor now more important than inflation, it's hard to find crisis-like data that warrant aggressive rate cuts right now. Kevin joins us for more. Kevin, welcome back to the program. I'm going to kick this conversation off with a quote from HSBC and Max Kettner. Max Kettner came out over the last few days and said high-frequency data have improved. Jackson Hole bought the Fed put back with a vengeance. We remain overweight equities. Is that sufficient reason to stay long and strong this equity market?
Yeah, I think it is, especially if you, as much of the discussion has been this morning, if it's going to be this slow and more methodical cutting cycle from the Fed, historically that tends to be more beneficial for the stock market versus something that's more aggressive and a fast cutting cycle. And, it's probably somewhat obvious, but if it's the latter case, it's typically because the Fed is reacting to worse economic data or some kind of financial crisis that's been brewing. So it's why, a lot of our message regarding the cutting cycle when it eventually starts is that you really want to be careful what you wish for if you're going for something that's more aggressive, and if the Fed has to start going by 50 and at every single meeting. I do think there are some unique aspects of this cycle where, maybe that could be warranted, given how tight policy is now and given some of the softening trends in labor. But if everything's holding up relatively well, if you get a nice package of data this week, which is basically looking to soothe, what was so weak a month ago for this exact package of data that we're getting, whether it's ISM related or payroll related, I think that sort of keeps us keeps the Fed certainly in a camp that is more, I would say, more sympathetic to something that's a little bit slower and a little bit less aggressive.
You've noted repeatedly the volatile shifts in leadership over the last few months. Kevin, would you expect that volatility to continue, or would you expect to see some durable leadership trends in the months to come?
I think the volatility, it's basically looking like over the past month, certainly, it's looking like a reversal from what has happened and what's been the case for most of this year up until the mid-July peak. And, we've been calling it the Michael Caine, the duck market, where it's looking calm on the surface, but paddling like the Dickens underneath, because everything at the, up the cap spectrum that was dominated by big tech and to some extent communication services, that was keeping the indexes afloat while you had all of this volatility and this churn underneath the surface. You had significant maximum drawdown activity from the so-called average stock. Now that's starting to reverse, where since the mid-July peak, it's been much tougher for indexes like the NASDAQ 100 to regain their all-time highs, yet you've got the equal-weighted S&P 500 surpassing its all-time high. You've got equal-weighted financials at an all-time high. Equal-weighted tech is again struggling for an all-time high. So I think it's been more interesting to look at the characteristics and the nature of this leadership shift. But because of that, subsurface activity might start to improve, and I think that's a healthy thing for the market, but it may not look as good up the cap spectrum, and you may be, to some extent, kind of pulled back a little bit or capped in terms of gains for the headline index level. I don't think that's a terrible scenario, especially because gains for the index, like the S&P 500, still look, relatively great year to date. But it's just going to be a little bit harder if you don't get those mega cap names that are contributing more to the index. But subsurface activity down the cap spectrum, you have started to see more improvement. You've got 80% of members in the S&P that are trading above their 200-day moving average. You've got more than 2/3 of members that are outperforming the index over the past month. So I think it has been a relatively healthy improvement, even though leadership shifts have been volatile, and we continue to expect them to be volatile too.
That said, a lot of these shifts that we're seeing, the paddling duck market that we've heard Amy Wu Silverman talk about, a lot of that has really come with this belief in a soft landing, with this belief that the economy is really generally moving toward recovery, even if you do see some consumer pushback in certain sectors. What would you have to see in the labor market, either on Friday or beyond, to really challenge the rotation into cyclicals that you're supporting?
Well, I think you need to see more of a definitive move higher in the unemployment rate, which, of course, you could argue that has been the case. But for many reasons we've all discussed, whether it's the triggering of the Somme rule or if you start to look at some of the innards of the unemployment rates increase itself, a lot of it has been because of this expansion of labor supply. I am sympathetic to the argument that immigration this time has played a particular role in that. You haven't seen, layoffs and other layoff-like data, whether it's claims or challenge or job cut announcements, corroborate what has happened with the unemployment rate. So I don't think it's something that we should ignore. But I do think that if you got something more definitive in terms of layoff increases there, plus a more material breakdown in payroll growth itself, especially in the non-cyclical sectors that have been holding up payroll growth pretty much for this entire post-pandemic cycle, that I think would probably challenge it more. It would probably send you into a more so-called traditional recessionary environment. But the whole discussion about a soft landing, we think the debate is much more nuanced than just soft landing or not. But if you're going to use that term, much of the discussion you were having this morning about destination versus journey as it pertains to the Fed, I kind of view it the same way with a soft landing. We're sort of living it now. If you think about the path in inflation that we've had, the progress that we've made on the disinflationary front, plus the fact that the labor market in aggregate has not fallen apart. Yes, you've had rolling weakness, and we've called them rolling recessions under the surface in different sectors at different times, but that's kind of a better way to go through a recession rather than everything falling out and the bottom falling out all at once. So our base case is still that you get that kind of behavior, and it just moves and transitions out of certain sectors. And you could argue we're transitioning out of the recessionary activity for manufacturing and housing, but it's taking a little bit longer. The nice offset, I would argue, is that as the Fed starts to alleviate the pressure from rates and starts to bring policy down or restrictive policy back a little bit, that probably helps those sectors, as you've still got relatively offsetting strength from services and labor. So I think that's why it shifts so much of the focus to the labor market, and rightfully so, why the Fed is shifting the focus there. But I think that as long as you're continuing that dynamic, you sort of stay in a relatively healthy territory in aggregate for the economy.
This seems to be sort of the consensus. I was reading a lot of notes over the weekend that largely agree with that view, that there is a sort of rolling recovery, and this is the soft landing, and this is what it feels like. And then it was a therapy session. It was basically saying September tends to be a bad month. Get prepared. It always has been. It has been for the past 4 years in the stock market, 7 years in the bond market. Just close your eyes. After that, there should be some calmer times and maybe even a buying opportunity. Is that basically the therapy session that you've been having with your clients?
Well, I think that September, yes, there tends to be some surprises. I think that for this in particular, this quarter, this sort of part of the year that we're entering, you're entering, at least from the U.S. equity perspective, in a position of relative strength. I mentioned 80% of members, trading above their 200-day moving average in the S&P, and this, I think, improvement that you've seen under the surface of the market. So I think that's a better place to be than where we were, a couple of months ago, where in June you got to a much weaker point in the market where a significant deterioration under the surface, and there were so few members that were outperforming the index. You really just had the large caps that were holding everything together. Now we've reversed that dynamic. I think it's a better setup. But that doesn't mean that you can't have surprises along the way, whether it's geopolitical related, whether it's just domestic politics related. But I think that the overarching theme and what was so important about the drawdown that we had a month ago, and the volatility that we had, is that longer term breadth was basically unfazed. And I think that's a much more important story in the fact that it was more, most of the weakness was concentrated in a couple of sectors, really just tech and communication services. If you look at the rest of the market, you weren't getting this recessionary like signal, whether it was from industrials or financials. So I think a lot of behavior from from individual sectors, individual industries becomes a lot more important, especially as we start to approach, the cutting cycle, and we start to approach sort of data that starts to look maybe recessionary on the surface, but warrants a much deeper look under the hood.
Kevin, love catching up. Kevin Gordon of Charles Schwab. Kevin, thank you, sir. Doesn't feel like an up 20% year on the S&P, does it? 2022 felt like a down 20, 30% year on the NASDAQ. It really felt that way for big tech. Doesn't feel like an up 20% year at all in 2024.
Yeah, because people have been crying the whole way up. And basically people have been saying something's got to be wrong. And the whole time, nobody could really coalesce around some sort of narrative. So is this what a soft landing looks like? Basically unsatisfying rallies and unsatisfying goodness that people can't really accept.
You have to remember where we were in 2023 as well, that spring. Felt like the cycle was over.
Yeah.
Banking sector was starting to crack. Fed would have to cut. They carried on hiking. It's been very, very difficult to read everything post-pandemic over the last few years.
Which is the reason why people don't trust the data, and they don't have a good sense of confidence around this soft landing, not to mention the fact that the Fed doesn't have a very good track record of actually achieving soft landings, but there's a feeling of a lack of confidence. What's the next shoe to drop?
Futures right now dropping by 0.5%. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Hewlett-Packard says it intends to pursue a $4 billion damages claim in London against the estate of the late British tech tycoon Mike Lynch. HPE won a British civil case over the collapse of Lynch's company, Autonomy. It's now waiting for a ruling on just how much is owed. Lynch and his daughter were among those killed when his luxury yacht sank in Italy last month in a severe storm. Cathay Pacific has canceled almost all of its scheduled flights from Hong Kong to Singapore. It's inspecting the engines on its Airbus A350 planes. Sources told Bloomberg that engineers are checking for deformed or degraded fuel lines on the Rolls-Royce-made engines. A component failure had forced the return of a flight from Hong Kong to Zurich on Monday night. The airline says it's already found some component failures across a number of engines. Volkswagen shares, they are trading higher on the day, about 1 1/3%. The company said it's considering unprecedented factory closures in Germany. VW's main target is its underperforming passenger car brand. Profits margins are getting squeezed there in the EV transition and a consumer slowdown. Any shutdowns in Germany would be the first in the company's 87-year history. And that's your Bloomberg Brief. John.
Danny, thank you. There are something like 650,000 workers at that company, and around 300K work in Germany. That is a big, big headline to read over the last few days.
Especially because it's not alone, and it's not going to be the last one. And that was basically the message that we've been hearing. It's overcapacity in a region where auto sales have come down, and this is the main industry that's being buffeted by everything, and frankly, that had been upholding the German economy.
Germany is not in a good place. Up next on this program, we'll get you some morning calls, and we'll catch up with Matt Dolgin of Morningstar as DirecTV viewers are cut off over a dispute with Disney. That conversation up next. You're watching Bloomberg TV. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
The opening bow 1 hour and 12 minutes away. Equity futures negative by 0.5%, pulling back just a touch in the bond market. Yields higher by almost a basis point, 391.30. Let's take the opportunity to get you some morning calls. First up, Evercore ISI upgrading Southwest to outperform with a $35 price target. The analyst citing new revenue initiatives set to be outlined at the company's Investor Day on September 26. Your second call from Morgan Stanley lowering its price target on Alphabet to 190 from 205. Keeping an overweight rating, the analysts weighing potential fallout after a judge ruled the company illegally monopolized the search market. We're down there by 0.6%. And finally, Wells Fargo downgrading Boeing to underweight with a street low price target of 119. The analysts seeing the company's free cash flow peaking by 2027 as aircraft development costs offset production growth. That stock, that name is down by almost 3.8% in early trading. That's one to watch at the opening bell. Turning to streaming, DirecTV customers losing access to ABC and ESPN after the pay TV service and Disney failed to come to terms on a new contract. Matt Dolgett of Morningstar, who maintains a buy rating on Disney, expecting the blackout to be resolved by the weekend, writing Disney is in the stronger position as it can more easily withstand the loss of DirecTV than DirecTV could withstand the family of Disney networks. Matt joins us now for more. Matt, not the first time we've seen this, and when we do see this, it's typically around this time of the year. What's different about it this time around?
Well, there's not too much different in this one. As you said, we see this pretty frequently. It seems to follow the same playbook, and eventually these things get resolved. The thing that is becoming different is that with streaming, the cable bundle is going to change. So although this one might not look different than the past ones, and we expect it to get resolved in the same way, we think coming up pretty soon there is going to be a bigger change to the pay TV packages that these distributors, the cable companies, the DirecTVs of the world get and are allowed to put out there. So although this might not be the one where we see the big change, we do think that's coming.
So let's talk about that a little bit more. What will that change actually look like in practice in years to come?
Well, right now, what DirecTV is looking for is the ability to offer a skinnier bundle, basically not having to put in this case, all of the Disney family of channels into their streaming packages so they can offer their customers packages for a lower price. The network providers like Disney have been resistant to that because the business model for these companies has been get people forced essentially to subscribe to all of your networks, and that's their best way forward. The thing that's going to be different, however, is that with streaming, there are becoming other ways to see this content other than through a pay TV package, and that's going to actually next year become even more, and probably to the greatest extent once ESPN, the linear, the flagship service that people watch on only TV right now, becomes offered to consumers also. So that's the biggest thing. Again, right now it's going on with DirecTV. The other thing that we think is a good way forward is what we've seen Charter do, the cable company. They did it with Disney last year. They subsequently did it with Paramount, where they're offering a similar type of bundle, but their subscribers get the stream packages of these companies along with their cable subscriptions or their pay TV subscriptions. So those are the couple of ways we think the changes will come, and we expect them to happen even if, again, not necessarily in this deal and not quickly.
Can you zoom out and give us a sense of where this dispute, which is a couple years running now, sits in this overall shift away from cable to what purportedly should be the new future, which is, we don't know what, maybe another bundle that just looks a little bit different, but something that excludes the cable companies?
Yeah, and that's the thing is we do think that another bundle is the way to go. The question is, who is it that offers it? Is it these traditional pay TV providers, or do the streaming companies do it themselves? As I mentioned with the Charter deal, we think that the cable companies and the pay TV distributors are the ones best positioned to do it. But as far as why it's happening, that is the point, is the companies that rely on pay TV, so the cable companies, the direct TVs, their businesses are shrinking drastically as we see more cord cutting, and they need to be able to do something different. One of the reasons we think DirecTV isn't necessarily the company that's going to be able to cause the biggest change is because it has less leverage, in part because it relies on pay TV a lot more. And so it's in a bad position like the rest. Its subscriber base is coming down very much, and there's really nothing these companies can do about it because consumers have the ability to go through streaming and they're preferring it in many cases. The difference, though, with the cable companies versus DirecTV is that they rely much more on broadband revenue than pay TV revenue, is certainly for profits. And they also have bigger, more diversified businesses otherwise, in many cases, certainly with Comcast. So they would have better bargaining power to drive that change. But ultimately, what's happening is pay TV as we knew it, or cable subscriptions as we knew them, for many, they've gone away. They are changing very much. And so that's what this ultimately will be about, is that this can't be the same thing year after year where, each side is trying to get the best rates for themselves in an industry that goes on. This industry is different now, and it will be much more different in the future. And the business model has to adjust for both sides, we think. And so that's what will happen. Again, even if we don't think this deal that we expect to be resolved most likely by the time the NFL season starts, which is what we often see, might not be the one to drive the major change that we expect, again, probably beginning more in 2025 when ESPN does become available for subscribers through streaming.
And then we'll do it all over again and again and again. Matt, thank you, sir. Matt Delkin of Morningstar. It just keeps going round and round and round, this industry. We're heading back to where we started.
Yeah, although I do wonder how long before cable news channels don't have sports anymore, because they're getting too expensive for the cable news channels. And at a certain point, they're just going to be streaming channels and broadband channels and not actually offering content.
And to Matt's point, it looks like one side has leverage and the other side doesn't, and that side is Disney. Disney has the leverage here.
It's a content provider at a time when ultimately people just want their sports, and they're not really allegiant to DirecTV. People like yourself will just go subscribe somewhere else, and that's essentially what's
Wouldn't
been
you do
happening.
that almost immediately?
Of course. I mean,
you're not tied in.
Yeah, that's exactly it, though. The barrier to entry is that much lower because you can just get it on Roku, or you can get it on your computer, you can get it wherever. You don't have to depend on DirecTV.
Just move on and get your sports where you can get it. Coming up, Greg Dacko of EY and Brent Schutte of Northwestern Mutual from New York. Futures positive, or rather negative by 0.5%. Your opening bell 1 hour and about 4 minutes away.
season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs.
Taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Power, money, culture. As Linda Aman tells the story of Asia's rise through the people who are helping to shape it. The Serum Institute was a major player in the fight against COVID-19.
We're in a race to procure raw material that was sanctioned.
And now CEO Adar Poonawalla is bracing India for the next pandemic.
I'm not losing sleep over which day and when it's going to come out, but we're definitely prepared.
Latitude, encore presentation this weekend, only on Bloomberg.
60 minutes away from the opening bell, equity futures on the S&P negative by 0.5%. On the NASDAQ 100, we're down by 0.6. On the Russell, the small caps down by 1 full percentage point almost now. If you switch up the board and turn a page and get to the bond market, we'll sit at the front end of the curve once again. The 2-year 393.32, up by a single basis point after declining for 4 consecutive months. The longest such streak going back to, I believe, the early 2020s, Bramo. It's been a while.
I believe November 2021, and the reason that people are really embracing this idea is because the Fed opened up the door to it. You said that you should have a drinking game every time they say gradual or methodical, and then you pointed out that you should have a drinking game every time that Fed Chair Jay Powell speaks, because that's essentially what the market has done, and that is essentially what you're seeing. Is this the hangover? And that's what people tend to see in September's.
We'd be very, very drunk through the month of August, that's for sure, if you were playing that drinking game. Let's finish on foreign exchange and talk about the other side
Reports
of the
that
trade,
Chevron
so to
boosts
speak.
oil and natural gas recovery in the US Gulf of Mexico. Again, Chevron boosts oil and natural gas recovery at 2 facilities.
Still stronger. Some comments from the Bank of Japan governor in a document presented to the government, reiterating his stance that they're set to raise interest rates once again if forecasts and the economy, I guess, evolves in the way they expect.
This really goes to an anxiety people have. We talked about U.S. exceptionalism, almost in isolation as everything else was in exceptionally badism. And people are wondering whether you're going to see that trade unwind and what that could look like. And you're talking about it through currency, but you're talking about it also through asset prices. At a certain point, if the U.S. isn't the only game in town and Japan is doing better and you're seeing the equities actually rebound a bit too, well, then what's to say people in Japan aren't going to bring all their money home? I mean, they were some of the biggest buyers of U.S. assets. So this is sort of the fear underpinning this weakness that we're seeing in the dollar. Is it just the opening salvo to a bigger story?
You sound like Stephen Jen. Is that how far you're taking this?
I'm not taking it there. Some people are. I think it's an interesting theory.
An avalanche of money and a 10% appreciation in the Chinese currency. Similar story, similar story.
Kit Jukes had a similar story as well. There is a fear out there. I'm not saying it's legitimate, but there is something to this idea that there has been a lopsided trade to U.S. assets.
We talked about it last week together. We've built up a big long position, accumulated a big long position in dollar assets over the last few years. Under surveillance this morning, Vice President Kamala Harris joining President Biden in declaring U.S. steel should remain American-owned. Harris telling a union-heavy crowd at a Pittsburgh campaign stop that she will, quote, always have the backs of America's steel workers. This issue becoming a non-issue because ultimately there's no daylight between the two parties.
Right. Both candidates say that it should remain in American hands. And to Henrietta Treis's point, investors who were asking about this 1 year ago were correct. Nothing's going to happen regarding this deal, basically, until after the U.S. election. And then if it does go through, that individual, according to Henrietta Treis, whatever candidate becomes president, will say, well, regulators have to go through it and it's on them. But from an American standpoint, for both these individuals vying for the White House, you can't go to steel workers, you can't go to Pennsylvania and you say you want this deal to go through. But for Kamala Harris, this is important because she brought Joe Biden along and she's trying to get blue-collar workers, that idea of the Scranton Joe voter, on her side.
Does it seem like all the politicians are going to say they oppose it and then after the election they're going to go prove it? I mean, essentially, isn't that the playbook that everyone's expecting in markets?
Is that what you're expecting?
I mean, essentially, people are saying this isn't a viable company without some sort of infusion. They've already rejected an infusion from Cleveland Cliffs, which is a competitor, a U.S. steel competitor. Who else is going to do it?
Well, what they'll do is put their hands up and say, well, if the regulators allow it, we're not going to get involved.
So yes,
it's going to be politically, it'll bite either one of them depending on who gets into the White House.
So we've seen union chiefs line up, some of them behind Harris. Union rank and file, union workers, are they doing the same thing?
Not all of them, and we've seen this in polling. Trump has been able to, since really 2016, chip away at rank and file voters, which is why you see Kamala Harris in places like Beaver County, Western Pennsylvania, a county that, 60% pretty much went to Donald Trump. He has been able to get in the rank and file voters, which is why Pennsylvania is so crucial. And Josh Shapiro told me at the DNC, he sees it basically practically a statistical tie right now, which is why Harris continues to go to places like Pittsburgh.
That's the latest on US Steel. Let's get you the latest on the smartphone wars. Chinese tech giant Huawei preparing to launch a new phone on September 10th, just hours after Apple unveils its latest iPhone lineup. Sources telling Bloomberg that Huawei is expected to announce the world's first commercial-ready smartphone that folds not once, but twice. Do I need it to fold at all? Do I?
Love this story. It's like, our phone doesn't fold once.
It folds twice.
It folds twice.
Do we need it to fold twice?
If you look at the actual ads, you drop it, you can throw things at it, you can, play catch with it.
It's like the Cybertruck
it's gonna
of
be
smartphones?
Fine, exactly. Take a bat to it. There's also this point about more screen space. It's sort of the latest new thing, but are we now talking about folding instead of AI?
It's in 10 minutes time now at 8:45 a.m. Eastern time. We're expecting possible comments from Bank of England's Breeden.
Like the moment for AI.
Didn't Apple win on hardware? Didn't they win on making it beautiful, on making it nice, and making it cool? And is that Huawei's game plan at a time where it's very hard to get an edge in AI wars that are really heating up very quickly?
I also think Huawei, especially going hours after Apple, this idea of nationalism and pride, a national giant when it comes to the smartphone maker in China.
Been a big thing for consumers in the mainland. Elsewhere, markets kicking off a shortened trading week, but there will be no shortage of data. Investors looking ahead to Friday's August payrolls report set to either confirm or deny a September rate cut. Greg Dacko of EY remaining in the cut camp, expecting a 25 basis point move in 2 weeks that will kick off 75 basis points total for the year. Greg joins us now. Greg, welcome to the program, sir. It's good to see you.
Thank you.
I'm not sure what kind of number would stop them from hiking next month. What kind of number would stop them from cutting next month, rather?
Well, I think if there were to be any signs that inflation is really accelerating and that we're seeing a labor market that's really strong, then perhaps they would hold back. But I think right now it's really a done deal in terms of the rate cut. The question is really the magnitude and the speed of rate cuts going forward. How rapid is this recalibration process going to be?
25 versus 50. We've had a few guests come on the program and say something like 100K, 125, maybe south of 100K, would nudge that to 50. Where are you on that debate?
I don't necessarily think that we have to have a payroll report that is as strong potentially as 100K to have 50 basis points. I think the 50 basis point rate cut is really going to be dependent on an environment that is much weaker than what we're seeing right now. The Fed does not want to be appearing as recalibrating monetary policy rapidly in an environment where the economy is still relatively strong. Let's not forget, if the economy is moving at a pace of about 2%, which I think is the underlying pace of the economy right now, that's not a reason to start panicking and cutting rates very rapidly. It's a time to start recalibrating monetary policy, avoiding monetary policy being excessively restrictive. But let's not move from an inflation obsession to an employment obsession, which I fear is what's happening in markets right now.
That's exactly where I wanted to go. If you put markets on a couch and you really started to talk to them, I'm serious, everyone's looking for the boogeyman. Yeah. They're all looking for when the next shoe is to drop and why they're missing some sort of harder landing that they're actually experiencing. That's sort of the vibe that you're getting right now. How do you explain that?
I think it's very important to navigate the nuances in terms of the economy today. I wrote this in my recent newsletter where you have to focus on the broad trends across different sectors of the economy. And what we're seeing right now is an environment where we have real disposable income growth that is quite moderate, around 1%. GDI that came out along with GDP was also on the softer side, 1.3% growth on an annualized basis in the second quarter. So the income side of the economy is what has me most concerned. It's not a reason to panic, but it's a reason to understand why consumers are going to be more prudent going forward. Look at the saving rate, 2.9%, the lowest since 2022. The resources that consumers have to spend are more diminished than they were a year ago. So you're going to see a little bit more caution, more judicious spending patterns from consumers, especially at the lower end of the income spectrum. That's going to lead to a slowdown in economic activity. But right now, we're not seeing any signs of a retrenchment in terms of economic activity, and that's because the labor market is still holding up. And business leaders that we speak to are not talking about massive layoffs. They're talking about being more prudent in terms of their hiring and investment decisions in an environment where cost fatigue and high interest rates are still very much part of the picture.
Is there a historical analog that you can kind of provide to people who look at all of the times that the Fed has tried to get ahead of some sort of downturn and failed?
I mean, there are a number of occasions in the past where the Fed has been a little bit late to the game, whether it's as recently as tightening in the face of inflation that was more persistent than expected back in 2021 and 2022, or if you go back to the prior crisis, the financial crisis in 2007, 2008, where again, the Fed was a little bit late to ease monetary policy. There are a number of instances where you can point to the Fed being late to recalibrating monetary policy. But I would point to just before the COVID crisis. Back in 2019, the Fed was said initially, and bad communication, but the Fed said that it was on autopilot with regards to the management of its balance sheet. Then it recalibrated by implementing 3 consecutive 25 basis point rate cuts. That was the right type of move, albeit a little bit late. I think right now what the Fed needs to communicate, now that it has communicated its views on the state of the economy and the state of monetary policy being slightly too restrictive, it needs to focus on the destination of travel, because that will determine the journey, the pace at which it eases and recalibrates monetary policy. We do not need to
In 5 minutes' time now at 8:45 a.m. Eastern Time, we expect comments from Bank of England's Breeden.
Given the underlying state of the economy.
Let's put some numbers on that. So
yes.
Currently 550. What's neutral?
Neutral, I think, is closer to 3%. But neutral, that's neutral today. Who knows what neutral will be in a few months' time? How rapidly do things shift, right? If we are in an environment where we look at the last year and consider the last year we were talking about the last inflation mile being the most difficult.
Yeah.
Look at the conversation today. It's not about inflation anymore. We're within striking distance of the Fed's 2% target. One concern I have is that Fed policymakers are themselves too concerned about getting right back to that target. We're within 50 basis points of that 2% target. Do you want to fight the fight to get back to 2%? Or do you tolerate some band around that 2% target and allow the recalibration of monetary policy, given that underlying demand and underlying labor market trends are softening?
Can you point to some Fed officials that have given you that impression over the last month?
Well, I think Fed Chair Powell was right on point in terms of his Jackson Hole statement. We do not seek or welcome any further weakness in the unemployment market. We do not consider this environment an environment where we need to panic, but we need to respond adequately to inflation risks, to risks to the outlook. That's the type of communication we need to have. The problem, and you mentioned this before I came on, is that not all policymakers are on the same page. You're still talking a lot about gradualism, being methodical, and the drinking game is one that worries me quite a bit because we are in this environment where perhaps you may need to accelerate the pace of easing, but let's pay attention to the outlook, not so much today's conditions or last month's conditions, which tends to be the case for markets.
Greg, when you look at the destination, and you're talking about the neutral rate, but everyone's talking about the end of the year, how does the Fed look at the destination for next year when policies may be very drastic depending on who gets into the White House? I'm thinking of things like tariffs and what that means for inflation. The Peterson Institute says you could see the Fed turn around next year and start hiking again.
Yeah, that's a great question, because right now the Fed is behind the curve when it comes to current economic conditions. I think it should have been easing. We've talked in the past about my perspective that the Fed should have been easing from early this summer, not in September, but earlier in May, June, maybe even July, in terms of starting to recalibrate monetary policy. That's just catching up to the current conditions of today. I'm not talking even about the next 3 or 6 months. I'm talking about today's economic conditions. When you talk about next year, that's another step. So essentially, the Fed is 2 steps behind when it talks about calibrating monetary policy to tomorrow's economic activity. You're absolutely right. There could be a lot of uncertainty in terms of the direction of travel of inflation in tomorrow's economy, where you could have more tariffs, where you could have an environment where there is greater influence on the Fed, where there are restrictions on immigrations that could lift inflationary pressures due to undersupply on the labor front. Those are all conditions that could materialize, but that's the unknown. The Fed does not want to bank on any unknowns at this point. It wants to bank on the known knowns and the next 3 months in terms of the direction of travel of the economy.
Greg, this was smart. It's great to catch up. Thank you, sir. Greg Dacker
Always a pleasure.
Of EY. We are about 45 minutes away from the opening bell. Futures are negative by 0.5%. To continue the conversation, joining us now is Brent Schutte of Northwestern Mutual. Brent, let's extend this conversation. Just how offside is this Federal Reserve?
I'm not for sure they're offsides yet. I mean, I think the Fed's going to cut 25 basis points because they see signs of labor market weakness. And I think those signs have been more pronounced in the last 6 months. And so I don't think they can sit around and continue to wait and say, we don't see it, because it's actually happening underneath the surface. And that's where I think they cut 25 basis points, but I don't think they go fast and I don't think they go hard unless they see some sharp deterioration, because you are later in an economic cycle. And one of the nightmares they have is that they cut too early and they have to hike later, which could hurt people's inflation expectations, because people may believe the Fed doesn't fight inflation any longer.
Shortly expecting comments from Bank of England's Breeden.
In that scenario.
Okay, Brent, let's just go there, because it seems like the tone of the discussion, and this is something that Mohamed El-Erian has talked about, this is a one-mandate Fed at this point. It's about the employment market, not the potential for inflation to revive. How much are you actually adjusting your positioning around the idea that there's more upside risk in inflation right now than currently is being given credence in markets?
It's something we're certainly discussing. I mean, to me, if you look, I'm not for sure that inflation is dead. It has come down. We had a head fake last October, November, where you saw inflation at similar levels to today. The Fed expressed optimism, and then financial markets ripped, and then you saw inflation come back. And so to me, at the end of an economic cycle, the economy is highly sensitive to changes in demand expectations. And that's where I worry that the Fed right now potentially is going to spark another inflation bout, because there are things happening like the market going higher, like people being overweight equities and that sentiment surveys being really high. And I think that could actually bring inflation back later in the cycle here.
When I was talking about putting the market on the couch and kind of analyzing what the anxiety was coming from, I was actually talking about you, Brent. You talk about how they're essential of a Hollywood ending is actually the soft landing, and that's usually what people are hoping for. But you believe there is still another twist that's hanging out there. Is that higher inflation what you're expecting?
Look, I think it's more likely that we still have a recession. I know no one wants to say that any longer, but if you look at the labor market, I mean, it tends to trend, and right now it's fallen by 9/10 on the unemployment rate. I know the non-farm payrolls were strong, but that narrative took a hit the other week, did it not? And so to me, you've seen the labor market weaken, and it tends to not stop at up 0.9%. It tends to trend up to something much higher. And I still think there's a probability that you get that recession, which certainly the market is not priced for. People are incredibly optimistic. The AAII sentiment survey is in the 50s. The CAPE ratio, for example, something that people have forgotten about, is at its third highest level ever, only behind the end of 2021 and then 2000. To get another higher number, you have to go back to 1929. And so there are lots of warning signs right here and lots of reasons to be cautious, and most people aren't right now, and that's my big fear.
So let's have a conversation about capital allocation decisions, Brent. How does that influence your thoughts about making a decision between small versus large caps? And when clients start to ask questions like, I've got this big position in big tech, how defensive will that behave in the economic downturn? What kind of thoughts are you coming up with the team?
This is where I think there's opportunities and things that aren't so obvious to people because they are more economically sensitive, but I think they've been priced that way. And so I mentioned the parts of the market being expensive. I think of things in 3 to 5 year chunks, and valuation tends to have a better probability of providing positive returns or positive outcomes in that time period. I like small and mid cap because they have priced in more of an economic recession. I don't think that means they won't go down, but I don't think I can time that downside and then get back on the upside. And so we are overweight there within the context of being underweight equities as a whole and being more allocated towards fixed income, which I do think the Fed will be able to cut aggressively to find that neutral rate if and when they do see that actual recession. And so fixed income right now with some small and mid cap added on top. And that's where we position our overall portfolios.
Brent, just to be really clear, you believe the risk reward is more compelling in small and mid cap versus large and mega cap tech?
if you stretch your horizons a little bit more beyond the next 1 to 2 months to potentially a couple quarters, yes, I do. I think long-term valuation tends to win. And I know that in this economic cycle, people shrug off valuation just like they did in 2000. And this has so many echoes of that to me. And that's what makes me a little bit more concerned in the near term.
Fascinating. Brent, appreciate the update. Thank you, sir. Brent Schutte there of Northwestern Mutual on small versus large and where we are in equity markets.
And the idea that he's more heavily weighted to fixed income, even though he thinks that people aren't necessarily appreciating the reinflation risks out there. The idea that if the Fed waits long enough, they can cut pretty significantly at the same time that you see some of the more overexpensive areas of the market lag behind.
Who else is getting therapy this morning? Is that what you're offering?
No, I'm offering lots of therapy. You can find me in the green room.
Sit down with Dr. Bramo.
Yeah.
Take a seat.
Come on, it's true. It's like, there's another wrinkle to this story. Da, da, da. I mean, it's true. Exactly. So what is it?
Let's get you an update on stories elsewhere. With your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. Elon Musk's Starlink has reportedly informed Brazil's telecom regulator that it will not comply with a court order to block X until its local accounts are unfrozen. Brazil's Supreme Court ordered the block based on X's allowance of hate messages and false information about the country's electronic voting system. Musk has
according to a poll, UK home prices are to rise 2.5% this year, 3% next year, 4% in 2026, which is up from the 1.8, 3.1 and 4% respectively that was seen in the May poll.
Making behemoths are further eating into the big bank's trading market share. At Citadel Securities, first half net trading revenue rose 81% to just under $5 billion, and it was a 78% rise at Jane Street, according to people familiar. By comparison, Wall Street's biggest bank saw an 18% jump in equity trading revenue. Aston Martin's F1 team is making a big push to sign veteran engineer Adrian Newey. Newey is stepping down from Red Bull early next year after helping to create a car that's dominant on the grid. Aston Martin's billionaire owner, Lawrence Stroll, told Bloomberg he's pulling out all the stops to try to sign Newey.
Adrian is clearly the most talented and gifted individual in Formula One based on his track record and history, in addition to being a hell of a gentleman. So I'd be very excited for Adrian to join our team.
Newey is in high demand and has yet to announce his next move. And that's your brief. John.
Looked like he was in Venice. It's quite a life. Danny, thank you. Thanks for this morning. I think we should mention this. Ferrari, Monza, first time since 2019. Beautiful thing. Did you watch that over the weekend?
We should mention this,
we
really?
Should mention that.
All right. We should just happen to mention that Ferrari is way better. That's for John Farrow.
I haven't posted on X in months and made that happen over the weekend. I was compelled to tweet about it.
Can I just say, can you listen to anything that anyone's saying when they've got that kind of backdrop other than just fantasize about what their life is?
What did he say?
No idea, but it was a beautiful backdrop.
Up next on the programme. We'll set you up for the week ahead. They've got quite a life, haven't they? That's up next on the programme. We'll catch up with Bloomberg's Mike McKee in just a moment. You're watching Bloomberg TV.
There are many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
The top names at Jackson Hole are on Bloomberg.
I'd like to see us move toward a more real-time data set. So using new technologies, maybe some of the AI technologies, maybe we get better data as we move forward, but we've got to really focus on that with our economists and our analysts about, where's the data coming from and can we rely on it?
Nobody covers Jackson Hole like Bloomberg. Context changes everything.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest, weekdays at 9 a.m. Eastern, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Lisa's on form this morning, that's for sure. 37 minutes away from the cash open. Equity futures right now negative by 0.5%. Looking at the bond market, yields lower by 2 basis points, the 10-year 388.24. Here's the trading diary, the week ahead. Your calendar shaping up as follows: 9:45 Eastern, S&P Global US Manufacturing PMIs, the big one at 10 a.m. ISM data. Tomorrow, jolts and durable goods, plus the Fed's beige book at 2 p.m. Thursday, ADP employment data, another round of claims and another ISM, this time on services. And the main event on Friday is the August payrolls report. Mike McKee with us around a table. Good morning, Michael.
Good morning.
What are you looking for on Friday?
Friday is the day, and we're looking to see if the forecasts are correct that we get a rebound in job growth to somewhere in the 160 range, and we see unemployment fall a tick. If that happens, then people are going to feel a whole lot better. But beyond the jobs report, the most important thing that's going to happen this week is 11 o'clock on Friday morning. Fed Governor Chris Waller speaks, and he's going to be John Williams is giving some introductory remarks, but Chris Waller is going to probably set the tone for how people trade going into the Fed meeting in the 50-25, because you're getting a reaction from the guy at the Fed that everybody pays attention to. So that's what I would watch for.
If the Fed does cut by 50 basis points because of a small difference in the headline jobs number or the unemployment rate, how can they argue they're not data point dependent?
Well, they are, according to Jay Powell, not data point dependent, they're data dependent, the totality of the data. And they would look at other numbers. And remember, we get a CPI report next week, too, that comes before the Fed meeting. So they would have something else to hang whatever they do on. But they've got to get through to that point. And what's interesting is this week, I was talking to somebody here who was out last week who said, I don't know if I'm behind or not. I said, nothing's happened in the economy, and nothing's going to happen until Friday's jobs report, because we have all these numbers we think are important this week, but every one of them is going to be, here's the number, let's talk about how it affects Friday, and thinking about Friday. So it's a little bit like, for Anne-Marie, all the political stuff is going to be about, well, let's talk about how it affects the debate coming up next week. So everybody's got a lot to wait for. We got to show up because we get paid, but we'll be,
Mike, Marvin Lowe talked about the fact that 50 would look political. How bad does the number need to be for them to not look political?
Oh, I don't think they're going to worry about that. I think the issue is going to be more of what Lisa was talking about, the idea that then people get scared that there's something wrong with the economy. Greg Gako was making the same point. Yeah. You don't want to go too far out without having something to point to say this is why we did it. There's enough people who are probably against it on the board that they don't, unless we get a surprise on Friday.
Does the quiet period start on Saturday?
It does.
Oh, very small window for Fed speak then. Michael, thank you. Coming up tomorrow, Russ Kostruck of BlackRock, Laurie Heinel of State Street, and the co-CEOs of On Running, Martin Hoffman and Mark Morrow. Looking forward to all of that from New York City. Thank you for choosing Bloomberg TV, and welcome back from a long weekend stateside. This was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
In terms of how we should deal with the challenges that are, facing the world and also internally, I think it's just an opportunity also, an angle. And you could see that in a lot of activities that are picking up in this region, simply because it's a region that is actually a bright spot amongst very few in the world today. And people always talk about the flavor of the month. Actually, I don't want to sound too, large-headed, but actually we will be the flavor of decades. We are determined, we have long-term plans, and we are very clear and committed on our commitment to the investment community at large. I'm not talking about one individual country, but at large in the GCC, that we mean business, that we are willing to take every step possible to make it easier for investors to do business in the region, that we are willing to do a lot of structural changes, including actually making it very predictable, very consistent policies.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Our first job is to intimately understand and anticipate the consumer's needs.
It's an incredibly fun job for sure. To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
Competition's moving faster. The world is moving faster.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. New episode September 11th, only on Bloomberg. Brought to you by Workday.
We are looking at futures pointed down, but we're 20 points away from an all-time high. So if that turns around, it would be very interesting. I'm Matt Miller.
I'm Shonali Bassett.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Seeing here, ECB bond holdings under PEPP at 1.64 trillion euros as of last week, with the ECB settled 302.8 billion euros of corporate bond purchases, and the ECB settled 2.217. So that's 2,217.2 billion euros of public sector bond purchases.
We're going to get into all of that, but let's take a look at where markets are trading. 30 minutes until the bells ring. You can see it's not too pretty pre-market on this first trading day of September. Of course, we had a big finish to Friday and to August, not reflected in what you see right now. The S&P 500 down about 0.6% pre-market. A little bit more so if you take a look at the NASDAQ 100. A little bit of a rally building in the bond market all the while. The 10-year Treasury yield currently down about 2 basis points, Matt.
Yeah, it looks like traders could be worried about the ISM PMIs coming out today. Here's a look at what we've seen in terms of the PMIs. Manufacturing is in white and services is in blue. Services has been coming back, manufacturing on its way down. We expect a little bit of a bounce today, but if there's a disappointment, it could mean you see more red arrows on equities.
There are certainly traders riding on that, but there's also some stocks to watch before the market opens. Traders are riding on U.S. steel lower. It is slumping after Kamala Harris now joins Joe Biden and Donald Trump, saying that it should remain American-owned. Japan's Nippon Steel is eyeing to take over the company, and you have U.S. Steel now lessening its losses on the morning, but still down 3.7% pre-market. Boeing also dropping after being downgraded by Wells Fargo from equal weight to underweight. It got a street low price target of $119, which implies a 32% drop from Friday's close, Matt.
Yeah, a lot of calls today. Actually, B of A and Wells Fargo both downgraded at Deutsche Bank, raised at Deutsche Bank. JP Morgan was downgraded there. Really, it's all about September. A lot has been said about this being the worst month for equities historically. This chart shows that.
Chart, as you
what a beautiful chart. So It's been a tough month for stocks historically, and now that we're all at all-time highs, Katie, I feel like there's a lot of room for investors to take profit.
Yeah, big time. And I'll note that that's a world chart too. That's MSCI World Index. So it's not just the U.S. where you see this phenomenon, but you think about this specific September, and there's a lot of known unknowns. Just this week alone, you think about the triple whammy that we're going to get when it comes to the U.S. labor market. We have JOLTS, we have jobless claims, and we have the jobs report.
We sure do, and you also have to think about the positioning even headed into those reports. It was actually hedge funds that led a lot of that net selling last week at that last week of August. But you have to remember that manager at T. Rowe that called the yen really spiking and shocking the market here sees another leg to come. You have to wonder if that carry trade or other leveraged positions like that can see more unwinds as we see this volatility, guys.
Yeah, absolutely. And we have the yen rising up again today. Right now, you can only buy 145 yen for a U.S. dollar. Jim Caron, CIO of the Portfolio Solutions Group at Morgan Stanley Investment Management, joins us now. So, Jim, there's the setup. It could be a tough month. Is it best just to take your profits and hide out through September?
Well, good morning. And let me also point out on that chart you just showed is that after September, November is one of the strongest months if you look back at a seasonal period. So to answer your question directly, yes, I think it is time to take profits. And that's exactly what we are doing within Morgan Stanley Investment Management in the Portfolio Solutions Group, is that we had been overweight. We got overweight in the weakness in early August, and we took those positions off. Not because we're turning bearish. I want to be very clear about this. Not because we're turning bearish, but because it's a strategy for us to buy weakness. We still think that we are in a structurally positive market, and that if we get some weakness, that it's going to be an opportunity to buy. So therefore, we want to be able to keep our powder dry. So if we have an event like in September where you do get lower prices, then we're in a very comfortable position to then make it up and really try to press it into the end of the year, going into October and especially that November positive seasonal period.
So keeping your powder dry, buy on weakness. Let's get specific here, though. When you're talking about weakness that you would potentially act upon, are we talking just a blanket recommendation there? Are you looking at specific segments of the market here?
Yeah, that's a really good question. I mean, so the way that we think about this is we're still going to be led by growth in tech, if you ask me, right? So if there's weakness in the market, it's more likely to come in the large cap, particularly the tech sector. That's just the highest part of the index, right? So if you get weakness, that's generally what starts to get hit the hardest. So therefore, I also would think that that actually starts to recover the best. However, what we are starting to realize and we're starting to observe is that there has been a broadening of the market. So there's great opportunities to buy the real estate sector, to buy materials, to buy energy. These are all great sectors too, even to start to look at industrials, healthcare. So it is somewhat of a blanket statement, but if you really want to press it, I think that you're going to probably buy the stuff that went down the hardest, and that if there is a correction, then I would argue that it would likely come from the tech side.
Jim, when you think about the week ahead, of course, there's a lot of economic data starting with just about an hour from now with that ISM data. And if you look at the Bloomberg economic projections here, the panel that Bloomberg reads from all economists here, or a subset of one at least, almost all of them are projecting a rebound here from a poor reading last month. At the same time, you see the labor market starting to weaken. How do you read the macro into your investment decisions at this point, given that there's such divergence in views?
Yeah, this is where there's some inconsistency, I think, in the risk skew that's in the markets right now. Because I think that the equity markets today are asymmetrically skewed to the downside, at least over the near term at these current price levels. Let me explain that. If we get a payroll number, that's the number everybody's going to really focus on this week, that comes out to be weaker. Consensus is somewhere around 165,000 jobs, 4.2% unemployment rate. If that comes out even a touch weaker, I think that equities can move disproportionately down more than they can actually move up. So I think the market is going to really focus on the bad news right now. So bad news is really bad news. And that is probably what creates the correction that I think is going to occur in September. That's also true with ISMs. It's also true with, if we want to look at jobless claims, the JOLTS data, all of these other data series that are coming out in the near term. I think there's an asymmetry in risk for equities to see this as more negative. We also have to recognize that the valuations, I mean, we're trading on right now, 2025, about 14% earnings per share growth over 2024. The market is priced to, I'd say, close to perfection, and in a reasonable risk range. I'd say 5,200 to 5,650 is my range. I think we're at the top of that range for right now, unless we get new information.
Well, we saw that with NVIDIA, Jim, right? I mean, they beat, and yet I think on the day they were down 6.5%. I was in Spain on the beach reading my Bloomberg. But is that going to be more of a problem for those big mega cap tech stocks? I mean, are the, what do we call them, Magnificent Seven stocks going to take a bigger hit on bad news? Will you see a rotation into the stocks that haven't gained as much ground?
Yes, I think that's exactly it. I mean, look, the news on NVIDIA wasn't terrible, right? It's just about future earnings and how are they going to keep pace. I think the markets from a macro perspective are in a period of normalization. If I just look at the macro fundamentals, unemployment is slowing. If you have, growth is supposed to slow. This is what's supposed to happen when the Fed hikes rates as much as they did. And what that also translates into is a normalization in the growth rate of earnings of these mega stock tech companies that are out there. The market doesn't like that. The market wants to be surprised to the upside every single earnings report. And I think that just dialing that back, even to a more normal run rate, which is what I think NVIDIA did, is viewed as a disappointment. So that's why I'm saying that there's an asymmetry in the risk profile that's in the market, where the market is going to react more to even slightly negative news than it will act to slightly positive news. And that's what makes us defensive right now. And that's why we've dialed back our risk in our portfolios after taking it up in early August.
Well, to be fair, we didn't just see that dynamic play out with just NVIDIA. It happened with Abercrombie and Fitch as well. I mean, great numbers, really brutal reaction in the stock, at least on that specific day that they reported. So really an interesting juncture that we're at when it comes to market sentiment and how earnings are being treated. But I want to go into the specifics of your views right now. You mentioned that you've moderated when it comes to U.S. equities. You've shifted to that neutral stance when it comes to the U.S. Then I take a look at your European call, and you have an overweight to European equities. So talk us through that. Of course, the U.S., a little bit neutral here, but then you take a look overseas, and it seems like you're a bit more positive there.
Yeah, so I think in this stage right now, with the ECB likely to cut interest rates, and most of our overweight in Europe is based on financials. And we think that sector has been undervalued. It has been doing very well, actually, more recently. But we still think that there's more room to run there. We think curves can steepen. We think that as inflation gets more contained in Europe, that I think that the
U.S. crude
financial
futures
sector can
losses
actually
falling
start
at
to do a
$2
bit
to
better. So that's
$71.55 a barrel.
primarily where we are there. And I think that the valuation, as we move from these high PE sectors like tech and things like that, other sectors that are a bit more value orientated, and that's Europe. Europe is much more of a value equity market, start to get a little bit more of a shine towards them. And that's why we've moved there. And the other place that we're still positive on is Japan. Japanese equities. I know we're talking about dollar yen. We were talking about it earlier in the show. And I think it's likely to be in a range, and dollar yen may even weaken a little bit. But I think that Japan is in a secular bull market. They finally have inflation. They're going to get nominal growth, which is nominal GDP, nominal earnings, and that tends to boost equity prices. And I also think that globally, we're going to be moving into a very large capex cycle over the very long term, which is going to significantly favor the Japanese economy and the Japanese equity markets as a result.
Jim, as we've been speaking, you've seen Brent crude drop below $75, erasing gains for all of this year. The energy sector was something that really propped up the stock market in the last couple of years. And you also have copper, very volatile, sending kind of signals under the market that perhaps things are really slowing. A lot of that coming from China, but of course, a bellwether here on how bad things can really get. Do you think that these commodities are telling us a story that other markets are not really screaming right now?
Yeah, there's a lot of inconsistencies, and we are slowing. And this is part of the point here, is that I view this as a normalization. And when you look at things like copper, when you look at commodities like oil, these things tend to be hyper cyclical. So if there's any slowdown that's occurring today, or we think it's going to occur today, the biggest impact you're going to get is in those futures contracts, in the metals, and in energy. So I think that's what the market is pricing in, is that we are going into a slowing period. I mean, make no mistake about it. And that's why I'm a little skeptical on today's current level of U.S. equities, is because we're priced to have 14% earnings growth going into next year. And I'm not seeing a big global cyclical recovery based on copper, based on oil, or anything else like that. It doesn't mean that we're going to have a bad year. It just, maybe we have 10% growth in earnings. But the point, though, is that we probably do need to take a bit of a breather from current levels where we are today.
Jim, we thank you so much for your time. That is Jim Caron, CIO of Portfolio Solutions Group at Morgan Stanley Investment Management. Thank you for taking us across your views in a complicated market to start a tough September, what is traditionally a down September. We're going to check on futures because we are starting this down September on a down day. We have 6/10 now, 1% lower on the S&P pre-market. NASDAQ 100 futures down 0.7%, and Russell 2000 futures down 1%. Remember, this started August as the favorite trade. You are seeing the views changing before your eyes. Flip up the board here. Look at commodities as well. We're going to take a look here at Brent, WTI, and gas, because amazingly, Brent is erasing its gains for all of this year. And you really do have movement today alone. Brent crude now down 3.7%, below a 75 handle. New York crude at 3.2% lower at 71. Natural gas futures trading about 0.2% lower. Now coming up, presidential candidates throw cold water on Nippon Steel's plan to take over U.S. Steel. This has been a long time coming, but of course, yet another candidate seeking to squash the deal. Details next. This is Bloomberg.
If you look at Reels, Instagram and Facebook Reels, both immensely popular, both growing a lot, those are really working not because the short form video format is special and new. It's actually been around for a long time. You remember Vine and the early days of short form video. It's because of GPUs, it's because of large models, it's because of advancements in recommendation systems. ByteDance is one of the really great companies at this. We also have made an immense investment in harnessing the power of modern models, large data sets, and modern hardware, NVIDIA's hardware and our own hardware, to build recommendations that make the products better and more engaging. Our advertising system is built on modern AI recommendation technology. So I always think it's interesting when people remark that like AI just arrived. It's actually powering already today a huge amount of the engagement and quality of products.
Bringing you up-to-the-minute business news whenever and wherever it happens. I'm Anne-Marie Herder in Ukraine, and this is Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how
we're faring when it comes to Asian markets.
It's getting out of high interest to look at what's making headlines around the world. President Biden tells reporters he plans to speak to Israeli Prime Minister Benjamin Netanyahu, quote, eventually. Over the weekend, the Washington Post reported that the U.S. plans to present a take-it-or-leave-it ceasefire deal to all parties soon. Biden's remarks came after 6 Israeli hostages were found executed in a Gaza tunnel, sparking protests in Israel over the lack of a ceasefire deal. And the U.S. is laying the groundwork for new sanctions on key Venezuelan officials following Nicolas Maduro's disputed election win in July. The Treasury Department is close to announcing 15 individual sanctions, while the State Department plans to impose visa restrictions on 34 relatives of government officials. Vice President Kamala Harris is moving $24.5 million down ballot to help candidates in races for the Senate, the House, and state legislatures. Harris's campaign said that she believes the race is about mobilizing the entire country. Harris has raised over $500 million since President Biden withdrew from the race. Katie?
Well, sticking with politics, let's check in on shares of U.S. Steels under pressure this morning, currently down about 3.5%. That was 7% earlier in the pre-market session. And the focus here is that Nippon Steel's plans to take over the company being squashed. This is what Kamala Harris had to say about it yesterday.
U.S. Steel is an historic American company, and it is vital for our nation to maintain strong American steel companies. And I couldn't agree more with President Biden. U.S. Steel should remain American-owned and American-operated.
And Simon Casey, he is a Bloomberg managing editor for energy and commodities. He joins us now. And Simon, in a lot of ways, this shouldn't be a surprise. I know there was hope that Kamala Harris would sort of reverse course here and take a divergence from President Biden's stance, but not the case.
Well, no, I mean, so far on a whole host of issues, we're still waiting for Harris to come out and state her position on a variety of policies. So this is the first time that she's talked publicly about U.S. Steel. And yes, you're right. It's not really a surprise. She's hewed very close to the line that Biden's taken so far. And of course, Trump has come out and J.D. Vance has come out and said U.S. Steel should remain in American hands.
The politics here are so clear, but what about the reality, Simon? If they are not acquired by Nippon, what is the fate of U.S. Steel, especially because
Brent crude futures extend losses, falling $3 to $74.52 a barrel.
Is that fair to say?
I think that is fair to say. I think.
And so at 9:30 a.m. Eastern Time, we do see the release of the Canadian manufacturing PMI on the prior 47.8.
It's going its own way now. If Nippon Steel is unsuccessful, it's blocked. In fact, if there's a CFIUS review at the moment, if the CFIUS review comes through and says, we recommend the president blocks this deal, who else can come in? There's a vanishingly small sort of number of foreign players, and it's tough out there in the steel industry. It's been tough for decades.
Why would they want it anyway, Simon? I mean, if U.S. Steel can't do well producing steel in America, why would Japan want to buy U.S. Steel and do poorly producing steel in America?
It's a very good question. If you remember when the bid came, when the deal was announced, it took us all by surprise. No one really saw this coming. But the rationale, as it is Nippon Steel does see demand for U.S. steel if infrastructure spending keeps increasing under the current incentives under the Biden administration has passed. Also, in a future, well, its reality is it's happening right now. In effect, tariffs are increasing in a very high tariff world, a world where we see a lot of trade tensions. These walls go up. U.S. Steel does have a certain amount of defense from imported steel. But U.S. Steel is a relatively small player in the world. I think something like the 24th largest steel producer in the world. It's a minnow. Nippon Steel is number 4. So it has commensurately the larger balance sheet, the more investment, the technology it can bring to bear. And in fact, Nippon Steel came out last week with an announcement that said, post-merger, assuming this merger goes through, we're going to commit an extra, I think it was $1.3 billion of investment. So that's what they're pledging to put into place if this deal goes through.
30 seconds here, but is this a matter of just rhetoric here? Because we have seen Japanese companies own U.S. companies. We're talking about 7-Eleven, once based in Texas, now owned by a Japanese company. No one seemed to have a problem there. Why is this one a bigger issue?
It's touched a real nerve. It's in Pennsylvania. That's what Harris was speaking yesterday. So it's the swing state, arguably. The Steelworkers Union, a very powerful, very historic union, has come out and clearly said we are against this deal. And so, yeah, it's very difficult, really, for either party to come out and sort of deviate from the line that they're both taking at the moment.
Simon, we thank you so very much for your time. This is very much a matter of politics at this point and very unclear future for this company ahead. Coming up, we're going to switch gears. We're going to take a look at companies making the most buzz today, including the return of a little band from Manchester and anger at ticket sellers. Social climbers up next. This is Bloomberg.
Seeing Brent crude tumble below $75 a barrel, erasing 2024 gains.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
All right, it's time now for Social Climbers. The company's making waves this morning. And first up, Hewlett-Packard says it intends to pursue a $4 billion damages claim against the estate of the late British tech tycoon Mike Lynch. HPE, of course, won a British civil case over the collapse of Lynch's company Autonomy and is awaiting a ruling on how much it is owed. Next up, Tesla's shipments from its Shanghai factory rose for a second straight month in August. Preliminary data from China's Passenger Car Association shows that the EV maker shipped over 86,000 Model 3 sedans and Model Y SUVs. That's up roughly 3% from a year earlier and points to some momentum for the plant following a first half slowdown. And fans of Oasis are looking back in anger at Ticketmaster thanks to prices skyrocketing for the group's highly anticipated reunion tour. The ticket platform was using dynamic prices to set ticket prices, which adjust prices based on real-time demand from the market. And of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal, Matt.
I feel like, shouldn't ticket prices be set by an auction process anyway, since they all end up on the secondary market and, you know, bid for on StubHub?
Is it fair for me to say I could see you being one of those guys standing outside a Yankee Stadium selling tickets?
That's a scalper. That's what we call scalpers.
Selling, not buying.
Do I look like a scalper? All right, coming up.
Seeing here Bank of America Global Research cuts China's GDP growth forecast for 2024 to 4.8% versus the prior forecast of 5%. And so we are obviously less than 5 minutes away now until we get our Canadian manufacturing PMI, which is on the prior 47.8.
This is Bloomberg.
Also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of I guess the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well...
So 1 minute remaining now to the market on open imbalance and the US cash equity open, as well as the Canadian manufacturing PMI.
But I was still intrigued about team ownership.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Seconds.
Moments away from the start of trading, the first day of a shortened week, the first day of a month people say is the worst for stocks.
49 spot 5, 49 spot 5. Looking now to the market on open imbalance. S&P 500, 300 million to the sell side. NASDAQ 100, 3.5 million to the buy side. Dow 30 stocks are 55 million to the sell side. Mag 7 stocks flat, 0 million.
I was looking at an average over the last 29 years, and September was off in that average about 2/3 of 1%, making it barely the worst month of the year. This month could be different, of course, but we're at almost all-time highs on stocks, Katie, and we have a ton of economic data that people are going to be watching super closely. ISM today, you've got JOLTS tomorrow, jobless claims on Thursday, NFP on Friday, so a lot could happen this week. What are we looking at right now as the averages kick off?
A lot could happen, to your point. We get a ton of labor market data this week, but at least for right now, what's happening is a downdraft. When you take a look at the U.S. stock market, the S&P 500 currently off about 0.6% in the pre-market. Big tech, a little bit more here, of course, 0.8%. There's been a lot of questioning over big tech's leadership in this market. Of course, we'll have to see how the rest of the day goes. Then you take a look at the small caps, your Russell 2000 index, of course, the sort of north star of a lot of consternation over leadership. Right now, it's your biggest loser, down about 0.9%. But let's get to some single stock action right now. And we have to start with U.S. Steel, because Kamala Harris says just yesterday that the company should remain domestically owned and operating, challenging Nippon Steel's proposed takeover. Remember, Trump and Biden have similar stances on the deal. There had been some optimism that maybe Kamala Harris would take a different tack. Not the case. You take a look at shares right now, Shonali, down 5%.
Katie, it's incredible. The commodities trade really driving the equities trade today, because I'm also looking at Freeport-McMoRan. Goldman Sachs has exited its long-term bullish position on copper, citing weakness in China. Goldman's price forecast for 2025 is now $5,000 lower, and you have Freeport-McMoRan really plunging here in conjunction. You have it down almost 5% lower this morning, really 4.8% as the morning opens, Matt.
All right, Boeing was downgraded by Wells Fargo, giving it the lowest price target on the street. And Airbus, its only rival, is having some problems as well. Bloomberg's Abigail Doolittle has the details on these two big plane makers. Abigail?
Yeah, not surprisingly, both of these shares are down on these respective pieces of news. And I would say that Airbus may be down a little bit in sympathy with Boeing on the broader downgrade from Wells Fargo on Boeing relative to the company's free cash flow position and the possibility that it may peak peak in 2027. Analyst Matthew Aker seeing the cash opportunity out the door. Airbus, though, the news that you're talking about there, Cathay Pacific Airlines, they have found many issues. I think a third of their planes that they would fly with the fuel line. So they have actually grounded multiple flights. Those shares down 1%, Boeing down 4.1%. For Boeing, the problems are so many that this is just the worst day in a couple of weeks. It's not even that big of a drop. Let's take a look at that free cash flow that I was talking about, though, because for Airbus, it's not an issue. If we take a look at free cash flow in white for Airbus and in blue here for Boeing, Boeing has essentially burned through about $7 billion in free cash flow this year.
Bank of America cuts the global GDP growth forecast for this year to 3.1% from 3.2%.
You know, in the numbers and all of the headline risk, the perception risk with Boeing, well, Boeing is really suffering from a performance standpoint. If we compare it to both of the S&P 500 and an airline production index, we are going to see a bit of a decline here, some underperformance for the shares of Boeing, which since its 2019 peak, Shanali, down more than 60%.
Abby, thank you so much for those movers. Joining us now to broaden out the conversation is Tracy McMillian, Wells Fargo Investment Institute Head of Global Asset Allocation Strategy. And it's interesting, you see a lot of individual movers under the surface. We have been seeing this become more and more so a stock pickers market, but more so lately, you've also seen many investors start to think about this in terms of sectors. Where are certain sectors really starting to feel that weakness in the economy? Where do you start taking chips off the table, Tracy?
Yes, good morning and thank you. So we think that the areas to be most cautious of are areas like consumer staples, REITs, and utilities. So those are the sectors where we think that the higher interest rates will continue to play a role in investors viewing those sectors as the weaker components of the market. So instead of those sectors, we would focus our attention on things like communication services, cyclical sectors like energy.
In 10 minutes' time now at 9:45 a.m. Eastern Time, we see the release of the US S&P Manufacturing PMI August final. Forecast 48.1 on the prior 48, with a range of 48.2 to 48 expected.
That's splitting hairs, that we know that a series of interest rate cuts are coming from the Federal Reserve. But even so, I mean, piecing together what you're saying here, it sounds like that's not going to be enough to help the parts of the market that really need big rate cuts.
That is true, yes, at least not initially. And at this point, we do expect 100 basis points in cuts through the end of the year. Whether we get 50 in September or 50 in November or December, we don't think that matters as much as the fact that the Fed is starting its rate cutting phase. And as we move into 2025, we expect another 75 basis points. And we think that all of that combined will start to help, especially the cyclical sectors, areas of the market that have been really beaten down during this period of high rates. As rates start to fall, we think things like small caps are also going to benefit.
I mean, it seems like it'll be helpful to the stock market. But I'm not sure about the underlying economy. There was a great piece in the New York Times this weekend by Gina Smilik pointing out that the housing market, for example, needs a lot more than rate cuts. The problem is high labor costs, high material costs. I'm thinking for the auto industry, it's the same problem. Aren't there some of these, cyclical, some of these industries that, need more government policy changes than rate cuts to help growth?
That is possible in certain sectors like housing in particular. That is an area where we often do see fiscal policy stepping in to assist homeowners, home buyers, to assist builders. So it's possible that could be one of the factors. But really what we're seeing when rates do start to tick down is that more buyers are stepping into the markets. And really the issue with the housing market as we see it is more one of supply and lack of turnover. So, lower rates are really going to start to loosen up the housing market, and that could be another positive component for the economy as a whole in 2025.
Tracy, I'd love to talk a little bit about what's been popular in the market lately, because even though you have seen that worry about where valuations are in the broader S&P 500, worries about where those high flyers really stand, after we've seen such a run-up this year, you've actually had the
And Brent crude falls 4.1% to around $74.33 a barrel. That's the lowest level this year.
Why are there no valuation concerns there if you believe the economy is going to slow down?
Yeah, so what we see in terms of the macro, let's just start there, is more of a saucer-shaped growth pattern through the end of this year. So, the economy's starting to slow, not dip into recession, and then starting to gradually improve in 2025. So in that type of environment, we do think that cyclical assets, cyclical sectors could benefit and broaden out the positive returns that we've seen in the market so far this year.
And Tracy, it feels like one of the themes, at least of this morning, is known unknowns. When it comes to this week, of course, all the data events this month, and then looking over the course of the year. Obviously, we are just several months away from the U.S. election. How much of a downside risk is that for investors? How much does a long-term investor really need to be thinking about what happens in early November?
Yeah, so long-term investors don't really need to be focused on the day-to-day or the month-to-month choppiness that we see in markets. In fact, if you're dollar cost averaging in, that choppiness, those downturns are great opportunities to invest for the long term. But most investors are thinking about the nearer term, and they're thinking about the potential for some volatility around the elections. As we move into September, October, in an election year, that does tend to be a period of greater uncertainty because some unanswered questions start to come into view. Questions about fiscal policy, questions about trade policy. What's the likely path towards resolution of the debt ceiling?
It's been 5 minutes time now at 9:45 a.m. Eastern Time. We see the release of the US S&P manufacturing PMI August final. Forecast 48 spot 1 on the prior 48, with a range of 48 spot 2 to 48.
That, of course, is Tracy McMillan of Wells Fargo Investment Institute. Now, coming up, Goldman Sachs abandons its bullish bet on copper. Details next. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning from our world headquarters in New York. I'm Manus Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stradwatts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
This is Bloomberg Open Interest. Quick check on stocks this morning. We are looking at a down day, the first trading day of September, the first
1 minute remaining.
Of a shortened week in which we have a lot of economic data due. Today, in just about 17 minutes, we're going to get ISM manufacturing and PMIs, and it looks like that could really move the market. Take a look at the energy prices here, because we did have
the VIX hits a 1 week high, last up 1.43 at 16.98.
$75 a barrel. So the global benchmark trading at 74.44. NYMEX crude down now below $71 a barrel, and copper, after a Goldman call, falling more than 2% on concern about less demand out of China. Katie?
And we'll get into that copper call in just a minute, but it's time now for our top calls. Some of the analyst action in focus this morning, and first up, Benchmark is downgrading Sphere Entertainment to
10
sell.
seconds.
Analyst Mike Hickey expressing concern on the scalability of the Sphere, as well as its high production costs and a potentially underwhelming profitability outlook. Next up, we have Morgan Stanley cutting
47.9, 47.9, lower than forecast, 48.1.
from $205. Morgan Stanley citing uncertainty related to antitrust actions. And finally, Evercore raising Southwest to outperform. The firm citing the, quote, long-awaited transition to capacity discipline, new revenue
So looking at comments from Williamson, who's the chief economist at S&P Global Markets, says a further downward lurch in the PMI points to the manufacturing sector acting as an increased drag on the economy midway through the third quarter. Forward-looking indicators suggest this drag could intensify in the coming months.
Price forecast for copper by almost $5,000. Goldman cited shrinking demand in China, but of course you see broader ramifications. Bloomberg Intelligence senior commodity.
So the US manufacturing production decreased for the first time in 7 months during August, as sales continued to fall amid increasing reports of demand weakness. Worth noting that it does say here a renewed reduction in employment was also recorded amid spare capacity in the sector.
I think are just pointing out the obvious. A lot of copper traders have figured out a little while ago, and I think copper is just following what you're seeing happening in China. The data this weekend was horrible, but it's been the trend. The question is what stops that trend. PMIs are weaker, the housing market's a problem. Every day I type on the Bloomberg terminal BI China and NI China, it kicks into my macro theme that China is just a rapidly advancing emerging market that's reverting, and copper's right in there. So you mentioned copper. People look at it in tons. I like it in the per pound price because you can overlay it with bond yields and it tells you where things are going. So right now, the 10-year note yield in China, the CGB, is 2.15%. The 10-year note yield in the US is 3.85%. Copper's bouncing on $4.
And we have posted out the US manufacturing PMI August final report on the feed for those interested.
China, right? We don't have a lot of housing starts here in the U.S. as well, Mike. And one of the concerns is materials costs. Now, if these costs come down, does that mean we can start, building more housing stock in the U.S.?
Oh, yes. All the costs are going down.
So again, more color in the report here. It says, as was the case with production, manufacturers saw a renewed decline in employment midway through the third quarter. Staffing levels decreased for the first time in 2024 so far, reflecting falling new orders and lower output.
The question is where they stop. And we see what's happening in the stock market. The stock market basically has to stay up for these things not to continue lower. So I think we're in the process right now of seeking out those low price cures. Copper's a little different because it's global macro and China's in decline. But if you look at all the other commodities, crude oil is probably heading towards $40 a barrel. It's not profound. It's what it's done since 2008 to make lows. Natural gas has already done it in the U.S. It dropped below its cost of production. So the question is, how do we stop this? And basically, you need the Fed to cut really fast and soon and the stock market to stay up. Otherwise, the commodities can do what they normally do, get cheap.
Well, we know the Fed is going to cut soon, TBD when it comes to fast, but I want to compare and contrast copper to gold here, because the second part of Goldman's call was that basically gold is standing out as the commodity where they have the highest confidence in near-term upside, saying that that's the preferred hedge when it comes to geopolitical and financial risk. Does that argument hold water with you?
Oh, absolutely. It's good to see them coming around to the view we pointed out a few years ago. But the key thing about gold is almost always outperforms all the other commodities, particularly copper. But now that gold-copper ratio should continue higher. So on a one-year basis, gold is up about 30%. It's beating the S&P 500. It's definitely beating copper, and the Bloomberg Commodity Index is down about 5%. That's a global recessionary trajectory from commodities, and I don't see what stops it. What's one of the biggest buyers of gold? It's been China. Why? Because China's heavily in decline, and we see that their investment options are declining.
Well, Mike, really appreciate your perspective. That is Mike McGlone of Bloomberg Intelligence joining us from Miami. And of course, later today, catch an interview with veteran commodities analyst Jeff Curry. That's at 3 p.m. Eastern on Bloomberg Markets. But coming up on Open Interest, record haul for two of the largest market-making firms in the U.S. More in today's Wall Street Beat next. This is Bloomberg.
So the S&P 500 energy sector down 2.3% as oil prices extend their fall. Brings us now 10 minutes away from the top of the hour, where we see the release of the US ISM manufacturing PMI for August. Forecast 47.5 on the prior 46.8, with a range of 49.1 to 46. The employment index for prior read of 43.4. Prices paid forecast 52 on the prior 52.9, and new orders saw a prior read of 47.4. With this, we also see the release of the US construction spending month over month, forecast 0.1% on the prior minus 0.3%. In currency now, noting Japan's yen surging 1% to the session high against the dollar.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
So again, we're seeing the yen outperforming here, gaining as Bank of Japan's Governor Ueda reiterated that the central bank will continue to hike rates if the economy and prices meet expectations. This was said in the morning yesterday.
Citadel Securities and Jane Street on track for record revenue hauls. And here with more is Bloomberg Finance reporter Catherine Doherty. Record after record, really, for these guys. And they've made a lot of investments into new areas of trading. What's helping them catch up most with the big Wall Street giants?
So, number one thing, volumes. We saw the big U.S. banks when they reported their first half of the year. Everyone was up. For them, it was 18%. For Citadel and Jane Street, we're seeing a significant jump from a year ago. But I'll also say that last year was a pullback from the year prior. So you see ebbs and flows, but overall across Wall Street, there's just record volumes that we're hitting, and we will be looking to see if the second half of the year is continuing this momentum. But from the looks of how we're starting today and going into the rest of, or to end 2024, it could be that they are notching another record compared to what would be 2022, which was their last records.
Now, by the way, what we're talking about is the money these hedge funds are making for themselves, right?
Market makers,
not the hedge fund
or market makers. But so it's just the revenue that they're bringing in. It's not that they're doing well in terms of portfolios.
They're not making any bets. They're basically facilitating the trades for institutional and retail investors that are looking to buy into securities, ETFs. For Citadel Securities, they've recently entered into corporate bond trading. For Jane Street, they had already been quite dominant in this space, and that's because they started out with their dominance in ETFs. They extended into fixed income. It was a natural expansion for them.
And of course, there's Citadel Securities, which is the market maker, and then you have Citadel, the hedge fund, which is making those big bets. And it's interesting, when you focus on Jane Street, we talk about Citadel all the time. Jane Street seems more secretive, but they did sell a $1.4 billion high-yield bond deal earlier this year, and I feel like that offered an interesting peek into maybe some of their financials, which we haven't really seen before. And it was interesting, I mean, how much of their business, how big and important they are when it comes to the ETF industry in particular.
Absolutely. They are the behemoth in that space. But what's also interesting is because they've been so dominant in ETFs, as I just mentioned, they were able to naturally expand to other asset classes. So they've become quite dominant in fixed income, in corporate bond trading, in portfolio trading within that space. So now
US stocks extend their fall here. S&P down 1% now.
This expansion, is it global expansion? Are they going to look at other asset classes or fine-tune what they're already market making in?
And a fun fact, Citadel Securities had a new executive from Goldman just started days ago, Jim Esposito. So a lot of rumors out there about how soon they'll go public, right? I mean, this is an interesting time to be notching record highs, Katie.
That would certainly be something, definitely one to keep an eye on. That would keep Catherine Doherty to my left very busy. Great to see you, of course, on the first trading day of September. That is Catherine Doherty. Meanwhile, let's take a look at these markets right now. We are open and we are to the downside. You take a look at the markets, of course, the S&P 500 currently down about 1%. The NASDAQ 100 down 1.4% at the moment. So big tech is your big loser because you train your eyes on the Russell 2000 off by about 1%.
In 5 minutes time now at the top of the hour, see the release of the US ISM manufacturing PMI for August. Forecast 47 spot 5 on the prior 46 spot 8 with a range of 49 spot 1 to 46 expected. The employment index saw a prior rate of 43 spot 4. Prices paid forecasted 52 on the prior 52 spot 9, and new orders saw a prior of 47 spot 4. Also see the release of the US construction spending month over month, forecast 0.1% on the prior minus 0.3%.
Sporting Goods, Dollar Tree, and Couche-Tard, but probably more importantly, we get the JOLTS data, and less importantly, the Fed Beige Book. On Thursday, we have Broadcom earnings, but more importantly, and most importantly, you get the jobless claims on Thursday. And then on Friday, the big event of the labor market data, the U.S. jobs report comes out. So we get tomorrow, JOLTS, Thursday, jobless, and then Friday, jobs.
It's like a bunch of appetizers to just get us really excited for Friday's jobs report. It's a great question.
What dessert comes on the weekend?
The iPhone launch on Monday.
Coming up in the next hour, we have a delicious dish for you. Julian Emmanuel joins us, Chief Equity Strategist at Evercore ISI. He thinks we can still get to his, I think, base case scenario, which is 6,000 on the S&P 500. This is Bloomberg.
what legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone.
1 minute remaining. I'll be leading with the US ISM manufacturing PMI.
Try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Ten seconds. $47.2, 47.2, lower than forecast, 47.5. Employment index at 46, which is up from the prior of 43.4. New orders at 44.6, 44.6. Also got the prices paid at 54, higher than forecast, 52. Construction spending month over month at minus 0.3%, lower than forecast, 0.1%.
And as another year of summer travel comes to a close, we'll navigate the headwinds and tailwinds facing the industry with Brian Kelly of The Points Guy. All that and more coming up. But let's take a check on these markets about 30 minutes into the U.S. trading day. It's not pretty, which is fitting for the start of September, which, as we keep telling you, seasonally the worst month for the broader stock market. The S&P 500 currently down about 1%. More so if you take a look at big tech, your NASDAQ 100 off by about 1.5%, totally forgetting that rally that we had on Friday. And a bit of a haven bid underway if you take a look at the bond market. 10-year Treasury yields currently down about 6 basis points. Let me correct myself. There you have it, Matt.
All right, it's confusing, right? Because it's in green.
I would never.
But it's down.
I would never refer to
when
a
an
bond
arrow is facing down.
I know, but it's
the
a rally.
whole thing should be red.
Because price and yield.
I get it. What are we?
Breaking ISM.
Okay,
That's
ISM
why
data.
they're down, guys.
I have posted out the US ISM manufacturing PMI August reports on the feed for anyone interested.
Manufacturing data crossing right at 10 o'clock, and it's a little bit less than had been anticipated, at least in our survey of economists, but it's still better than the prior reading. Let's get over to Bloomberg's Michael McKee with a look at the manufacturing picture in America. Michael?
That's a good read on it, Matt. 47.2 is what the number comes in for the month of August. For July, it was 46.8. So it is a slight improvement, but still below the expansion line of approximately 50. Prices paid is perhaps another concern, up to 54 from 52.9. Interestingly, among the commodities that they are saying is down in price, copper leads the list. So it fits with what you've been talking about this morning. Employment today is not above 50, but it does improve a little bit to 46 from 43.4. We'll get a view on that on Friday in manufacturing employment. Production 44.8 from 45.9. Not good. New orders down 44.6 from 47.4. So basically what it looks like is status quo with the various indicators because they haven't really changed all that much, been in the mid-40s to about 50 for almost a year now, and maybe close to 2 years. So not telling us that there's any significant improvement in manufacturing.
Well, when it comes to the U.S. August ISM manufacturing new orders, I mean, that is the lowest since May 2023. Not a fantastic size and scope, but still
over a year.
Something to note there. And you take a look at the bond market reaction. You have yields accelerating their drop because bonds are rallying, as we just told ourselves again. But how does this change the conversation around September when it comes to 25 versus 50 basis points?
So U.S. Treasury yields slightly pare their declines after the ISM data. A 10-year yield last down 7 basis points at 3.841%.
Had a little bit of a reaction to the S&P PMI, which was a little bit lower than a tenth of a point lower than it was the prior month. And this is what we're going to get all week. You were talking just before the break about the various indicators that lead up to Friday. And what we're going to end up with is a lot of indicators that won't mean anything by themselves, but will get talked about in terms of, well, what does this mean for the jobs report Friday? And that's going to be the key to what the market really decides the Fed is going to do, that and CPI, unless there's some big surprise next week. So at this point, this doesn't change a whole lot. It's pretty much status quo, but we got a lot of data this week that will influence thinking about what happens on Friday.
Status quo, but still driving the bond market. Michael McKee, thank you so much for putting this all into perspective for us. And joining us now, we have the biggest bull on the street, Julian Emanuel of Evercore ISI. He sees the S&P 500 reaching 6,000 by the end of the year. But you look at data like today, and you still wonder, Julian, I have to ask you, despite being so bullish here relative to everyone else, is perhaps on a macro level, the street being a little too bullish on what they're expecting out of economic data, given the negative surprises that we've had of late?
Well, this is part of the ongoing, and we're not saying permanent, but ongoing soft landing scenario, okay? If you look at manufacturing, it has essentially been, as Mike said, in this sort of weakened state for the better part of a year now. And, you know, part of the benefit of China not growing as expected has been the cap on commodity prices, which is a significant tailwind for risk assets in general to a point. But again, there is this expectation that this, you know, you're not going to tip over because of China weakness, and we've seen it in the past, and that's part of where the Fed's calculus comes into play. But for us, this is all part of the fact that the data is likely to be confusing as we go on, and also why we're underweight industrials.
Confusing but soft.
Yeah.
Right? I mean, so the data supports Fed cuts. That's good for the stock market and for your base case. Earnings have been really strong, stronger than expected, which is also good for stocks and good for your base case. I guess positioning is something you could argue about. Are we going to see a yen carry trade unwind again? But that seems to be a tempest in a teapot, if you will, because it sorts itself out after a few weeks. What are the risks?
Brent crude falling to $74, lowest since, lowest this year, on reports of a deal imminent to restart Libyan oil flows.
So there's definitely the psychology around AI because, and again, we didn't expect, you know, blowout to the upside, even though you got reasonably good earnings. But there is this ongoing question about, you know, the use cases of AI, and will that translate into further spend after sort of the hyperscaler CapEx really peaks at the end of next year. Our view is that you had some commentary this earnings season that really start to sort out the use cases. The world's largest physical retailer, for example, talking about their initiatives. You've seen it in other places. But the psychology, whenever you have valuations that are elevated, is going to be a bit more under pressure if the news flow isn't perfect.
Let's talk about some of that pressure. And when does investor patience run out with trying to figure out a use case? Because one of the narratives that emerged during this past earnings season was this frustration with how much a lot of these companies were spending on AI. That's great news, of course, when it comes to the likes of NVIDIA, for example. But then you think about some of the other big tech names really under pressure to basically deliver on what they've been spending. If we enter into next earnings season with that same frustration out there? I mean, do you think that we'd still be flirting with record highs, or is there going to be more frustration?
So going back to the discussion about earnings in general, the great thing about the second quarter was the other 493 stocks in the S&P 500 exhibited earnings growth for the first time in 5 quarters. That's really good. You're seeing that manifest itself in terms of broader participation. The advanced decline line may be esoteric for some, but for us, it continues making new highs, and that usually leads the indexes higher. But to your point, that is likely to
Just noting as well, Eurozone, a government bond yield slightly extending their fall after that US data. That's the German 10-year yield down around 7 basis points at 2.27%, and it was 2.28% earlier.
Bubble, which was clearly a bubble, unwound. And from our point of view, again, remember, we are only 2 years, not even 2 years, since the introduction of ChatGPT. This has legs.
But if you start to get some wobbles around the absolute faith in, of course, big tech and AI, even if you have the other 493 broadening out when it comes to earnings, is that enough to get you to 6,000?
We actually think it is. Look, if you have, large-scale losses in those 7, that's another story entirely. The math of, the weight in the index certainly would be a headwind, but we don't anticipate that happening. Because a lot of what we saw, and going back to the yen carry trade in August, when you have volatility of that kind in the U.S. equity markets, it actually bodes very well on a 1-year forward basis for stocks.
Am I wrong to say it was a tempest in a teapot? Am I downplaying the yen carry trade?
I think you are. There are plenty of people that say that trade still exists and some worries out there. We'll see how choppy August was. You think about the marginal buyer here, and you have some strategists coming out and saying that in the last couple of months, really the marginal buyer was the retail trader. The marginal seller was definitely the hedge funds throughout the course of August. My question is, who's the buyer in this market? When are big institutions actually stepping in and making conviction trades?
Well, I think, again, going back to this volatility episode, it tells you that a lot of active managers really, really degrossed. And going into last week's blockbuster earnings, it basically the analysis was that exposure to technology, it's sort of a double-edged sword. The reason technology has had a soft 3 months, which is very typical, by the way, happened throughout the 1990s. The NASDAQ drew down by average 19% every year between 96 and 00, so typical. But because technology exposure was reduced, it sort of fed into that. So from our point of view, the active managers, particularly if, and I know we'll talk about this in a moment, particularly if there's some more political clarity in a season of record political lack of clarity, that's a positive for the market.
Well, you handled the tease for the next block for us, which is really great. Julian, don't go anywhere. Stick with us. Let's take a look.
What a pro.
I know, right? We should have him on more. Let's take a look, though, at what's moving underneath these markets. We're going to do that with Abigail Doolittle.
Well, let's stick with this topic of volatility, Katie, because, of course, the NASDAQ 100 down 1.4%, the S&P 500 down more than 1%. This is very consistent with what we've seen out of September's over the last 5 years, and frankly, going beyond that. But this is seasonality by a month basis over the last 5 years. And you can see that February tends to be a down month, March basically flat, May down ever so slightly. But take a look at September, down 4.2% on average over the last 5 years. So again, the fact that we have stocks down more than 1% today, very fitting to this type of volatility. Let's see what's ahead, especially with this Fed meeting coming up. As for what's happening beneath the surface, Boeing, this is a piece of the volatility, down 7.9%. This, of course, on that downgrade over at Wells Fargo to underweight from equal weight, setting a price target basically 25% below, 20% below this price right now, having to do with the company's free cash flow and the idea that peak free cash flow could be in 2027, a cash opportunity going out the door, that analyst says. As for another laggard, and this is really the big point drag on the S&P 500 and the NASDAQ, take a look at NVIDIA, really a cliff dive today over the last 4 days since reporting last week, down 12.2%. Of course, it was a good quarter, but it wasn't good enough relative to the companies into that quarter, greater than 150% increase. Too far, too fast, the AI craze. Now we're moderating, and you can make the case that NVIDIA is going to go back below 100. We'll be taking a look at those technicals not so long from now. Let's end on a bright spot, though, and that is Unity Software, the mid-cap software company, up very nicely today, up nearly 10%, an upgrade from Morgan Stanley to overweight from equal weight. The analyst there really likes their Create unit. It's interesting, there is a 10% bear short interest on this stock, Matt. So the bears, the shorts, are probably also contributing to this gain getting out as, again, Morgan Stanley has upgraded shares to an overweight.
How do you, on the terminal, how do you look up short interest? Do you just do the stock and then SI go?
I do DES, description, and then I look on the little left-hand corner where it says short interest, and that's where I look.
All right. We can talk about it.
Lots of different ways.
Yeah. Bloomberg's Abigail Doolittle, thanks very much for that. Coming up, more with Julian Emanuel of Evercore ISI. We'll look at what the White House race, what could the election mean for markets. This is Bloomberg.
Politics to the world of business. Joe Matthew and Keely Lyons deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The top names in business are on Bloomberg.
It's about category creation. You know, today we are a tea drinking nation. Tea penetration is 91%, 93%. We are at 25% of the affluent class. We are at 14-15% of the overall market. I'm confident that if we continue to do what we are good at, in terms of the Starbucks experience, in terms of the coffee expertise, in terms of localizing and innovating, we will get our consumers.
Nobody covers business like Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute business news whenever and wherever it happens. I'm Anne-Marie Herder in Ukraine, and this is Bloomberg.
Now to high interest, to look at what's making headlines around the world. Airbnb is asking New York City officials to scale back regulation that outlawed most of its short-term rental listings. The company says the law failed to deliver on the promise to combat the housing crisis. Instead, travelers are priced out and hosts are struggling. Meanwhile, Aston Martin's Formula One team is pulling out all the stops to sign veteran engineer Adrian Newey. That's according to its billionaire owner, Lawrence Stroll. Here's what he told Bloomberg.
Adrian and I have been talking not only for months, but actually for years. Adrian is clearly the most talented and gifted individual in Formula One based on his track record and history, in addition to being a hell of a gentleman. So I'd be very excited for Adrian to join our
Aussie
team.
dollar
As I
drops
think
1%
every other
against the
Formula
US
One
dollar.
team on the grid would feel exactly the same.
Stroll typically gets what he wants, but the Aston Martin F1 team has been struggling in this year's championship. Vice President Kamala Harris is moving $24.5 million down ballot to help candidates in races for the Senate, the House, and state legislatures. Harris's campaign said that she believes the race is about mobilizing the entire country. Harris has raised over $500 million since President Biden withdrew from the race. Katie?
And let's stick with politics now with Julian Emmanuel. He is Evercore ISI Chief Equity Strategist. I'm going to go to a line in your notes because you write that every presidential election year since 1936, where the S&P 500 was up by 10% or more through Labor Day, saw further gains by year end, even if September and October were weak. So the S&P 500 up about 18% year to date. Is there any reason to think that this cycle could be different?
The only reason one would think it could be different is if there is a prolonged period of lack of clarity after November the 5th. But I would also say the counter to that is the Fed has its meeting scheduled for November the 7th. So they may be on the case to offset that. But if you go back and you think about it, right, you know, the year 2000 was the record lack of clarity that it didn't get decided by the Supreme Court until December. That having been the case, the economy was already starting to show signs of cracking, and you went into a recession in 2001. And part of the reason you did is because the Fed actually waited to cut rates until January of 2001. That's not going to be the case this time.
I've also seen that in at least the last 11 elections, markets are up 6 months after the vote in November. But, you know, previously an inverted yield curve meant a recession. Previously, a jump of 0.5% in the 3-month moving average of unemployment meant a recession. And a lot of rules have been broken sort of post-COVID crisis. Isn't this the time for this to be different?
Which is why we actually, you know, are as vigilant as we are about the signs that this is a more significant top rather than the September seasonal political uncertainty market pullback that we think it is. And part of that is that, you know, when you get down and you look at the employment data, and this week's data is going to be interesting, it just we're not near that recession zone.
Julian, how uncertain is this political cycle when you see the policies, really a maelstrom of controversial policies taking place in both presidential camps here, or presidential candidates? You have Kamala Harris potentially looking to tax unrealized capital gains. You have Trump's tough on China tariff policies here. At the end of the day, for an investor, what do you have to zero in on of the policies that are being proposed?
Well, what I would say is rather than the specific policies, because there's a lot of bluster, it's the implementation part that's the bigger challenge. Key off of this idea that usually markets actually prefer unified government. You go back over 100 years, it's almost 300 basis points per annum outperformance, unified over divided. That is not likely to be the case this time. I think there is a vast preference.
That's so weird, by the way. That's really a weird stat.
No, but think about it, right, is that because unified governments spend more money.
Huh.
And that's...
To that end, how much should investors be watching congressional races? Because at the end of the day, it's Congress that's going to really make the difference here.
Very, very closely from our point of view. And you know, the fact is that it seems like you could actually flip both the House to Democrats and the Senate to Republicans. And I think if you had that, there would be a comfort whoever wins the presidency, because some of these further out policies would be much more challenged to be implemented.
Let's talk about how you trade this, because also looking at your notes, you write that QQQ convexity with the VIX in the teens is a must own for either the traditional September sell-off.
What is QQQ convexity?
That's what I'm going to ask. Put that in layman's terms. I'm thinking about the time I brought up the VVIX and Matt just exploded. So what exactly does that mean?
Well, we think you own puts and calls, okay? Because basically, if you look to next week, if there's more clarity coming out of that debate, say the degree of clarity that we saw after the June 27th debate about what the outcome was likely to be, that could actually send markets up, contravening the typical September seasonal weakness. But I will say this, today really, as much as I like college football and the NFL, why does anyone prefer fall over summer? This happens every September, and for us, this is the way owning option convexity allows you to stay invested through days like this, which could be weeks like this. and be positioned for what we expect to be the typical fourth quarter strength.
Let's talk about timing. Shonali and I were talking to Rebecca Patterson last week, who said that don't put on your election trades until October or until, very, very close to the election, because things could change. When it comes to this convexity call, is this a right now trade?
It is a right now. It's actually been for the last several months, but now, think about it. We were at 65 in the VIX in August, and now we're back in the teens. There's a lot of value there.
All right, Julian, always great to have you on. Hope you'll come back soon. That, of course, is Julian Emanuel. He is Evercore ISI Chief Equity Strategist, and this is Bloomberg.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
All right, let's get a check on these markets about an hour into the U.S. cash session, and it's just not that good looking. You take a look at the S&P 500 down 1.2%. Of course, volume coming back in full force. You think about everyone returning from the Hamptons and wherever else they were over the Labor Day weekend. You take a look at big tech. That's your big loser on the day. The NASDAQ 100 down 1.6% at the moment. Again, we got a rally to end last week on Friday to end the trading month of August, but you're seeing that absolutely dissolve right now. If you're looking for good news, it's that actually the bond market is hedging your losses right now with 10-year yields down 6 basis points. Matt, that is a rally as the price moves inversely.
If you were coming back from someplace further away than the Hamptons,
such as,
and looking to end up in New Jersey,
right,
you might not be back yet. Coming up, we're going to take a look at the travel outlook for the rest of the year. Big delays continue at Newark. We'll speak to Brian Kelly, the Points Guy founder, next. This is Bloomberg.
First of all, global trade, which had adverse consequences that we're learning about to this day, still unleashed an enormous amount of gain for humanity. And with the rise of global trade became the rise of information sharing around the world, which rapidly accelerated the trajectory of mankind. I mean, of note, the Chinese, for example, are leaders in solar. They're leaders in EVs. They're leaders in a number of emerging technologies. In a world which is more splintered, we'll see the gains that the Chinese have achieved in these important areas not shared by the Western countries. And conversely, the United States is a clear leader in AI, along with a number of the European countries. And those gains will not be shared with China and the countries in its sphere of influence. So it's a very clear-cut loss for all of humanity when we have the severing of ties between our countries.
On a practical level, is it getting harder to manage the risks you face?
I think that one has to be aware that there are more tail risks that are harder to ultimately manage.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Trouble at Newark Airport. A radar issue at the airport delaying airliners yesterday. For 30 airliners were delayed. Sorry, the outage caused problems for Labor Day travelers, definitely in America, maybe around the world. For more on the travel industry, Brian Kelly, the Points Guy founder, is with us. The Points Guy helps millions of people around the world travel smarter. I know we use it at home to try and figure out when to exchange Amex points for whatever airline. But in general, Brian, you've become an expert across, the air travel industry. These snags that we see, yesterday in Newark aren't anything compared to what we've seen on other big travel weekends. They seem to get worse and worse, like global warming. What's the problem just in general with airlines these days?
Well, I mean, we desperately need an infrastructure overhaul. With the big government infrastructure bill that was passed by the Biden administration, there definitely have been improvements, but air traffic control specifically, our air traffic control network in the United States is incredibly outdated. And in general, the technology that underpins most of the aviation and the government, the ATC side of things is very old. And we're seeing a simple vendor like CrowdStrike can cripple the entire industry. We've had air traffic control 2 summers ago. The FAA, someone uploaded a wrong file and shut down all air travel for hours. So the system's fragile, and as more and more people are traveling, I anticipate more of these snags. So as a traveler, you need to know how to manage them when they do inevitably happen.
So I've noticed lately that flights are all full, but I thought there was a little bit of overcapacity, which has led to weakness in airline stocks over the summer. Where are we in terms of capacity? I mean, do they have enough planes? Do they have enough seats in the air, or do they have too many seats that are empty in the air?
It's an interesting dynamic. So domestically, there's too much capacity. The low-cost carriers are really, really struggling. JetBlue just posted a surprise profit, but the way they're getting there is by cutting back on new plane purchases. And boy, a lot of their planes, they need a refreshing. So the downside to cutting back on new planes means more maintenance delays down the line. So they may have profitability, but their flyers are going to have more maintenance delays. So the whole industry is really, the Middle Eastern carriers are making a big profit, but it's tough out there, especially domestically. Fares are down 19% from 2019. Well, so it actually is a good time for travelers.
Well, Brian, to stick with the sort of perspective of the airliners for a minute here, we heard from Ryanair's CEO last week at a press conference in London saying that those Boeing delivery delays are costing it millions of ticket sales. I feel like the Ryanair CEO has been particularly vocal when it comes to the impact, the ripple effects of what we're seeing going on with Boeing. But
he has to be the most vocal airline CEO in world history.
Yeah, exactly. But to that point, I mean, would you expect to see more of these types of headlines from other airlines if we continue to see these delays, which seems like that's the base case here?
Yeah, I mean, the U.S. carriers are no different. United Airlines has vocally said, come on, Boeing. Like, I think that was a big impetus behind Boeing finally getting a new CEO. Their customers are at their wits' end. And it's pretty much most of the planes Boeing is supposed to deliver are way delayed. That's causing airlines to lose on profitability because jet fuel, even though it's not completely spiking and it's at reasonable levels, you know, these old planes are gas guzzlers. So all of these profit models the airlines have banked their 2020s growth on are not coming to fruition because they can't add new routes. They can't get those gains in sustainability and increased productivity from these new planes. So yeah, it is a big issue. And I'll also just call out the pilot shortage is another issue that we're going to be seeing more and more of. There simply aren't enough pilots out there, and that's going to become more of an issue, causing more delays for the aviation sector. There are a lot of road bumps to come.
So a lot of strain from the perspective of the airlines. But I mean, how does this filter through to the end customer of tickets when it comes to airfares? Because you talk, of course, about the delays, you talk about the pilot shortage, of course, and at the same time, you have a lot of flyers saying that ticket prices are just too high. But if you have profitability being eroded here for the airlines, what levers do they have to pull?
Well, I mean, for consumers, you know, where consumers are really being hit are on fees. So most major airlines have now raised baggage fees. So while airfare has come down compared to last year, compared to pre-pandemic, consumers are getting hit. And also, when these huge outages happen, you know, we don't have a passenger bill of rights in the U.S. like they do in Europe. So the CrowdStrike outage, for example, millions, you know, not millions, but a lot of travelers had to eat the cost of getting to their final destination, buying other tickets. Delta has said that they'll, you know, try to reimburse people, but the consumer's getting hit in a lot of different directions. So even though fares, you know, it's a relatively okay story for the consumer, there's a lot of road bumps and other costs that they're, being hit with.
We really have to recognize not only are consumers constrained in many ways, so are workers. And you see it by the thousands of people across the hotel industry and the airline industry that are already striking or are planning to soon start striking over pay and other working conditions as well. Ultimately, when you look into the year even further, how might this start to impact the travel industry at this point in time and the ability to travel comfortably?
Well, I think this goes hand in hand with what I was just saying is, you know, especially in hotels, consumers are paying more. So while airfare has stabilized, hotel rates are up and consumers are not getting the same level of service. You know, the hotel industry, I think they've got their hand caught in the cookie jar a little bit. They've rolled back perks. They've rolled back housekeeping. They've gotten consumers paying more for receiving less. And these striking workers today are saying, hey, look, the burden is coming down on us. It's the housekeepers, the chefs, the front office staff. We want more of a share of all of these increase in profits. And, you know, it's only 24 hotels striking this weekend, 10,000 or so employees, but Unite here has 250,000 employees, and they've said that they're willing to start striking across the country. So this could become a recurring theme if these labor disputes aren't solved quickly.
Brian, you kind of highlighted here a multitude of issues when it comes to traveling through the rest of the season. Are you seeing consumers start to make different choices, staycationing perhaps, or doing more things on a local basis, traveling by train, for example?
Absolutely. We've seen a huge increase, especially because gas prices are down from last year. And I think a lot of people who've got stuck in airports, you get stuck once in the airport with kids crying, you're not getting information from the airlines, you will swear you're going to road trip or take that train trip next time. The Pacific Northwest, my parents are in Alaska right now. They did a beautiful train trip. They have had the best time, no flight delays. So I do think that all of these disruptions in air travel, but by and large, consumers are still flying. We had almost 3 million passengers this past Friday. We hit the 3 million daily TSA passengers for 4th of July. So the skies are going to continue to be really crowded. And one final note for passengers out there, there aren't a Bill of Rights for you in the U.S. You can try to go to your airline to get compensation, but people need to go to their credit card company. So many of these premium travel credit cards you're using, the Amex Platinum, Chase Sapphire Reserves, they come with trip delay and cancellation and missing bag coverage. So when the airlines mess up, which they will, always make sure you go to your credit card and see what perks you have there to help you make good when you're out of pocket.
Yeah, that's one of the advantages of being a European citizen. You have a Bill of Rights there. I'm not sure that our Congress is going to deliver that to Americans. Brian, who has the best points deals right now? Because I've seen a real inflation. My wife told me yesterday we had 230,000 points, and I thought, oh, great, that's 2 business class tickets to Europe. But it's not anymore, not by a long shot. Where can you get the best deal on points?
The best deal on points is with foreign frequent flyer programs. So, United, Delta, American, they all have what's called dynamic pricing, meaning you never know how much it's going to cost. And often it's over 200,000 miles just for one-way business class ticket. Consumers need to transfer those Amex, Chase, Capital One points to programs like Air France Flying Blue, where I flew 50,000 miles business class one way. The same flight on Delta was 300,000. So the huge value, Air France, Air Canada, they're all transfer partners of the big US credit card companies. And there are sites like point.me that will actually help you determine where there's availability and which of those credit card transfer partners you should actually transfer your points to.
And Brian, before we let you go, I do want to talk about this concept of over-tourism and the protests that you saw break out specifically in Barcelona in July. I know that, Matt, you just got back from Spain, for example.
But Venice has bad over-tourism. Prague has insane over-tourism.
Exactly.
Yeah.
So, I mean, I'll toss the question to you. I mean, do you think that when you think of some of these popular destinations overseas for Americans, are they getting a little less friendly to tourists? What's your thinking there?
Absolutely. And I encourage people, don't go to destinations where the locals are saying, please don't come here. Or if you really want to go to Barcelona, go in November. Off peak, it's going to be nicer anyway. Remember, Europeans don't love air conditioning like we do. So all these Americans who go to these blazing hot Euro hotspots, it's hot, it's crowded, expensive. So
and there's no ice, at least in Europe.
Yeah. So, I mean, the shoulder season now is, Europe is busy all throughout the fall. But yeah, go to different destinations, spread those tourism dollars around into more rural areas and bed and breakfasts, stay less at the big chains, and spread that tourism dollars to the actual local community so they actually get reimbursed for the annoyance of having tourists in their town.
Matt is looking at me, just nodding, don't go. But I like to think that's because he wants me right here next to him. Yeah. Brian, thank you so much. That is Brian Kelly, the founder of The Points Guy. Of course, a very complicated travel market out there and a lot of movement in the airline stocks. But we're going to get a look at the markets. Otherwise, we have Bloomberg's Abigail Doolittle.
We're looking at the worst day for stocks in about a month, Shanali. Take a look at the S&P 500 near session lows, down 1.4% almost. The NASDAQ 100 down the better part of 2%. The stocks, though, really getting hit, down more than 5%. And a big culprit, of course, is NVIDIA. Over the last 4 days, down more than 12%. Today, down 6.9%. Those 4 days, the worst going back to 2022. This, of course, after the quarter that they reported that was good. They guided better, but not the blowout that they've done quarter after quarter. So some of that hot air coming out around the AI craze. In fact, let's put this into the context of one of the charts, the technical charts, because this is interesting. This is another one that's not so aesthetically attractive, but it's got an important message, which basically is we are looking at a range, the top of the range, let's call it 130, 140, the bottom of the range, closer to 90. The move down, we gapped today below that 50-day moving average onto the 100-day moving average. It's very likely that we're going to go sub 100 again. The importance of the range, though, is not so much the range itself. It's which way will it break out. There's another way to draw it that makes it look like a quote-unquote double top, which if that's the case, we could see NVIDIA go much lower. Let's get down to the bottom of the range first, though, to determine whether or not that's possible. But it's not just NVIDIA that's pressured. We have a lot of pressure on markets, and I would say a lot of it has to do with the yen. It's not unclear that the unwind of the yen carry trade is over. If you take a look at those charts, which we don't have here, but it does look like the dollar yen could go significantly lower, down toward 130. If that's the case, that cheap fuel, cheap money coming out of the system, unlikely to be matched that quickly by the Fed's cutting, that could put pressure right across the board. Today we're seeing it on oil, also the energy sector, that's the worst. Apache down 5.2%. So we have weakness right across the board here, Katie, for risk assets. September starting off in usual fashion, typically over the last 5 years, down on average more than 4%.
All right, Abigail Doolittle, really appreciate that roundup there. And coming up, question marks around some of the AI high flyers. Wall Street starting to short some of those names. We're going to take a look at the winners and losers boosters next. This is Bloomberg.
The top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp-up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Healthcare giant Johnson & Johnson is staking its future on innovation. Making investment decisions under pressure has become business as usual for CFO Joe Wolk.
The world is coming at us faster than it ever has. We're getting information more quickly. We're going to have to move faster. The competition's moving faster.
Watch Chief Future Officer only on Bloomberg.
Welcome back to Bloomberg Open Interest. Let's get a check here on the markets because you do have a down day. It's getting pretty ugly out there, actually. You are near session lows of the day with the S&P 500 down 1.4% now and the NASDAQ 100 down more than 2%. A drop in the 10-year yield by about 7 basis points here to 383 after that ISM data came in weaker than expected. And you are having the worst day in equities in at least a month. And remember, August was really choppy, but September could shake out to be choppy as well, Katie.
Yeah, it's certainly ugly out there and getting uglier, which brings me neatly to short sellers who are taking a closer look at the AI mania. Check out Supermicro, Lumen, and Symbiotic. They were hit by bearish research reports questioning their valuations. You can see that the shares are getting punished. Bloomberg's Bailey Lipschultz has been all over this. And Bailey, I'd actually like to just set the scene here and zoom out because there are a lot of people sort of writing the obituary for the short selling industry. Earlier this year, you had Jim Chano say that he wasn't going to be seeking new money. You had Carson Block launching a long-only fund, which felt like a sign of the times. But now it feels like there's been a bit of a pickup, a bit of a revival when it comes to short-selling campaigns.
Certainly, Katie, and they're really focusing on AI stories, which we write about in the story. But the big thing with these activist shorts typically is that they're betting against companies, that they're finding flaws in their views with business models or with promises. And that's why when you look at the group of companies that have been targeted in the last 2 weeks, the thing that's interesting to me is they're all different stories. So it's not simply a valuation argument, which is where a lot of the short sellers kind of were dealt the wrath of retail investors. When you look back at GameStop, they weren't saying GameStop did anything nefarious, but they thought they were overvalued even though they were trading at $4. And when you're a short seller,
because they sell video games in brick and mortar locations when everyone downloads video games over Wi-Fi. Like,
but at the same kind of take, though, Matt, is if you're going to short a stock to zero, your risk is infinite to the upside, and that's something that hit Andrew Left, hit Melvin Capital. When you're betting, you can technically, as John Maynard Keynes would say, markets can be remain irrational longer than you can remain solvent. That's something that happens. I had to pull that up so I didn't misquote it.
Well, let's wrap this together, because you're talking about Andrew Left. You're talking, of course, about the idea of shorting to zero. It feels like the Andrew Left just debacle caused a bit of a chill in the short selling industry. And you saw Carisdale come out with a short report against Lumen, for example, but the disclaimer was so sarcastic, almost saying, basically, don't assume that we're still in this stock once this short report actually gets published.
Yeah, and Sam Carisdale is a snarky guy, so he definitely leaned into that with the tweet. But the big thing is, this is trying to just protect themselves because there's so much unknown about what that Department of Justice probe could mean, and trying to at least cover their liabilities, cover any legal kind of rulings that could happen, where if you're blasting a company and you are profiting on their stock price falling, you at least need to disclaim to readers that that's what you're doing, which is kind of common sense, but that's what's happening.
Very curious about how long these short positions can really last for. You take Supermicro, very much an AI darling for so long. Last week took an absolute bath after that Hindenburg report, and then saying that it would delay its 10K filing. Shares are actually up today, while the broader market is down, because they told their customers and partners that they have strong confidence in their teams. They finally went out and said the short seller report contains false or inaccurate statements. So were most of the gains, so-called gains, in that short kind of already had after that initial report?
We don't know, and we don't know what Nate Anderson's doing, and we don't know, because a lot of the short interest data is delayed typically by about 2 weeks when these short bets are covered. But Shonali, the one thing that does stand out when you look at that report and you look at some of kind of the critiques around a Supermicro, company went from less than $2 billion in market cap to north of $65 billion in just a few years. So some of these kind of reports, some of the different kind of factors that companies that are in the S&P 500 are well-known names. If you grow that quickly and escalate that quickly, management teams kind of have to rein in some of their controls, and that really was what stood out from the Nate Anderson short report.
I wonder what your reporting reveals about congressional concerns on shorts in the U.S. Obviously, in communist countries or authoritarian regimes, populist countries, they come down hard on shorts, especially when the market's down. But here, in a thriving free market democracy, where short sellers are a really important part of market price discovery, do we have Washington still trying to clamp down on short sellers?
I think when you look at the Andrew Left case, and again, there are a number of things going on with that, but when I talk to short investors and when I talk to some of these advisors, they look at and say shorts deserve to exist in a market. To your point, in a free market, short sellers...
But Bailey, should the disclosure rules change? To the point you just made 2 seconds ago, you got a 2-week delay on whether they close the short, but an immediate reaction when they report the short.
So should the disclosure rules be the same for long investors?
Well, if you file a 13F and take an activist stake, you have to file much more swiftly, don't you?
Well, you have to keep people in the know of what you're investing, but there are other ways to kind of hide those bets. Like a number of these investors, to Matt's point, are likely uncovering issues, and they're also showing some of the bad actions that could be happening. There are a number of historic short sellers who called out the likes of an Enron, which deserve to be out there. But to your point, if you're what is kind of phrased as a smash and grab, which is shorting a company, putting out some kind of inflammatory report and immediately covering, the conversation around market manipulation gets a little bit tougher.
But also, does that happen even nearly as much as a fraction of the amount that happens in a pump and dump?
It was happening for years with Andrew Left.
Yeah, but that's one person, right?
How many
people
are
have been
there that we
talking their
follow?
book on long stocks and then selling as soon as the market goes up forever.
Okay, we're going to have Bailey back. This is clearly a conversation on this desk. Katie.
All right, our thanks, of course, to Bloomberg's Bailey Lipschultz. Now, coming up, the market-moving events you need to be watching. That's next in our Trading Diary. This is Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Earnings season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs. Taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
All right, let's get you to the Trading Diary. What you need to be watching next week. Tomorrow, of course, it's still earnings season, so we get Dick's Sporting Goods, Dollar Tree, and Couch Chart. We also get Jolts and the Fed Facebook. And then on Thursday, more earnings, this time from Broadcom, of course, closely watching that one. And then on Friday, it's the big dance. We are talking about the U.S. jobs report. You think about the focus of the Fed and participants in this market, it has really shifted from watching every single scrap of inflation data to now watching every piece of information we can get on the labor market.
Yeah, and I think, you know what, if you look at markets, it makes sense that you sell today, right? Because if you expect the labor market data to be better than it is, forecast, then there's less of a chance of a 50 basis point cut, right? So you don't just go and buy thinking that jolts and jobless claims are being better than expected, because if they are, then the Fed cuts less, and it still hurts you.
You think about the Mike Wilson note over the weekend from Morgan Stanley. 50 is both good and bad, isn't it? A 50 basis point cut might ease pressures on the financial markets. However, it also sends a signal that things are worse than expected, and perhaps 50 is not even enough to ease those pains that we've been talking about.
Yeah, and I do like that point from Tracy McMillian. I mean, going back to our 9:30 conversation, that we're splitting hairs here. 25 or 50, we know what the path is. We know that this Fed is going to cut rates several times. Don't get too hung up.
Doesn't get people into mortgages, doesn't get people into cars right away.
It's very true. I mean, if you want people to buy houses, if you want people to buy cars, you need to cut much more.
But stick with us through tomorrow, of course, and through the trade. Tomorrow we're going to talk to the CEO of Raymond James. That does it for Open Interest, and this is Bloomberg.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo Pet Products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
The US to sell $80 billion in 4-week bills September 5th, settling on September 10th.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, Taiwan accusing China of illegally poaching talent from its tech firms. We dig into the trade tensions.
An X goes dark in
The US
Brazil.
again selling
Judges
$80 billion
confirming
of
a
4-week bills on September 5th, settling on September
platform
10th, which is down from the $85 billion on the previous auction.
AI's biggest question marks as earnings season marches on. Analysis coming up, but first, a check-in on the pressure on the markets. It is a risk-off day to kick off September. It is a month that generally is harder work if you're long stocks, but certainly on the NASDAQ 100, we're off by 2.3%. Ed, it is the worst day since the beginning of August, and you're looking at the reasons why.
Yeah, there's a lot of downward pressure on the chip sector. In fact, that's probably an understatement. The SOX down 6%, its biggest drop since August 1st, and that name there is a big reason why. Nvidia down 8%, on track intraday for its biggest drop in about a month, although actually at times in the session its biggest drop since April. There isn't really a clear catalyst. There may be some hangover from earnings. Ian King and I writing about how Jensen Huang's often resounding message didn't quite get through last week, but maybe there's some macro things going on here. We also have chip earnings to come, Caro.
We do, and let's just look broader for a moment, Ed, in the world of chips, and to one Ian King to help us, because Taiwan says Chinese chip companies are, quote, illegally poaching talent and trade secrets, underscoring a heated global rivalry that is developing the key technology used in phones, in cars, in AI. Let's bring in Ian King. And look, perhaps unsurprising, the tit for tat continues. What did you make of it?
Yeah, I mean, this is a recurring theme. We've seen US companies kind of dragged into this, and the biggest concern is this island is obviously a huge concentration of talent, very important talent in this industry. If you can't get the equipment, like a lot of the Chinese companies can't these days because of US trade sanctions, maybe they can get the expertise and build their own, and that is a continuing concern. So you're seeing companies like Naura in China, an equivalent of Applied Materials, being accused.
The Naura case study outlined is that Naura supplies China's biggest chip maker or contract manufacturer, which is Semiconductor Manufacturing International, or SMIC, or SMIC.
Yeah.
Extrapolate on that case study why this would be of particular grievance to Taiwan.
Yeah, I mean, it's a way around their strengths, because SMIC is obviously a massive, a would-be competitor to TSMC. It's probably the best Chinese contract manufacturer. So what Taiwan really doesn't want is an erosion of its own talent base flowing into mainland China, and this is obviously a concern for the US as well.
Well, that bigger concern for the US, it's labeled as being China's potential access to technology that would give them an advantage from the military context. Is that kind of the core of US policy around this?
It is. I mean, that's what it all started with under the Trump administration. The argument is that we need to stop China from getting access to advanced semiconductors because of what it will do for its military capabilities. But obviously, since then, it's flowed into other areas and made this a real focus of economic competition between the two countries.
And not just two countries embroiled, Ian, because the US is leaning on others.
Yeah, no, you're absolutely right, Caroline. What we've discovered along the way, and it's been a long 2 or 3 years, is that unless Japan, unless the Netherlands in the form of ASML restrict access to China of their key technologies, then perhaps there are workarounds. There are workarounds that China can make, and obviously what we're seeing with this Taiwanese situation is another attempt at a workaround. And if you're Chinese, it's a legitimate thing to do. They want the technology for their economy, but obviously from the Western perspective, this is a worrying development.
Bloomberg's Ian King, thank you very much. Now, with Taiwan's growing dominance in advanced chips, Bloomberg News took a deep dive into how the boom in that sector is affecting its economy more broadly. Have a listen.
Taiwan is the home of our treasured partners. This is, in fact, where everything NVIDIA does begins.
It's become a linchpin of the global economy. Taiwan's dominance in advanced chips has grown through the AI boom, creating fortunes in the process. Local industry billionaires are 90% richer since the introduction of ChatGPT in November 2022, while stocks in Taipei have surged. Property prices hit a record high in March, with the biggest gains in the city of Hsinchu, the home of semiconductor giant TSMC. That wealth boom is raising fears some will be left behind.
There is a worsening of income distribution across the board, and I don't see any measure to improve this at the current juncture. Parents take the brunt by helping their kids, buying apartments and so on, but it's not sustainable because the next generation won't be able to do this.
Taiwan's government, though, has set ambitious growth goals, seeking a $1 trillion economy by 2028, with GDP per capita set to surpass that of South Korea next year. Annabelle Drulers, Bloomberg News.
Now more on geopolitics. China's top EV maker, BYD, says it won't announce a major plant investment in Mexico until at least after the US election. It's all according to sources. This as shifting American policy forces global businesses into wait-and-see mode. Let's get the technology investors' reaction.
The ECB Simkus on Econostream earlier said October ECB rate cut quite unlikely.
More companies feeling a lack of clarity from the US right now.
Yes, it's a bit unusual to be this far into the election cycle with the election actually just around the corner, especially if you count voting not at the booth, early voting, to not have any clarity on the economic policies. And certainly our partners outside of the U.S. Are nervous, just as we may be here.
Let's talk about what you've been seeing domestically. There is a lack of clarity because the election has not happened. But the policy leanings that we're hearing, for example, from now the Democratic ticket, are you feeling that companies, are you yourself as an investor changing how you look at companies based on US wanting, well, more geopolitical tension with China, not less?
Well, you know, China, I think, is a special topic. I think it's party agnostic. I think that's one topic that Washington can agree on, is being a bit hawkish toward China. And it has been this way for many years. So, you know, when companies like BYD say that they want to wait until election is over, I wonder to myself if some of that is just the company saying that the election itself is a bit of an uncertainty for the markets, or if it truly is, it believes that there's going to be a policy difference, because from where I sit, I don't think there is. Both the Democratic Party, certainly it wasn't Harris at the time, it was President Biden, as well as the Trump campaign, they've both been very hawkish, especially on EVs that may be coming over from Mexico. So I think this is more noise than it is actually something that could be solidified into one party versus another being favorable to BYD or any other companies.
And you see that the China issue is bipartisan, difficult, but is there a clear pro-tech policy platform or pro-tech investment for either outcome of this presidential election in the US?
And I think that's the hard part. is that we don't know. It's the hard part. There is some policy generalities that we've heard of from actually both parties, but there aren't any specifics that could make investors say, okay, this is pro-tech. If anything, I think there's increased pressure on tech with AI and certainly chips, right? AI enabling chips. There's a lot of national security concerns, and we've seen this in the last few years. This is not anything new, and I don't think it's going to be something that's going to be new after this election is over.
In markets, there is seldom just one single headwind nor tailwind at any one time. There are multiple. Which is the greater focus for you right now, central bank policy or November?
For us right now, it is definitely central bank policy. Because there's so much uncertainty, there's a lot of noise we're trying to ignore. The Fed, I think, is more on the closer docket, especially with the September rate cuts that the markets seem to be expecting. We are definitely expecting it. We've never been in the 50 basis point camp. We're still in the 25 basis point camp. But we think that could be a start of a cycle. 25 basis points isn't that big. So, it's not going to make or break a company that needs to borrow. But certainly a cycle would be a signal to the markets. And that could be the tide that lifts all boats. Tech certainly, but not just tech, but other areas of the market that have been suppressed for about 18 months now.
Anna, all boats are not rising today. In fact, they're all falling, but chips the hardest. Do you invest in AI and chips at this moment?
I think that depends on your time frame. If you're a long-term investor like us, chips definitely has a place because this AI thing is not over. It is not a hype. It needs to get cleaned up over time. But if you're a long-term investor, that's the infrastructure. That is at the center of how you develop AI. So I think it can be an exciting, it might be a buying opportunity, but certainly for the long term.
Anna, there is anxiety in the market this morning. We're showing it on the screen. Were you left from NVIDIA's earnings with confidence, or are you still looking for more data on how long this investment cycle has to run?
Certainly more data, but I wasn't pessimistic about it. Look, I mean, they beat. Right? It was just not good enough for the markets. That tells you more about the valuations of the markets than about the company itself. So we're not pessimistic, but at the same time, you sort of wonder, how long does this have to go? Right? And they have great market share right now. But when do the companies like Facebook and other companies that they rely on for their revenues say enough is enough? And that is the uncertainty that I think is coming down the line, maybe in 2025, 2026.
Anna Raffman, CIO of CBIZ Investment Advisory Services. Thank you very much. So coming up on the show, Brazilian judges ruling against Musk, upholding a nationwide ban against his social media platform X. We have the reports from the ground next. And take a look at Intel, Kara. Investors are basically bracing for more information. The chip makers presenting at the Citi Global Technology Conference tomorrow, and the options market pricing in a swing of around 5% in either direction on whatever's said. Reminder, last week, Bloomberg reported that Intel's asked its bankers to find strategic options like separating out its foundry business. The stock caught up with the chip slump, down more than 6% in the session. We'll be right back. This is Bloomberg Technology.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA. against 80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Bringing you up-to-the-minute business news whenever and wherever it happens. I'm Anne-Marie Herder in Ukraine, and this is Bloomberg.
Check on the markets for you because we are in sell-off mode once again. As we were on August the 1st, we are down significantly on the NASDAQ and indeed across some key chip players. We are wiping off $190 billion in market cap from NVIDIA at the moment, the worst day since August the 1st. Broadcom has its earnings. All eyes were down more than 4.5%. Apple off by more than let's call it almost 2%. But pressure across the market. We will keep you attuned to it. But let's dig into some individual stories for you in the technology world. And Brazil's Supreme Court upheld an order
The Fed
to
bids for
ban
3-month bills total
social network
$867.9 million, and 6-month bills $799.4 million.
Russia, North Korea in banning access to certain social networks. Bloomberg's Daniel Cavallo is with us, covering from Brazil. And look, this really is Supreme Court winning out here at the moment, Daniel.
Yes, well, hectic days here in Brazil. Let me tell you how this story started. Since the beginning of the year, Moraes, a justice from the Supreme Court here in Brazil, Moraes, has ordered the block of some X accounts that were spreading hate speech, and Musk said he wouldn't comply with this order. So Moraes began to impose fines on X. They didn't pay, so Brazil's justice was looking for who was the legal representative of the company in Brazil. I'm surprised there was nobody in this position. So last week, Justice Moraes said that Twitter would have 24 hours to nominate someone for this position. It didn't happen, so Friday night he ordered the block of X in Brazil.
There are some outstanding questions, Daniel, about one of Elon Musk's other companies, which is SpaceX, and its Starlink satellite-based internet service. What are the considerations from the courts around Starlink and what they might do?
Well, Moraes ordered the block of bank accounts of Starlink because as X wasn't paying for the fines that were imposed for the company. Moraes said, okay, so we're going to block the accounts of another company in the country, and it's very controversial here in Brazil because there are two different companies. Yesterday, the panel of the Supreme Court, they confirmed the order to ban X in Brazil, but they didn't discuss the Starlink part of the problem. It's yet to come.
Bloomberg's Daniel Carvalho, thank you very much for some on-the-ground reporting. Another big story we're tracking is in the world of smartphones. Next week, Apple unveils its latest iPhone lineup and other new tech. But only a few hours later, Huawei will do exactly the same for its products, setting the stage for a smartphone feud. Let's discuss with Bloomberg technology editor Dana Wollman. And in the technology reporter toolkit, events are key. The difference with Huawei is that this is about products largely for the Chinese market. But my goodness, the timing's curious, isn't it?
It is, and normally this is the sort of move that Apple would take, really cheekily scheduling an event right on the heels of a competitor's event. So for Huawei to do that to Apple is almost like Huawei out-appling Apple in this case.
Talking of out-appling, they talk about an epoch-making product. everyone thinks it's going to be a several times folding phone. How much does that play to the Chinese market for Huawei?
So this would really be building on some tremendous momentum for Huawei. According to IDC data from the most recent quarter, Huawei made it into the top 5 for Chinese smartphone shipments, knocking out Apple, which was quite extraordinary. And so this would really be building on Huawei's success in its home country. And as you say, the device is rumored to have foldable creases in not just one spot, but 2 spots. And that would be a really interesting form factor. It would be a first of its kind that ships to the public. And what that really means in layman's terms is you can get a much bigger, more tablet, laptop-sized screen that can compress compactly when folded into the size of a reasonably sized smartphone.
I've been invited to the Apple event, which is here in California on September 9th. It had been, according to our reporting, September 10th, but you've got the first US presidential debate on the 10th. So it's a chock-a-block calendar. Just recap the Apple side, what we expect from them and what Bloomberg's reporting tells us about the product lineup.
So according to my colleague Mark Gurman, the devices will not physically, in an exterior way, look much different from previous iPhones. And to some consumers, that may come as a disappointment. The iPhone hasn't seen a major redesign since 2020. So a lot of people would think the iPhone is due for something just more striking looking. But indeed, one of the biggest selling points will be the suite of new AI features. And even those, according to Mark, will have a slower rollout than consumers may have liked and possibly even Apple would have preferred.
Dana Wollman keeping us up to speed on the feud coming up. HP continuing its $4 billion lawsuit against Mike Lynch following his fatal yacht accident.
In 10 minutes' time now, at the bottom of the hour, the US is due to sell $76 billion in 3-month bills. Prior high yield 4.98%. Prior bid to cover 3.03. The US is also due to sell $70 billion in 6-month bills, with a prior high yield of 4.685% and a prior bid to cover of 3.05.
How much of it's a hangover from last week? Not too sure. Broadcom reports later in the week. There are questions. Look at Micron around high bandwidth memory. Just general anxiety after a long holiday weekend in the United States. That's where we're at. Keep the conversation going. This is Bloomberg Technology.
Earnings. I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Hewlett-Packard Enterprise, HPE, says it intends to pursue the $4 billion damages claim in London against the estate of the recently deceased British tech tycoon, Mike Lynch. Bloomberg's Jonathan Browning is here with more. This is a controversial and difficult decision, I imagine.
It is, and yet Hewlett-Packard Enterprise, which is the entity that has responsibility for the British case, has said that it intends to pursue this claim to the end. Just to distinguish between the two cases, there was a US criminal case that Mike Lynch was found not guilty in, and then there was the British case in London. And in the London case, Hewlett-Packard sued Mike Lynch and his former chief financial officer over the collapse of Autonomy, the software company, and they found, and the judge found, that Mike Lynch had fraudulently boosted the value of Autonomy. We are now at the point where we are waiting to see whether those damages can be collected, and HP yesterday said they intend to do so.
It is little more than 1 week since Mike Lynch's body and that of his daughter were recovered from the sunken yacht off the coast of Italy. It's an extraordinary story, Jonathan, but could you just explain kind of procedurally what is happening at the moment with the investigation of what happened and now this legal challenge at the same time?
Yeah, so in Italy, the prosecutor has opened a preliminary inquiry. They are looking at potential manslaughter charges relating to the foundering of this luxury yacht, the Bayesian, that sank in such a short period of time when severe weather struck. And they'll be looking at human error and all host of other issues. But as you say, it's just a few days.
In 5 minutes' time now, at the bottom of the hour, the US is due to sell $76 billion in 3-month bills. Prior high yield was 4.98%, prior bid to cover was 3.03%. The US is also due to sell $70 billion in 6-month bills, with a prior high yield of 4.685% and a prior bid to cover of 3.05%.
And so in this case, HPE will be pursuing the claim against the estate of Mike Lynch. That is his recently bereaved widow, who was on the boat and managed to escape, as well as his daughter, who wasn't on board.
And as your story says, look, I mean, likely to face criticism going ahead with the claim, but Hewlett-Packard Enterprise has its earnings. I hate to bring it back to that, but has its earnings this week. They were likely to face questions, Jonathan, so maybe they're getting ahead of that.
Yes, I think that's probably the likely reason why we know this now, because the simple fact is that the actual court case is still weeks from conclusion.
Bloomberg's Jonathan Browning, thank you very much for your reporting. Coming up here on Bloomberg Technology, the shorts are circling some of AI's biggest questions in the markets. That conversation's up next, as well as AI regulation with SAMA CEO Wendy Gonzalez. This is Bloomberg Technology.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own three major, have stake in three major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of I guess the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
So we are shortly expecting the results of both the 3- and 6-month bill auctions.
Good morning from our world headquarters in New York. I'm Menace Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
And it is a down day to start this month of September. Post-Labor Day, the jolt comes back. We are risk off. We're just going to move on from this board to what is happening on the NASDAQ more broadly at the moment, because we are off by more than 2% at the moment on the NASDAQ 100. And in large part, it is the chip names that are dragging us lower. I'm looking at a sell-off that means risk aversion, that means money pours into the bond market. 10-year yields come down some 5 basis points. Bitcoin as well suffering from the risk pushback. We're down by 2 percentage points. Move on. The individual moves that I'm having a quick look at for you are some European names. Look, Europe has just closed and we have seen SAP under pressure. Not that much, off by 0.8%. The CTO steps down for some inappropriate behavior, we understand, at a previous role. We see Delivery Hero down by 1.3%. Again, this is a German company, but actually has a Middle Eastern unit that it's looking to, well, maybe IPO in Dubai, and bankers have been talked to. NVIDIA, though, front and center. Ed, we must keep showing this. The fact that the NVIDIA name is down by 7%, worst day since August the 1st. The stocks, nearly every player is on the downside.
Right, and given NVIDIA's market cap or weighting in indexes, it's important. Come back to me on the other mega cap names, though, because it's a similar story. Kind of by association and broad market anxiety, they're the biggest points drag after NVIDIA on the NASDAQ 100 at least. I don't see any news out there. I don't see any catalysts. The lead of the Bloomberg Global Markets wrap is firmly on NVIDIA, but these are noticeable declines. And of course, we just talked about Apple and its event next week. Probably expect some volatility in the interim. Let's get to one of the top stories on the Bloomberg terminal. Wall Street is getting into shorts as traders hunt for winners and losers in the AI race. Check out Supermicro, Lumen, and Symbiotic. They were hit by bearish research reports questioning their valuations and the shares as a result of getting punished. Bloomberg's Bailey Lipschultz has been writing about this, and fresh in the mind because we covered it so deeply on the show, but Hindenburg's short sellers report on Supermicro.
So the 3-month high yield 4.97%, 4.97%, bid to cover 2.62, 2.62. For the 6-month high yield of 4.645%, 4.645%, bid to cover of 3.08, 3.08.
In just about 2 years. So we're seeing a number of these AI beneficiaries, whether it's Supermicro with their business. Symbiotic is a company that makes warehouse automation robots and has a play, or at least they pitch themselves as an AI-related company. Lumen Technologies has seen shares rally over the last few months given their positioning within the AI trade as well. And we're just seeing, to an extent, a number of activist shorts, whether it's Hindenburg, Kerrisdale, and some of the others, just kind of calling out and diving deeper into these companies, into their operations, into what they're actually doing. And that's something that it seems like with these manias, whether it's Bitcoin, whether it's pot stocks or AI, we see Wall Street more than happy to pile into the number of these stocks, a lot of these very good companies, and we've seen that with NVIDIA over the last few years. But when the scrutiny kind of gets ramped up and maybe a risk-off tone like we've seen today, that's when a number of these companies can fall under pressure, and that's really what those short reports have called out. Again, 4 companies, 4 very different reasons for their bearish reports, but nonetheless, each pretty much down more than 20% since those reports were published.
Is anyone willing to buy the dip here? Because actually, Super Micro is on the up today, only but a percentage point.
It's up 1.4%. Again, the concerns from last week, from the Hindenburg report, from the delayed filing, kind of just caused people to rethink and recalibrate some of those bets. Has the company come too fast, too high, too quickly? Again, it was trading north of $625 just a few weeks ago and still only at $446 right now.
We're searching for separating winners and losers is one of the quotes in the story. I think we've dwelled on the losers. Who are the winners out there? Have you been able to find them, Bailey?
Well, we've seen a number of them, Ed, right? Even with NVIDIA's fall off today of 7%, if you bought in really at any point for the most part over the last 2 years, the stock is absolutely ripped. We're still, it seems, and I think you would probably know better than I, it still seems like investors right now are teasing out the picks and shovels, if you will. We see on the private markets, the OpenAI latest funding round, that's a tremendous valuation for a company. So the big concern, at least when I talk to folks, whether it's later stage investors or those growth and crossover investors, is where are you finding that value? And as we see companies stay longer or stay private for longer and raise some pretty eye-popping valuations, that's where people are putting money to work. But we're also still seeing with the Super Micros of the world and the NVIDIAs of the world, AMDs, that there still is a lot of money to be made. The big question is, what is the proper valuation, and when do you, as Carol put it, buy the dip, and how does that kind of fit into a broader portfolio?
Bailey Lipschultz, it's a great story. We thank you. Meanwhile, though, look, a key question still out there for investors is regulation. In California, the legislature has actually approved a controversial AI safety bill late last week, which requires companies to make sure their technology doesn't cause major harm. It now faces its biggest test in front of California Governor Gavin Newsom, who has stated he doesn't want to over-regulate the state's dominant AI sector. The bill has drawn both criticism and praise from a series of national figures. Wendy Gonzalez is with us to discuss this. She is the CEO of SAMA, which provides high-quality training data to power AI technology. And I would have thought you've been doing well as all companies suddenly want to be able to label their data and use large language models. What do you make of this regulation going through California?
So AI can be a force for good, but it does need some safety guards and some guardrails put in place. I think this is really a signal that the unregulated era of AI is over. I think that first step was with the EU Act that happened and was ratified overwhelmingly last year by the majority of the European Union.
The worry for some in the market, OpenAI has been a voice for this, Wendy, is that the regulation coming through will harm in particular smaller companies and also open source large language models. Is that something that you agree with, or is this the necessary step taken to ensure that AI remains for good?
Well, it's a tricky regulation to put in place. There's always this balance of ensuring that we're not stifling innovation while trying to reduce harm and to create transparency in AI. Within the SB 1047 regulation itself, there are some parameters related to the amount invested in AI. So they're trying to find a little bit of a balance of if it is a large-scale model that has over 100 million of investment or $10 million to deploy, that is what would be subject to this, as well as AI that could be used to enable cyber attacks to critical infrastructure such as energy, nuclear, chemicals, as an example. So it's a balance.
Wendy, we spoke to academics who said they were consulted but didn't like the content of the bill. We spoke to Senator Scott Wiener, who said he spoke to everyone he could and tried to get input from as many people as possible. Then you have Meta that's against it from the open source perspective. Why couldn't we find a bill that basically worked for a broad coalition, given all the talk about it?
It's true that it is somewhat incomplete. I think one of the best things that can be done is that public-private partnership where, companies like Meta, OpenAI, and others are really on the leading edge of developing this technology. And I think there were a few things that were basically incomplete in this. One was that there, is the notion of kill switches. The other is this notion of having third parties test. Well, that becomes really difficult for proprietary AI. Right, you're opening yourself up to a third party, and that's a reason why companies may not want to participate. Then there's some other important items like sandboxes. So in AI, research and development is a critical part of this. If we don't have some content around how sandboxes can be leveraged to test out, whether there are actual harms, I think it could become very challenging. So really, at the end of the day, what I think everybody's voicing some concern on is we don't want to have any unintended consequences, whether it is IP, stifling of innovation. At the same time, I think we could all agree, and most Californians probably do agree, that some safeguards for this pervasive technology are necessary.
Wendy, SAMA provides data labeling and evaluates models. How is the bill and its contents going to impact you in practice?
Well, one of the most critical things about developing responsible AI is having some human-centric validation. So I believe that this will ultimately drive forward some additional measures for both human-centric validation, quality management systems. So I think there could be an increase ultimately over time. But what we do see is that a lot of companies, including big tech, probably do a little bit more than maybe the public is aware of in terms of trying to provide these safeguards. Now it's really about putting forth a regulation that balances that and really creates some transparency. So we've seen it happen before, certainly whether it was green emission standards set up by California or laws like GDPR in Europe, where they did set forth a wave of actions that ultimately companies had to comply with. So while I wouldn't say we're seeing it in droves right now, I do think over time companies are going to need to think about this because, as I mentioned before, I think the unregulated era is coming to an end.
Wendy Gonzalez, great to have some time with you, CEO of SAMA. Now we want to stick on the theme of AI, but the sell-off theme that we're currently seeing in the markets. Ed, this is deja vu of the start of August all over again. We're down by 2% on the NASDAQ 100. We're looking at NVIDIA being the biggest points drag once again, obviously when it's worth so much. $200 billion being wiped off in one day alone in its market cap.
At least in the first week of August, there was something to point towards, right? The unwinding of the yen carry trade, central banks. There just seems to be a lot of anxiety for no specific reason or catalyst in the market. And the global wrap on the Bloomberg points out that, like you said, Caro, August and September, historically pretty tough.
Yeah.
Chip makers are doing badly, but there are other sectors at play, like the energy sector. I don't know where else we could look.
Yeah, oil down sub $75 if you're looking at Brent, but it's notable that T. Rowe have come out, a particular fund manager there, saying, look, I am worried once again about a yen shock, seeing another one coming. Maybe it is the same root cause of anxieties that we saw, and September always being a pretty tough month if you're long equities. We're going to stick on this theme throughout, but coming up, another busy slate of earnings with AI in focus there too. We're looking ahead to results from Broadcom, from HP Enterprise. That conversation up next. This is Bloomberg Technology.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
down to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
If you look at Reels, Instagram and Facebook Reels, both immensely popular, both growing a lot, those are really working not because the short form video format is special and new. It's actually been around for a long time. You remember Vine and the early days of short form video. It's because of GPUs, it's because of large models, it's because of advancements in recommendation systems. ByteDance is one of the really great companies at this. We also have made an immense investment in harnessing the power of modern models, large data sets, and modern hardware, NVIDIA's hardware and our own hardware, to build recommendations that make the products better and more engaging. Our advertising system is built on modern AI recommendation technology. So I always think it's interesting when people remark that like AI just arrived. It's actually powering already today a huge amount of the engagement and quality of our products.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Okay, time for talking tech. And first up in the news, DirecTV says customers lost access to Walt Disney programming today after the company's failed to reach a new licensing pact. The company also says Disney sought a waiver to all claims that its behavior is anti-competitive as part of any new deal. Plus, South Korean startup Rebellions is planning to go public as early as the end of 2025, seeking to capitalize on booming demand for the chips used to power generative AI. It plans to select global banks for a domestic listing around March. And Airbnb is urging New York City officials to scale back a local regulation that outlawed most of its short-term rental listings when it came into effect nearly a year ago, citing impacts on travelers and hosts. The company says the regulation has, quote, failed to deliver on the promise to combat the housing crisis. Caroline.
And let's just return our attention to earnings, because there are still some to come, believe it or not. HPE and Broadcom set to reveal actually pretty healthy growth in quarterly reports this week that will also be sifted for clues on the longevity of pretty heavy corporate spending on AI. Let's break it all down. Bloomberg Intelligence analyst Mandeep Singh. I'm going to start with Broadcom. The market is anxious today. It seems to be a report coming from the Semiconductor Industry Association showing below seasonal trends. But what will we dissect from Broadcom more broadly?
Look, they are a pretty diversified company, and when you look at their two main segments, the software side is recurring in nature. They tend to focus a lot more on cybersecurity, and as we know from the CrowdStrike outage, cybersecurity spending actually has done pretty well, and in fact, our survey suggests there should be an uptick as a result of that outage. On the semiconductor side, look, every hyperscaler has told us they are over-investing right now in AI infrastructure buildup. And granted, 60% of the dollars are going to NVIDIA, but the remainder, I would say, Broadcom, Marvell, we saw the print from Marvell was pretty strong, because all these hyperscalers are focusing on custom chips. I mean, at the end of the day, whether it's Amazon or Google, they want to do their in-house chips, as well as a lot of the enterprises that are focused on compliance aspects of Gen AI. They don't want to build everything on the cloud. So to my mind, a company like Broadcom that's giving you all the, the basic infrastructure you need, whether it's on the networking side or the custom chip development, they should benefit from the trend and the CapEx spend we are seeing.
And Broadcom may not say it explicitly, but Broadcom helps Google with its TPU. What about Hewlett-Packard Enterprise. It's kind of like at this stage in earnings season, historically it might have been hard to get yourself kind of pumped up for this, Mandeep. But look at the anxiety in the market. It's another print we need to watch.
Well, so I look at it this way. All the companies that require, AI-ready servers, there aren't many places they can go to. It's Dell, SMCI, albeit all the things that happened, with their 10K filing, but and HPE. And I think all these companies have razor-thin margins when it comes to the AI servers, but still it's the growing part of their business. And right now we have heard from every semiconductor maker that, the market is undersupplied. And that's why, whether you're a server company or chip company, you still ride this trend. Now, what, the new Blackwell release will do, who knows? But clearly, we know for a fact that all these companies are looking to build their AI infrastructure. And I think because these companies fit in the supply chain, they should benefit from that trend.
There's been much said of bulls versus bears. Now, some of the bearish line of argument is just valuation.
Yeah.
Mandeep, what do you make of some of these valuations on these companies?
No, look, I think with NVIDIA, you could argue the multiple is rich, but can you find another company that's growing sales at 50% plus? And so that's where, as long as they keep beating and raising the way they have, it's hard to be bearish on valuation. At the same time, there is a risk that when the growth tapers, and it will taper, everyone expects that. It's a question of when it will happen, and when that happens, the multiple will be cut into half or even more. So right now we are in that phase where nobody knows how these LLMs will keep scaling. There will be a plateau in terms of the scaling for the LLMs, but we haven't hit that yet. And the market will look ahead. It will look 12 to 18 months ahead. But right now the bet is it's not 12 to 18 months ahead. It's probably a little further along. And I think until then, the valuation is sustainable because with tech, you pay a premium for growth. Yeah. And these are the growth pockets within that tech sector.
Mandeep, real quick, if capital expenditures was the watchword for the hyperscalers, which metric do you watch for those other names left to report?
Well, so look, I think when it comes to Broadcom or HP, Broadcom is more diversified, but top-line growth is what you care about, and gross margins. With NVIDIA, what everyone was scared about was that peak in gross margins. So with Broadcom, if we hear a similar story, then that's when you get worried because gross margins are very important for hardware companies.
Bloomberg Intelligence senior analyst Mandeep Singh, thank you very much. Now, coming up on the show, it started with Taylor Swift, but this time Oasis fans are causing a stir over ticket price surges. Stay tuned. This is Bloomberg Technology.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
As we spend some time here on the broader presidential race.
Let's
Let's focus in on European politics.
Makes you wonder how politics might play out.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Fans of Oasis. They're looking back in anger, you get it, at Ticketmaster, thanks to prices skyrocketing for the group's highly anticipated reunion tour. Now, the ticket platform was using dynamic pricing to set ticket prices, which of course adjusts prices based on real-time demand from the market. Prices jumped by multiples when tickets went on sale, prompting hundreds of complaints to advertising regulators. Bloomberg's Charlie Wells joins us now. You are the voice when it comes to personal finance, and you'd been bracing for this, people playing the system ahead of it, Charlie.
Oh, yes, I have. I have been covering this story since last week. I've been talking to fans up and down the UK, and it's striking how the energy has changed from last week when there was a sense of jubilation. I was talking to fans who were willing to do anything to get their hands on these tickets, to frustration this week, those same fans unable to get them due to some tech issues, and of course, some of those dynamic pricing issues as well.
That frustration is playing out on Instagram, X, formerly known as Twitter. I literally see Liam and Noel Gallagher's faces everywhere, which makes me think about technology. Is there nothing that they could have done from a tech perspective to stop this, or is tech to blame?
That's a really interesting question. I mean, on one hand, there's a sort of communications and marketing side to this where, you know, dynamic pricing is newer here in the UK than it is in the US as far as concerts. But when you think about things like Uber, of course, there's surge pricing here. So there's an argument that the band or that Ticketmaster could have been clear that this was going to happen. But I've actually been talking to a number of fans, you know, after the weekend, and they said that some tech glitches were actually almost more frustrating. So when Nikki Bentley here in Essex said that she was accused of being a bot by the website. And then I also spoke with someone in Brighton, Rob Harlow, and he said he made it to the front of that digital queue, but by the time he got there, he was then kicked out and ended up at number 250,000 in line. So a mix of that kind of communications issue, but also some tech glitches here.
Bloomberg's Charlie Wells all over this story for a little while. Thank you very much. Caro, we go straight to markets. We have to. I don't know where to look other than at the index level. NASDAQ 100 tech is under pressure. That's an understatement. Nvidia is the problem at the index level from a points drag perspective. But when you see a name like Apple down more than 2%, then you start to ask, okay, what's the bigger thing that's happening here? And it's probably the chips, right?
And Ed, we are in back to school mode. We've got volumes actually higher when compared to previous sell-offs at the moment. We're up some 7% in volumes on the NASDAQ. And you're so right, it is chips and chips again. We're down by 7% on Nvidia. The broad semiconductor index is under pressure. I think only one name was in the green. We're seeing by 5.8%. We're off of our lows on the day, Ed. But it's important that we look ahead to Broadcom in terms of its earnings.
Yeah, and Intel speaking tomorrow at that Citi conference as well.
That does it for this edition of Bloomberg Technology.
Short a week, but my goodness, a lot to talk about and recap. You know the podcast. You find it on Apple, Spotify, the Bloomberg platforms. Buckle up. I think it's going to be a busy one. This is Bloomberg Technology.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The top names in business are on Bloomberg.
It's about category creation. You know, today we are a tea drinking nation. Tea penetration is 91%, 93%. We are at 25% of the affluent class. We are at 14-15% of the overall market. I'm confident that if we continue to do what we are good at, in terms of the Starbucks experience, in terms of the coffee expertise, in terms of localizing and innovating, we will get our consumers.
Nobody covers business like Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Live from Bloomberg World Headquarters in New York, I'm Shonali Bassick alongside Mike Regan, and we are looking at a bit of a September swoon. Bitcoin gets hit by a risk-off tone in which markets are sliding to start the week. And we are now 62 days until Election Day in the United States. Crypto companies are becoming major contributors to the races. We're going to talk to Coinbase's Paul Grewal as his firm emerges as the sector's top political donor. We're going to also talk politics with Race Capital's Edith Young, plus discuss the waning enthusiasm for Ether ETFs and the road ahead for regulation. But first, before it all, we're going to take a snapshot of the market today because we have a down day.
So ECB's Nagel gave an interview to FAS. Says we are dealing with an economic situation that is characterized by strong headwinds. Current company reports make it clear that certain sectors are under pressure and need to take countermeasures.
MicroStrategy and Coinbase each down more than 4%, Mike. But it's interesting. We've seen kind of a range-bound Bitcoin trading avenue, haven't we?
Yeah, it's really been interesting, Shonali. Since, say, call it the beginning of August, we've seen some pretty big up or down days for both Ether and Bitcoin. But yet we are basically where we started that late summer, early August period, about 2,500 for Ether, somewhere a little above or below 60,000 for Bitcoin. So regardless of the day-to-day drama, we are just stuck in this range for a good 6 weeks now.
Even with that range, I think what's interesting is seeing just the diminishing flows you've seen in those Ethereum ETFs, those spot ETFs since we've seen the launch. Bloomberg Intelligence now saying that assets across these ETFs have fallen below $7 billion. The flows we're showing here doesn't include Grayscale's mini trust, but it does show you how strong those flows were until the August downturn. Why such sour attitude, if you will, in Ether?
Well, one theory I have is if you hold an Ether ETF, you're not able to get that yield that you can get from staking it in if you hold it just in a traditional crypto native exchange. So I think that's meaningful to investors to get that. I don't know what the exact yield is now, but call it 3-4%. The sort of safety of holding it in an ETF form doesn't really overcome that yield you get by holding it into a crypto exchange.
We're going to talk more about that later in the show, but we are going to go outside the flows. We're going to talk about politics front and center when it comes to crypto, especially since you've seen that turn by former President Donald Trump to have the U.S. become that advocate for the industry.
On day one, I will fire
Gary Gensler. I will appoint a new SEC chairman who believes America should build the future, not block the future. Upon taking office, I will immediately appoint a Bitcoin and crypto presidential advisory council.
Now, with all that said, crypto firms have been the biggest corporate contributors in 2024, led by Coinbase. And we are now joined by the firm's chief legal officer, Paul Grewal. And, you know, Paul, we really do have a sense here of the new strategy by former President Trump into his presidential candidacy here, or the bid he's putting in. But we don't know much about the Harris campaign. But you have been, from what I understand, more in touch with that side of the election here. What do they say?
Well, good morning. We've been in touch with both sides, both the Trump campaign and the Harris campaign, as they develop their crypto policies and begin engaging with the crypto voter. And I will say that certainly the Trump campaign has been more explicit in embracing specific concrete proposals for crypto and digital assets more generally. But we've been encouraged that even as the current administration under Gary Gensler continues with its campaign of regulation by enforcement, the Harris campaign, which of course stands separate from the administration, has reached out, has expressed an interest, and has begun discussions about what a new approach to crypto and digital assets could look like.
That's fascinating. And what does it mean for the people she might have at the top? You mentioned Gary Gensler here, but under a potential future Kamala Harris presidency, you might have different leaders when it comes to regulation. What did she say?
Well, you almost certainly will have different leaders emerge. And of course, top of mind for many of us in the crypto industry is the SEC, but there are a number of agencies in the federal government which will play an important role in the development and evolution of this industry. What we're hearing is that there still remains, I think, an open mind to a new approach to crypto. We think the most important new approach is embodied in legislation which has passed the House. That's, of course, the FIT21 bill, which provides for market structure for crypto and important investor and consumer protections. And that legislation is now being considered by the Senate. And so we expect, even as the presidential campaign roars ahead, we're going to see progress in the fall on that legislation and hopefully an embrace by both parties of the structure and certainty it would provide.
Paul, let's talk about Congress a little bit, too. I know Coinbase has been funding Fair Shake, the PAC, which is really laser focused on House and Senate races rather than the presidential race. Should the industry get a very pro-crypto Congress in 2025, is that legislation that passed the House still sort of, you know, what you would like to see passed, or is there room for a whole new bill that's perhaps even a little bit more friendly to the industry should you get that congressional outcome that you're looking for?
Well, no legislation is perfect, and FIT21 is no exception to that. But it's a strong bill which includes the most critical protections for market structure. And I think there's no question about it. We are going to see a pro-crypto Congress emerge, regardless of the particular outcome in individual races and, of course, the outcome in the presidential race. We've seen evidence of this. 71 Democrats joined with almost every Republican in the House in supporting FIT21. And we're now seeing Democrats in the Senate, whether it's Senator Gillibrand, whether it's others on the Senate Banking Committee, express a real interest in moving forward with that legislation. Senator Stabenow, of course, in the Agriculture Committee. We're just pleased to see now members of both houses and on both sides of the aisle understand that 52 million Americans or more who have bought or sold a digital asset are expecting the Congress to do its job.
Yeah, Paul, I think one of the fascinating things about crypto, when you think of crypto and regulation, is the innovation in crypto is often sort of 1 or 2 steps ahead of the regulators, what they're thinking about. So I'm curious how you think about that when you think of this legislation that's on the table and when you think of Coinbase's business, you know, an exchange company at heart, but also expanding out into a blockchain project with Base. You know, is it possible to sort of, make legislation that is future-proof, that considers all the different areas that crypto can get into and not have to be coming back to the question of, is this legal or not in the industry? You know, how do you think about that future when it comes to regulation?
Well, what's very interesting is that while the innovation almost always does race ahead of the current state of the law, it hasn't raced ahead of the sentiment among millions of Americans that they want to see digital assets, cryptocurrencies, other blockchain-based technologies as part of their financial future. One of the virtues of the pending legislation is that it would call for additional rulemaking by the regulators and appropriate agencies to fill in the gaps, to write in the details that are going to evolve over time. But it will provide a durable framework that will
So ECB's Nagel says he fears operating losses for the Bundesbank this year are at similar levels to last year.
Or certainly any one particular chair of the SEC or any other agency.
It's interesting because we talk about all the players in Washington here that are needed really to change the tone, and Congress is a big, big part of that. You've been spending a lot of time in Ohio, as I understand it, and it's really interesting. Ohio, of course, you have a senator that has very long been a very vocal point of that Senate Banking Committee, really the committee here that has a very close relationship to the SEC and its own oversight. How does Ohio change the game?
Well, as an Ohio native, I certainly pay a lot of attention to my home state. But putting that aside, Ohio is, I think, a critical battleground for the future of crypto and the future of durable, sustainable crypto legislation. Senator Brown has expressed deep skepticism in the past about digital assets and cryptocurrencies, and yet, we're seeing a real conversation around crypto take place in his race against Bernie Moreno. And I think that for either of these candidates, it's going to be critical to pay attention to the over 1 million Ohioans who have now bought and sold cryptocurrencies or digital assets, and the tens of thousands who have signed up as advocates with Stand With Crypto. The people who have said, we want to have a crypto dialogue in the political dialogue, and we're going to vote on this issue. So I think for both Senator Brown and for Mr. Moreno, it's going to be critical to pay attention to what their voters want.
Paul, quickly, we started off this segment with that quote from Donald Trump promising to fire Gary Gensler. I'm wondering if that happens, are there any names sort of floating around in your circle of who you'd like to see get that job?
Well, there are certainly all sorts of names that have been floated. We don't have a particular view on which of those individuals might make the best SEC chair. I think regardless of particular names or particular individuals, what's critical is that we have an administration that is committed to sensible rules for crypto, and that in nominating someone as chair of the SEC or in confirming someone on behalf of the Senate Banking Committee, that their views on crypto be a critical part of the conversation, and that their understanding that crypto needs to be part of our financial future be a critical criteria.
Really quickly here, Paul, do you think that if there's a change in administration and a change in the SEC chair, that the suits that the SEC have made against you, the nature could change?
Well, regardless of whether or not there is any change of view at the SEC as a result of a change in administration, we're prepared to litigate. We're prepared to win that case in court. We are confident that the courts are going to see this our way, and so we are absolutely laser focused on that outcome. But certainly, with a change in administration will come the opportunity for a new SEC chair and a new commission as a whole to reconsider whether this is the right way to regulate this important emerging asset class and technology. It certainly stands in stark contrast to what we're seeing in Europe and all over the world, where there's a much more sensible, pragmatic, and still tough approach being taken that focuses on legislation, not litigation, is the answer.
Paul, absolutely fascinating to talk to you at this moment. That is Coinbase Chief Legal Officer Paul Graywell. Now, coming up, we're going to talk about venture capital sentiment in the crypto space as the Fed works to avoid a recession. Where is all that risk appetite? And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
The top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old. There's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Healthcare giant Johnson & Johnson is staking its future on innovation. Making investment decisions under pressure has become business as usual for CFO Joe Wolk.
The world is coming at us faster than it ever has. We're getting information more quickly. We're going to have to move faster. The competition's moving faster.
Watch Chief Future Officer, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Crypto startups have raised more money but closed fewer deals in the most recent quarter. And Edith Young is the co-founder of venture capital firm In Crypto Race Capital. She's joining us now to discuss exactly what's going on. If you look at the appetite here to invest in the crypto universe, you've seen, yes, volatility this summer, but generally a big run-up in prices this year. How has it impacted both the volatility and the pricing, that ripple effect into the broader venture ecosystem of crypto?
I think, obviously, beside the volatilities, and this year, there's a few things I really want to highlight on the more positive side of things, which is the approval of the Bitcoin ETF, the Ether ETF, the proliferation of stablecoin, which really drove a lot of the PayFi, real life use cases, like regardless as remittances or trade finances. Now the Solana developers ecosystem is alive and kicking with the support of PayPal and Stripe. So yes, there's a lot of volatilities, which really sometimes do set the mood of the whole crypto ecosystem. But at the same time, what is really exciting from a venture investor point of view is a lot of developers are heads down building, and that's really what it matters at the end of the day. But of course, a lot of the volatilities is so much driven by the mainstream economic environment. And if you think about it, like all the crypto community want is really regulatory clarity and economic stability.
Edith, one thing we've been talking about on this show is kind of that lackluster vibe you're getting in the current flows when you see the Ethereum ETFs, the spot ETFs. And you do see Ethereum prices also quite sluggish of late. So does this mean that demand for Ethereum is waning overall, or that the product just simply isn't as attractive as the spot ETF product, not as attractive as the Ethereum kind of spot in the crypto markets?
I think overall, from a race capital point of view, we don't trade ETF or any like liquid token in the market. We do focus on early stage. But having said that, I do think that summer in general in the past is fairly slow. And then I think like the whole investor community, regardless of crypto or not crypto, are really sort of like taking a wait and see attitude and wanted to know like who's going to win the presidential election in the US. That really mattered quite a bit. And we certainly see that even in the regular stock market. So in that sense, I think it's just a matter of time. And I do, look forward to after the presidential election and how it's going to turn out.
Well, Edith, I wanted to ask you, are there any sort of sectors of the industry that are most attractive right now from a venture capital standpoint? And, come election day, are there some certain type of sectors that we could expect some investments in?
Yeah, I think the whole venture industry, particularly on crypto, are still very excited about infrastructure. Any infrastructure level middleware that's related to kind of support PayFi use cases. So we already seen, because thanks to the more and more sort of volume for stablecoin, it's kind of exciting to now see, for example, like Human Finance already transact over $1 billion in transaction volume for remittances between the Europe, Middle East corridor, or Hong Kong to Philippines. That's actually not even like in volume in the US, which US to Mexico is an interesting corridor. That's one. And then what's really interesting to me is, thanks to the dramatic turn of the presidential election, poly market, prediction market is now, I think, really gone mainstream as a use case, which I think a lot of the mass market don't even know this is powered by crypto. And that's really what, from a venture capital point of view, wanted to see. I think a lot of these use cases will happen under our nose without you even knowing it, because, a lot of the crypto rail is happening in the back end.
Right, and as you pointed out, Solana is a big center of a lot of this activity. PayPal and Stripe getting involved in Solana. Does that sort of explain the lack of enthusiasm for Ether at the moment in a way? Is Solana sort of eating Ether's lunch, so to speak?
I think, if you ask Anatoly, it's never who's killing what and who's eating what. I think it's really a matter of Android versus iOS. There are always going to be developers building on iOS. There's always going to be developers building on Android. Frankly, it's serving different users and developers. So in that sense, I think what we want as a crypto developer community is really for all ecosystem to flourish, because it's not one killing the other. It's, both Android and iOS and Solana and Ethereum need to coexist.
Otherwise, how do you feel about kind of the traditional crypto ecosystem versus stablecoins here? Because the adoption of stablecoins has also been facilitating the use cases that many people are looking for. Why not just stick to stablecoins where possible?
This is super valid. I'm a big supporter of stablecoin, because if you think about a few use cases that I mentioned, regardless of Human Finance or poly market, the user simply is transacting stablecoin. So in that sense, I think many, regardless of the PayPal of the world, Solana of the world, and I also really enjoy you guys' conversation with Circle, with Jeremy a few weeks ago. I think it's really about, regardless of what crypto world wins, we are supporting the stablecoin ecosystem, but it's just one of many crypto use cases.
Edith, we have to leave it there. It's so nice to have you on the show. That is Edith Young, co-founder of Race Capital. Now, coming up, there's a study linking digital assets to psychopathic traits. We're going to talk what's underpinning that study next. This is Bloomberg.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs.
Taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets under pressure.
We admitted to EVs. They're going to happen.
Earnings season in
full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Bringing you up-to-the-minute business news whenever and wherever it happens. I'm Anne Riverder in Ukraine, and this is Bloomberg.
Now, there's a recent academic paper by researchers at the University of Toronto and the University of Miami that found that crypto owners tend to exhibit higher levels of dark personality traits. Bloomberg's Teresa Shea reported on this, and what they found is among more than 2,000 people that they really looked into here, there were higher levels of dark behaviors such as narcissism, Machiavellianism, psychopathy, sadism, according to this paper. What exactly were they finding?
Yeah, I mean, they were saying that if you're a crypto holder, then you probably have a higher chance of distributing these dark traits, one of them being psychopathy. There were also other findings related to more likely being male, and just the idea that you're willing to and like seeing volatility in your assets and things that you invest in.
Don't look at me, more likely being male psychopaths. I don't know why you guys are giving me the funny look. But Teresa, what I thought was funny is that anecdotally, now I haven't done a study on this, but we all know that crypto traders tend to have pretty good senses of humor, self-deprecating senses of humor. So you reached out to a few people to ask, who traded crypto, to ask what they thought about this, and what was their response?
Yeah, for sure. Like, honestly, when I reached out, I was a bit scared. I didn't want, defensive reactions. But honestly, everyone was pretty accepting. They would even consider this not news because most people were like, yeah, if you are interested in crypto, then this is not surprising. The reason why you even got into it is because you're willing to take the chance of seeing your money go up and down.
Right. One of the quotes from a 57-year-old crypto trader, you literally have to be crazy to be involved in something where your net worth is going up $1 million and down $1 million in one day. Nothing is guaranteed. In just about a minute here, Teresa, I mean, why did the researchers here go off on this study in the first place? Do you know much about the study?
Yeah, definitely. I mean, it's not, I think it is the first one that's relating, crypto holders and these traits, but it's definitely not the first one that's examined certain personality traits amongst, Wall Street leadership. I know that there was one that I studied that kind of had links between abusive corporate leadership and working in these types of industries. So nothing new there, but I think for crypto, it's probably the most recent one.
Final quote from the same trader. Call us whatever you want. We are leading the way. Sounds Machiavellian to me. Teresa, thank you so much for your time and for your reporting. That is Teresa Shea. We're going to check on the markets before we let you go here. Of course, remember, we have seen a really risk-off tone here that is also driving crypto lower. We have had Bitcoin drop about 2% on the day. Ethereum dropped 4.3% today. Remember, this is in line with the broader markets as well that have experienced a bit of a downturn. And of course, a heavy week of economic data. Let's see if that makes a change. Remember, that Powell pivot is what initially sent Bitcoin higher. We have erased all of those gains in Bitcoin. After that Powell pivot, let's see if fall brings a new story. That's all for Bloomberg Crypto. Join us next week, same time, same place. This is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
If you look at Reels, Instagram and Facebook Reels, both immensely popular, both growing a lot, those are really working not because the short form video format is special and new. It's actually been around for a long time. You remember Vine and the early days of short form video. It's because of GPUs, it's because of large models, it's because of advancements in recommendation systems. ByteDance is one of the really great companies at this. We also have made an immense investment in harnessing the power of modern models, large data sets, and modern hardware, NVIDIA's hardware and our own hardware, to build recommendations that make the products better and more engaging. Our advertising system is built on modern AI recommendation technology. So I always think it's interesting when people remark that like AI just arrived. It's actually powering already today a huge amount of the engagement and quality of our products.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center.
And that's news when you want it with Bloomberg News Now. Get it 24/7
on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Welcome to Bloomberg Markets. I'm Scarlett Fu. The stock market falling on the first trading day of a seasonally weak month. This as investors face a wall of economic data. So here's a snapshot of today's trading action. You have the S&P 500 losing as much as 1.6%. So we're right around session lows. That is the biggest drop, by the way, since the sell-off on August 5th. And tech companies are leading the way. The NASDAQ 100 down 2.3%. 6 of the Mag 7 names losing at least 1% so far. We're also looking at copper. Lots of red clearly across the risk assets, but in the commodity space too. Copper retreating in London, off by more than 2%. Goldman Sachs slashing its price target on the metal by almost $5,000, and the reason is less demand from China. Oil also extending its recent weakness. You've got Brent falling below $75 a barrel, now at 74, touching the lowest since December of 2023. Now let's go back to equities overall and put the weakness that we're seeing right now into context. Abigail Doolittle has more. Abigail.
Yeah, because it's not just today in terms of Septembers that are bad. It's Septembers overall. This goes over the last 5 years. It's a seasonal look on a monthly basis. And you can see most months for the S&P 500 are higher. February's have been one exception, down 1.7% overall. March is not so great. May down ever so slightly. Maybe that may sell in May and go away. But take a look at September, down 4.2% on an average basis, again, over the last 5 years. But going back past the last 5 years, there's Black Monday. Actually, that was August, speaking of August, but many, many other Septembers, very, very painful, whether it was 2018, 2015, 2011, a tough time. So we seem to be starting off in that line of thought. In fact, so much so that we now have the VIX going into backwardization, where you have the spot VIX, or the last time I looked at least, back above the VIX curve, and it's still true. So it should be the VIX here for the VIX spot VIX is 18.09 for the October contract, just a little bit below that. So it's not wide, but you can see this big move up going from 15 to 18. So investors getting a little bit nervous to the degree that they have been all along around the election time, October, November, and then out of the election, just a little bit of extra hedging or maybe some outright bearish bets. As for what's weighing beneath the surface, let's take a look. So on top, these are the worst percentage movers for the S&P 500. Boeing down 7.8%, and of course they were downgraded by Wells Fargo to underweight from equal weight. The new price target, basically 20% below where shares are now. That analyst highlighting the fact that a cash opportunity is basically going out the door. Free cash flow, this, according to this analyst, will peak in 2027. It's interesting. He must really be an axe on the stock, because you could have another analyst say this and the stock would not move that much. But plus, there's been a lot of bad news for Boeing over more than 5 years, so that could be a piece of this action too. Constellation Energy down 7.8%. Oil down towards 70, so down toward the bottom of the range over the last year. On the point side, Apple is one of the worst point decliners, down 2.2%, really a drag on the markets. And then the big one here is NVIDIA, down 7.8%. Scarlett, over the last 4 days since they've reported, this stock down more than 12%, the worst 4 days going back to 2022. And I would argue that while that quarter was good and the guide was good, it wasn't the blowout. So for a stock that into that report had been up 150%, too far, too fast. You have the yen strengthening a little bit. You have all these headwinds coming together, investors selling those shares, and technically it looks like it may just go back below $100 per share.
Yeah, investors had pushed the stock up expecting the best of everything, and they didn't quite get that. Bloomberg's Abigail Doolittle, thank you so much. Now, adding to the nervousness across markets, a raft of economic data due out this week. Today, we learned that U.S. manufacturing activity shrank for a fifth month. Evercore ISI's Julian Emanuel saying a variety of factors are shaping the perception of this headline.
If you look at manufacturing, it has essentially been, as Mike said, in this sort of weakened state for the better part of a year now. And, you know, part of the benefit of China not growing as expected has been the cap on commodity prices, which is a significant tailwind for risk assets in general, to a point. But again, there is this expectation that this, you know, you're not going to tip over because of China weakness, and we've seen it in the past, and that's part of where the Fed's calculus comes into play.
For more on the latest U.S. manufacturing data, let's bring in Stuart Paul from Bloomberg Economics. So, Stuart, I mentioned stocks open lower today, but we really saw the indexes take a leg lower, another leg lower at 10 a.m. when those ISM manufacturing numbers came out. Does this report revive the growth scare concerns?
I think it might. I think that beyond the growth scare concerns, there's a bit of a disinflationary impulse hiding in the details of the report. Most of the upside, most of the uptick in the report was driven by an increase in inventories and an improvement in supply chains. That should help to alleviate sort of pipeline price pressures and create a disinflationary impulse. That will be something the Fed is keeping in mind as it meets later in the month.
And disinflation is good for markets right now,
That's right.
Although this was a negative economic report overall. Manufacturing deeper into contraction. We mentioned 5 straight months below 50. How often does a manufacturing recession spill over into the broader economy?
It's typically just something that's indicative of broader economic activity. It's not necessarily the case that a contraction in the manufacturing sector spills out broadly into the economy. Manufacturing comprises about 10% of total GDP, a little bit higher in some select states, but they tend to be smaller states. But when you see weakness in consumer demand for finished products, that's indicative of what's going on in terms of just broader consumption growth. When you see consumption growth approaching zero, that's when you start entering that real recession risk phase.
Julian Emanuel mentioned a linkage to China. How does China play into these manufacturing numbers, if at all?
They're related in that they're both U.S. manufacturers and Chinese manufacturers are competing for input prices, despite the fact that there is some slowdown just globally and in the U.S. in manufacturing. We have seen, at least in the August data, actually an upside surprise in the prices paid in raw materials. Again, this is August data. We have to think on a forward-looking basis. The thing that probably matters most in a global context and across borders is that we see domestic demand weakness.
Right.
And so looking forward, we should see, again, some of that disinflation, some of that weakening pipeline price pressures.
Okay. You do see evidence that companies are holding off on spending, whether that's on hiring or whether that's on restocking inventory because of the upcoming election. Is that a component here that we need to think about?
I think that election uncertainty is part of it. I think that part of it is just weakness in the consumer outlook and weakness in demand. firms are reporting that they are allowing for declining headcount, both through attrition and they're starting to lay off workers. That's specifically in manufacturing. We saw a reduction in hours worked, a reduction in both headcount and hours worked in both durables and non-durables manufacturing in July. We expect the same in August. As we think about the jobs report due out later this week, that's something that should contribute to what we think is going to be a relatively weak August payrolls print.
Yeah, okay, so jobs on Friday is obviously the big focal point everyone has, but we do have a number of jobs-related reports coming out. We've got JOLTS tomorrow, Challenger job cuts, and ADP on Thursday. What kind of movement have you seen on the non-farm payrolls number or the unemployment rate estimates from economists? Are they marking things down actively, or have the estimates held fairly steady?
Some of the estimates have been coming in. The estimate for job openings, for example, came in pretty notably. We're still marking job openings for July. JOLTS data are typically delayed. We're marking job openings for July at 8.2 million, so basically steady. When you look at the non-farm payrolls numbers, most of them have been coming in from about 170,000 as an early estimate, and they're starting to fall closer to 150, 145,000 jobs added in August. Unemployment rate forecasts typically, or for the most part, are staying steady around 4.2. Some folks are starting to get a bit more worried and are marking up their unemployment rate forecast for August to around 4.3%.
All right, fascinating. Thank you so much for giving us some insight into what we can expect this week. Bloomberg's Stuart Paul. Now, coming up on Bloomberg Markets, DirecTV and Disney battling for a new agreement after customers suddenly lost Disney programming, and of course that includes ABC and ESPN, over the weekend. That's coming up. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
This is Bloomberg Markets. I'm Scarlett Fu. It's time now for our stock of the hour, which is Disney, whose shares are falling. It was down as much as 1.1%, but has come back a little bit here. A contract dispute over the weekend led DirecTV customers to lose access to ESPN, ABC, and other Disney programming. Bloomberg's Chris Palmieri has been covering this and joins us live now from Los Angeles. And Chris, one thing that we should note is that timing of this dispute is no accident. It's at the start of September, which is when football season begins, both college football and the NFL. And Disney kind of has a history of getting into contract disputes around this time of the year, doesn't it?
Yeah, if you remember a year ago, they got in a big fight with Charter, now the #1 cable company. It was a very similar thing about renewal of ABC and ESPN. And this time around, it's DirecTV, the third largest. We're talking about 11 million customers across the U.S. And, right at the start of football season and the U.S. Open, if you're a fan of that as well, they lost their channels.
Right, and the idea is that they have more leverage because this is when consumers really want to be watching that programming. What is the usual course of action here, and are events kind of lining up to follow the usual script?
Yes and no. Yes, in the sense that they all yell and say that this is an outrage, and there's no compromise here, and then in the end they compromise. But DirecTV had a call this morning for analysts, and they said, oh, does this just mean you'll cave before Monday Night Football next week? And the CFO said, no, CFO said this is an existential fight for us. This is over the future of our business. And what they're asking is they don't just want better rates and have to pay for fewer subscribers. They want the flexibility to offer packages that are sort of like streaming services. So there could be one just for kids and family programming, one for news junkies, one just for sports, and one for kind of general entertainment, and to have the ability to take these channels and put them together and offer them at lower prices to consumers.
So the idea is that people who don't want to watch sports don't have to pay for it because that's the costliest part of the package. Is Disney receptive to any of these smaller packages, smaller bundles?
Partly. They did offer, for example, a smaller sports package, but DirecTV said that there were other terms added to that, and they didn't get into specifics, but that just made it unusable for them. And to put this in context, the DirecTV folks said they pay Disney about $2 billion a year in subscriber fees. This is about $270 from each household.
So the Fed bids for 52-week bills, a total of $525.3 million.
Disney for all of those channels, ESPN, Disney Channel, ABC.
Yeah, to fund all those expensive live sports rights, which Disney, ESPN has no choice but to bid it because that is the reason for being. So when it comes down to it, for ESPN, a lot of it comes down to what happens with this part of the Disney empire and how it manages through all the cord cutting that's been ongoing consistently, even as it brings in a lot of cash flow. The president of ESPN, Jimmy Pitaro, recently laid out his strategy. Is there anything new to it? Did he say anything that you didn't already know?
Well, it is evolving, and for example, next year they're going to launch a standalone version of ESPN for streaming. This season they have this tool where you can find out where any game is on, whether it's on an ESPN platform or another network. They're making a big push into sports betting this year with ESPN Bet, and integrating all the apps so you can get data for betting. So they're making a lot of changes in the business. And to get back to DirecTV, they say they're basically encouraging people to leave the traditional TV package with all of these other features that you can get online and get directly. And at the same time, they're sort of starving, in a way, the traditional TV customer. Not so much in sports because, all of the big games are on ESPN, but in terms of the entertainment channels, so much goes direct to the streaming services nowadays.
Chris, final question to you. Any update on Venue, the sports JV that Disney was planning to launch with Fox and Warner Brothers Discovery? I know that a judge halted the launch, but is there any next steps being articulated here?
All three of the major partners, Fox, Warner Brothers, and Disney, say that they're going to continue to fight this. They didn't think the judge was fair. in her decision. But it certainly seems, in this case, like DirecTV, seems to embolden the distributors to fight for their own version of venue, essentially.
Okay, got it. Bloomberg's Chris Palmieri, who covers Disney and other entertainment companies out in LA for us. Thank you so much. Let's turn now to market makers in the headlines today, and we'll talk about two of the biggest, Citadel Securities and Jane Street. Both are on track for record annual revenue. Bloomberg has learned that at Ken Griffin Citadel Securities, first half net trading revenue rose 81% to just under $5 billion from the same period a year ago. While at Jane Street, net trading revenue gained a similar amount, 78% to $8.4 billion. For more on all of this, let's bring in now Bloomberg's Catherine Doherty. So, Catherine, Citadel Securities, Jane Street, these are not publicly traded companies. They are not obligated to disclose any of these numbers, right?
That's right. But they do have debt, and those credit investors are getting their results. They're getting updates. It doesn't have to be on such a strict schedule as if you were a public company having to disclose and tell your investors when you're going to disclose. But recently we've heard from Jane Street and Citadel Securities in the debt market. That's where these numbers are coming from. They're giving updates to their investors to provide some color on why they're seeing this record jump or the potential to reach a record for 2024. And they're citing both the volume in the equities and credit market. And for Jane Street in particular, they recently took out a loan in the market. That is why they're coming to credit investors. And they're saying that they're able to invest using that money that they got from the credit market to essentially help just not only continue the momentum, but to set a path that will potentially see growth that reaches and starts to compete with the major U.S. banks.
Okay, I'm glad you're going there, because to what extent are they taking market share from the major U.S. banks, or are they creating opportunities for themselves by offering expertise, access to nichier parts of the market?
So it's a combination of two things. Number one, the pie is getting bigger. So they're coming into this space and they're competing with the big U.S. banks, but because the pie is bigger, they're able to take market share. It's not necessarily that it has to be at the expense of the bank. But in the future, we will start to track to see whether the market share pulls back in a significant way from some of these big public U.S. trading firms. And if the market makers are providing the expertise that you allude to, that is in the form of their technology that's able to provide better pricing, tight pricing, and also their people that they're taking from, sometimes it is from the U.S. banks. Other times they're coming from hedge funds. They're providing expertise in the form of fixed income and equities trading. For Jane Street, they're very dominant in the ETF trading space.
That's right.
So their people and their technology is really their bread and butter, and where they're putting money so that they can not just maintain this growth, but really accelerate into the future.
Very quick question for you. What's been the trajectory of their growth? If you were to kind of plot it out over time, has it been gradual, or has it suddenly gone higher?
So last year, across the market, this wasn't just with the market makers. You saw a pullback in trading from 2022 and 2021. Both of those years were record hauls. 2024 is likely to be kind of a continued or renewed momentum that we've seen at the U.S. banks, and now that we're seeing with the market-making firms. But their jump, the 81%, the 78% compared to a year ago that we're citing in our reporting at Citadel Securities and at Jane Street, that is a just monumental jump when you compare it to the U.S. banks that are still growing, but not at that over 50% rate.
Yeah, much more moderate rates, in other words.
Exactly.
Catherine Doherty, thank you as always. Bloomberg's Catherine Doherty. Now, coming up, we've got one of China's biggest internet companies securing a big endorsement from the country's antitrust watchdog. Stay tuned for my conversation with Kuo Zhang. He is president of Alibaba.com. This is Bloomberg.
morning from our world headquarters in New York. I'm Manus Krenny.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
This is Bloomberg Markets. I'm Scarlett Fu. China e-commerce giant Alibaba overcoming a regulatory hurdle. Beijing's antitrust watchdog agency cleared the company of monopolistic behavior after a probe into its online behavior overall. For more on this, Kuo Zhang, president of Alibaba.com, joins us now. So, Kuo, investors clearly like the news of the watchdog clearing Alibaba after this 3-year investigation. What does the endorsement mean for your business, the B2B business of Alibaba?
Sure. Actually, B2B, is the first business of Alibaba Group, and we are focusing on B2B. So first of all, B2B global trade actually is a big business. It's $20 trillion US, and the digital penetration we think is still low. It's kind of a single digit. Second is that we are the top platform, the top B2B platform. If you want to build your own business, create your own product, and start your own brand. I can give you some examples if you have interest.
Well, I want to talk about the overall economic backdrop here, too, because it's important to see Alibaba as kind of representative of what a lot of companies in China are struggling with, this post-COVID slowdown and consumers not spending as much money as they used to. What is the growth story right now at Alibaba.com? Where is the growth going to come from?
Sure. So we are part of the business of AIDC, which is the global business part of Alibaba Group. And in this quarterly release, AIDC actually is more than 30% of growth in revenue. And Alibaba.com, the B2B part, we are more than digital, digital growth is 12% of growth for the last quarter. And first of all, if you see from the kind of global business, we see the global business is growing, is fast, especially for the digital part. We are using all kind of technology to enable that. And the second, from the kind of customer perspective, we see there's a lot of kind of customers going global. It's not only from China, but from all over the world as well. So we see many of the kind of areas that is a 30 or 40% of growth from the new customers' perspective.
All right. Kuo, I really appreciate your joining us. Kuo Zhang is president of Alibaba.com. He's speaking to us from Las Vegas. And as we head to break, just a quick mention here of U.S. equity indexes at session lows right now, with the Russell 2000 faring the worst, declining by 2.7%. The S&P 500 as a whole in a 1.6% hole. This is Bloomberg.
top names in business are on Bloomberg.
It's about category creation. You know, today we are a tea drinking nation. Tea penetration is 91%, 93%. We are at 25% of the affluent class. We are at 14-15% of the overall market. I'm confident that if we continue to do what we are good at, in terms of the Starbucks experience, in terms of the coffee expertise, in terms of localizing and innovating, we will get our consumers.
Nobody covers business like Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It's the final stretch. Welcome to the fastest show in politics. With 2 months to the election and only 1 week to the first debate between Kamala Harris and Donald Trump, I'm Joe Matthew alongside Kaylee Lines in Washington, D.C., welcoming our global television and radio audiences worldwide, including our new blowtorch in Boston, 92.9 FM. It's great to see you, and it's great to see you after almost 2 weeks. I hope you've managed to hold the fort. Thank you for that. I don't know how I got away with that. But we're counting down to the debate. 1 week from tonight, you and I are going to be here for a late one, of course, and it's all happening against the backdrop of a very tenuous moment in Israel, which is an issue that's dogged Joe Biden and progressive Democrats for months.
Yeah, and of course, Kamala Harris has spoken out about this issue. She even addressed it on stage in Chicago at the DNC last month. But of course, it is putting a fresh spotlight on the ongoing effort toward a ceasefire, more specifically a hostage deal after 6 hostages that were being held by Hamas were found executed in a tunnel in Gaza over this past weekend, including, of course, an American.
That led to a general strike yesterday, some very stern comments from Benjamin Netanyahu that we'll bring to you here. But it's part of the story that we're going to be covering throughout this hour, beginning with some reporting from Courtney McBride on our national security team.
And of course, we'll also be joined by Democratic Congressman Jake Auchincloss of Massachusetts. Of course, he has military background, vast experience in the Middle East, and it'll be insightful to hear from him in the aftermath of these events as well. But first, though, as always, we got to kick it off with a check on the markets because it is not a pretty day out there if you're long equities. Charlie Pellet.
Indeed, that's putting it mildly. Kayla Lines, we have got the Dow, the S&P, NASDAQ right now worst level of the day. Another leg lower since our last update with the S&P down 89 now, dropped there of 1.6%. We've got the Dow down 500 even now, a decline of 1.2%. And NASDAQ lower by 447 points, a drop right now of 2.5%. 10-year 3.85%, the 2-year 3.88%. Spot gold down $13 the ounce, down 0.5%, 24.86, and a big drop for crude today, down 4.4%. WTI West Texas Intermediate crude 70.31 a barrel. Vice President Kamala Harris has joined President Biden in declaring that United States Steel should remain domestically owned and operated. The latest headwind to the proposed sale of the company to
The 52-week Brewer high yield at 4.15%, 4.15% with a bid to cover ratio of 3. So the US sold $47 billion, awarding 78.67% of bids at heart.
For the U.S. stock market, back to work Tuesday for a lot of people with the S&P down 90 points right now, a decline of 1.6%. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet in New York, thank you so much. Here in Washington, alongside Joe Matthew, of course, we've had our eyes on the Middle East for the last several days after the death of 6 hostages that were being held by Hamas over the weekend, including one American, Hersh Poland. And of course, this has put renewed emphasis on the Biden administration's efforts to reach a ceasefire agreement that would see the return of the remaining hostages. The problem is you need 2 parties to agree to that, Hamas and, of course, Israeli Prime Minister Benjamin Netanyahu, who even in the aftermath of this weekend's events seemed pretty stubborn in his convictions.
We say yes, they say no all the time, but they also murdered these people. And now we need maximum pressure on Hamas. I don't believe that either President Biden or anyone serious about achieving peace and achieving the release would seriously ask Israel to make these concessions. We've already made them.
And so we start this day in Washington without a sense of what the next stage in this story is. Much of the focus, Kaylee, has been around the Philadelphia corridor, that area along the border of Egypt and Gaza. Netanyahu says the IDF will not be leaving that area, and that may be what a ceasefire actually hinges on right now.
Yeah, of course, we've heard from John Kirby, the spokesperson for the National Security Council, earlier today when speaking to reporters. He says they're still working on a ceasefire agreement, but we know that the same sticking points have been stuck for some time.
That's right. That's where we start our conversation with Courtney McBride. I'm glad to say is with us, Bloomberg national security reporter.
Brent crude futures down by more than 5% now on the session.
Had a good long weekend. Thanks for joining us here as we try to figure out, with so much noise, exactly where things stand. I believe it was the Washington Post over the weekend out with reporting that the U.S. was working on a best and final offer on a ceasefire. Is that negotiating through the media, or is that actually where we are in this?
That seems to be where things stand. Secretary of State Antony Blinken did say in August when we were in Israel that this could be the last opportunity for a peace agreement. Now, he also say that the U.S. is not backing away and will continue to push, but the sense is now that the U.S. negotiating with Israel, Egypt, and Qatar, working and liaising with Hamas, are really trying to get to, in the coming days, a final offer. Whether they frame it that way publicly is an open question.
Well, of course, we've heard briefly from President Biden over this past weekend. He was asked whether or not he thought Prime Minister Netanyahu was doing enough to achieve a ceasefire. He said no. He was also asked when he would speak with him. He said eventually. Why not soon, Courtney?
Well, I mean, the administration has been pretty clear that, they'll have conversations at whatever level they think are going to be productive. So it's possible that at this stage, the president doesn't think that he'd be able to accomplish something in terms of moving a deal forward. But we expect to see some sort of proposal, in the coming days. The U.S. has said, and Israel has said, that Netanyahu agreed to the bridging agreement, but there continue to be implementation questions, centered on the Philadelphia corridor, as you both mentioned.
Could a temporary withdrawal from the corridor be enough to get a ceasefire, even if a temporary ceasefire in place? That seems to be something that some members of Netanyahu's war cabinet want, but he does not.
There's certainly internal disagreement over that within the Israeli government, but as Netanyahu said, both parties have to agree, and we're not sure sort of where the sticking points are, but the understanding that we have, from our conversations is both Israel and Hamas are going to have to make some concessions in order to come to an agreement, and we're just not there yet.
Do we have an understanding of whether or not the calculus for the Israeli government changes with the knowledge that Hamas is actually willing to execute the hostages if they think they're on the verge of being rescued? Have they not been operating under the assumption that Hamas was going to want to use these human beings as leverage, and therefore they would be somewhat protected until Israel can get to them?
Well, I mean, again, this is an area where there seems to be disagreement within even the war cabinet. But Hamas has been pretty clear about its willingness to use, as you said, to use individuals as leverage, as human shields. But there are many in the Israeli government who say that they're going to continue these efforts to rescue the hostages, but there is that possibility that they are killed in the process, either in an operation to rescue them or when Hamas decides that the Israeli government or the military is getting too close.
We've been showing images on Bloomberg TV and on YouTube of these massive protests. We saw a general strike yesterday, Sunday into Monday, tens of thousands of people on the streets. Is Benjamin Netanyahu moved by those optics?
He gave a speech Monday evening that suggested he is firm in his resolve. He is not going to change his position, certainly on the Philadelphia corridor, and that this, if anything, should reinforce the decision to just try to seek the rescue of hostages as opposed to simply negotiating or conceding more to Hamas.
All right, Bloomberg's Courtney McBride, great reporting. Thank you so much for joining us, even though certainly it is difficult subject matter, to say the least, especially considering there are still more than 100 hostages remaining in Gaza at this time, and a number of families who certainly are struggling with this right now. We want to continue this conversation with Democratic Congressman Jake Auchincloss of Massachusetts, who is joining us here on Bloomberg TV and radio. Sir, it's great to have you. I know you had previously met with Hirsch's parents, so I'm sure that this hits home in a very real way to you, given the ties to Massachusetts. What needs to be done so that no other parent or no other family member needs to go through what they are currently going through? What do the next steps need to be for the U.S. and for Israel?
I appreciate you having me on. This has been a nightmare. I was able to speak with Rachel and John, Hirsch's parents. And as you said, Hirsch had strong connections to Massachusetts. I learned from some of his friends and associates about what a warm and wonderful person he was, who made everyone around him better. And I had a hard time sleeping that night that I found out that he had been executed. And let's be clear what happened, because it's been elided over too frequently, I think, over the last week. Hamas forced these 6 young people to make videos to their family members and then shot them execution style. Hamas is a barbaric, nihilistic organization, and it can have no role in post-war governance in Gaza because this cycle of depravity will repeat itself. They have broken every ceasefire they have ever affixed their seal to. They have the destruction of Israel as part of their charter, and they will take and execute more hostages. They will rape more Israeli and Arab women, and they will continue to immiserate the Palestinian people.
Well, Congressman, as a combat veteran Marine, you bring a unique perspective that we'd like you to draw on in this case, because there are, of course, questions now about what else the IDF can do here, what else the Israeli military can accomplish, particularly if it involves pulling out of the Philadelphia corridor that we've been talking about along the border with Egypt. As a warrior yourself, is it possible for the IDF to extract hostages using force, using rescue operations?
Well, as someone who was a platoon commander myself, I think I know enough as a politician to not wade in on tactical questions that I don't have field firsthand knowledge of. But I will, of course, say that, as Clausewitz wrote more than a century ago, all military operations are an extension of politics by other means. And what that means is it is never sufficient in a war to purely have a military stratagem. You also need a political stratagem to complement those operations. And this is my frustration with Prime Minister Netanyahu. It's not that he is insisting on Israel's security. It's not that he's insisting on Hamas being excluded from post-war governance. I agree with him on those things. My frustration with the Prime Minister is that he is not offering a vision of reconstruction for Gaza, Palestinian-led, Arab-supported, Western-backed, that would truly drain Hamas's political capital, because that is what Sinwar fears. Sinwar does not fear destruction. Sinwar does fear reconstruction, and Prime Minister Netanyahu is not offering that.
Well, it does seem, sir, that the president may share in that frustration. He has said on the record this weekend that no, he does not think Benjamin Netanyahu is doing enough to secure a ceasefire. But is President Biden doing enough? Is there more the U.S. government could be doing to exercise leverage over both Israel and Hamas here?
Well, I think President Biden has walked a tightrope as well as possible in the Middle East. He's rejected calls from the right that would lead to escalation and conflagration in the region through wider military operations. He's also rejected misguided calls from the left that would have led to a early peremptory unilateral ceasefire that would have left the hostages there and left Hamas in power. But there are no good answers on any day in the Middle East, and the president's doing his utmost to get the hostages home and to offer a positive agenda for Gaza as opposed to the nihilistic one that Hamas offers. I would say, though, that sometimes we have problems bigger. And what I mean by that is, this is not just about Israel versus Hamas. This is about an axis of authoritarians and terrorists stretching from China and Russia through Iran and its proxy terror forces in the Middle East. And one thing that we could do to enact more leverage over these proxy terror forces is to cut off Iran's oil revenues by getting China to agree to stop importing Iranian oil. Right now, Iran is filling its coffers with Chinese money. It's using that money to fund proxy terror forces in the Middle East. And if we can get that deal with China, which I will admit would be tough, but if we can get that deal with China, we got a lot more leverage in the Middle East.
Well, Congressman, as we consider the strained relations between the Biden White House and Benjamin Netanyahu here, we recall hostages being released, a hostage deal the day that Ronald Reagan was brought into office. And I wonder if you're concerned about a Trump effect here. If the narrative is correct that Benjamin Netanyahu has a better and more trusting relationship with Donald Trump, and that he may be waiting for a Trump administration to strike a deal.
I'm not going to opine on Prime Minister Netanyahu's domestic or foreign political machinations. The United States is going to work with the elected head of government that Israel sends, and we are going to try to strike a deal for a temporary ceasefire and hostage return, and also ensure that Hamas is not permanently in place in Gaza. And I think it's important that we remember that the U.S.-Israel relationship is grounded on values that are much more resilient than any given personalities, either on our side or on their side. This is about democracy. This is about freedom. This is about the rule of law. And while we may have frustrations and disagreements, we are on the same side of civilization versus barbarism. Hamas is on the other side.
Well, if you, sir, don't want to weigh in much on Israel politics, would love to discuss more U.S. politics with you, considering you'll be returning here to Washington next week, along with your colleagues in the House and the Senate, with just a few weeks to go until a government funding deadline. What exactly are you bracing for, sir? Do you expect you're going to have to vote on a continuing resolution?
What I'm bracing for is for the Republicans to refuse to act like grown-ups. This is such a preventable government shutdown scenario. Earlier in this Congress, we passed a big bipartisan bill that reduced the federal deficit and responsibly funded federal programs and services, things from Head Start to the U.S. military. It was agreed to by Republican Speaker Kevin McCarthy and Democratic President Joe Biden. It passed with big bipartisan majorities.
So we are shortly expecting the Fed reverse repo operation.
I mean, that's not how grown-ups operate in Washington, D.C. When you shake hands, you are good to your word. And so the Republicans need to act like adults.
Well, there's reporting, Congressman, I'd love to know if you're hearing about this, that Speaker Mike Johnson wants to bring a stopgap bill to the floor and combine it with the SAVE Act. This was the proposal that he went to Mar-a-Lago to roll out with Donald Trump a couple of months ago, requiring proof of citizenship in order to register to vote in a federal election. I know it's primary day up there in Massachusetts, and it's maybe apples and oranges in this case, but the narrative in Washington is this increases the chances of a shutdown. And as we talk to our listeners today on 92.9 in Boston, they're listening to us talk right now, Congressman. Can you tell them that this is just bluster and that the government will not shut down this fall?
If Hakeem Jeffries had the Speaker's gavel, I could tell them that. But with Republican Speaker Mike Johnson, no, I can't tell them that because he doesn't seem willing to act like a grown-up. This is exactly what I'm talking about. The SAVE Act is making up a problem that does not exist.
69 counterparties take 349 spot $808 billion at the Fed's reverse repo operation.
For political cheap shots. This is obscene. And I would also add that I'm not going to take a lecture from Speaker Mike Johnson about election integrity. This is the man who led the charge to overturn the election results in 2020 and who has consistently supported President Trump and his big lie that has so damaged our democratic institutions.
And finally, sir, we have about a minute left on the subject of elections. Your seat, of course, is safe. You are running unopposed, but that doesn't go for a number of your colleagues. With Kamala Harris at the top of the Democratic ballot, are you more confident that you will be a member of the majority, not the minority, come next January?
It's going to be a close-run thing. Yes, I feel confident, but we got to work for every vote for every day between now and Election Day. The path to a House majority runs through a couple dozen House seats across a few states, and we need to demonstrate that the Democrats are talking about the future, whereas the Republicans are talking about the past. You got Donald Trump talking about, for example, a tax policy that dates to the 1890s that would raise cost of living for the average American family by at least $2,000, whereas we got Kamala Harris talking about making housing more affordable. That is the contrast we need to drive home up and down the ticket.
Congressman, it's good to see you. Thanks for coming back. We'll meet you back here in Washington, hopefully as soon as next week. Jake Auchincloss, the Democrat, of course, Massachusetts, 4th District, hailing from the halls of Newtonville. Kaylee, interesting to hear from a Democrat bracing for the return of lawmakers in a Republican-led House next week.
Yeah, it's going to be a big one. You got the lawmakers returning to Capitol Hill, a presidential debate, of course, between Kamala Harris and Donald Trump. I think we got some inflation data next week as well, CPI and PPI.
Yeah, little things here at Bloomberg that we focus on. We all put it together in the mosaic that is American politics. And that's why we're here, of course, on the fastest show in politics. Our panel is up next, right here on Bloomberg TV and radio.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Healthcare giant Johnson & Johnson is staking its future on innovation. Making investment decisions under pressure has become business as usual for CFO Joe Wolk.
The world is coming at us faster than it ever has. We're getting information more quickly. We're going to have to move faster. The competition's moving faster.
Watch Chief Future Officer, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Earnings season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs.
Taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets. It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are getting hit hard at the start of a historically tough month for the U.S. stock market. S&P right now down 86 points to 55.61, a drop of 1.5%. Dow Industrials down 443 points now, a decline of 1%, while the NASDAQ Composite Index is down 433, a drop of 2.4%. 10-year 3.84%, the 2-year 3.87%. Spot gold down $9.50 the ounce to $24.89 now, a drop of 0.4%. While West Texas Intermediate crude down 4.4%, $70.33 a barrel on WTI. Apple will be holding a product announcement event last week. Apple shares have dropped on 12 of the 17 iPhone launch days, according to data compiled by Bloomberg. Apple shares today now down by 2.2%. Also, September has been the worst month for Apple shares over the past decade, falling an average of 3.2% for the month during that time. Again, recapping, U.S. stocks are trading lower. S&P down 1.5%. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. I'm Kaylee Lyons, broadcasting live from Washington alongside Joe Matthew on Bloomberg TV and radio. And of course, if you're listening to us on the radio in Boston, you're doing so on our news signal 92.9 FM. As we've mentioned this hour, Joe, it is primary day in Massachusetts.
Yes.
There are still primary contests that are happening. In the meantime, the general election, frankly, is about to begin. Not only are we in the post-Labor Day sprint to November 5th, but this week, some mail-in ballot early voting.
Yes, I'm so happy you mentioned this. We're talking about the big 2-month windup here. Yeah. It starts this week. North Carolina is where absentee ballots go out Friday, Kaylee, suggesting that if they actually pull this off and the post office does its job, people could be voting, submitting votes this week, putting it back in the mailbox on Saturday. Then you go to September 16th and it's Pennsylvania. So the stakes could not be higher as these two candidates come together in their debate 1 week from tonight. We'll, of course, have special coverage, and our panel will be along with us.
Yeah.
They're here now. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. Of course, he is partner at Stone Court Capital. Jeannie, political science professor, Iona University. Great to see you both. Rick, I just got back from North Carolina last week, and you were down there too. By the way, we weren't staying together. Remarkable to see the ads in North Carolina to actually spend a week in a swing state. You cannot hide from Kamala Harris's television messaging. And I see the headline on the terminal, Democrats in southern swing states see path for a rare double win. Now, you're a southerner, Rick. Look at this. First time since Jimmy Carter, they say, North Carolina and Georgia. The difference is Jimmy Carter was from Georgia, and he was not a liberal Democrat from San Francisco. Are you buying this narrative?
You know, I'm buying narrative at a state-by-state basis, but sure. You know, politics has changed since Jimmy Carter. It's not the same Democratic Party that he was in. And the reality is they have the toxic combination of growing urban votes, which the Democrats command. Over 80% of their vote comes from these urban areas, and concentrations of black voters who, again, on a percentage basis, over 80% will support Democratic candidates. And so she's just getting in the way of history at this stage. In North Carolina, if the demographics continue to expand the way they are, you get more in-migration from people who move to the cities where the big paying jobs are. You're going to have states that are going to start voting Democratic more often. And this could be the first time we see it where both of these are in play in, 2 generations since Jimmy Carter. So the reality is this is the wave of the future. If anything, the Democrats are looking over their shoulder to see what remains of their rural strategy, which is now dominated by MAGA.
Yeah, of course, Kamala Harris and Tim Walz were trying to tap back into that rural vote in their bus tour of Georgia last week. And of course, in Georgia and North Carolina, in our Bloomberg Morning Consult swing state polling that came out last week, Kamala Harris is up by 2 points right now. Joe obviously has mentioned that money is getting spent there in terms of advertisements. But I wonder, Jeannie, how crucial personnel is too. And part of our reporting here, it's that in these southern states, Kamala Harris and her campaign have signed up more than 50,000 volunteers. Is that at the end of the day what makes a real difference?
It absolutely will. First of all, Kaylee, I don't know why you and I weren't in North Carolina. I guess that's where everybody was.
Wondering that
Didn't
too.
get the invite.
Yeah, we didn't get it. we'll go down next time. But, absolutely, especially in a race that is this razor thin, this is going to come down to a ground game and who can get out the vote. And so that's where you have this big advantage when they're able to raise the enthusiasm. And that's what's been so, really stunning about what Kamala Harris and her team have been able to do in about 6 weeks is the enthusiasm number we saw out of Gallup, for instance, that has changed now in the double digits for Harris. And it was in the single digits for Trump just back in March. So that enthusiasm gets people out on the ground, and that's critically important. So that, we also saw over the weekend, Harris and Waltz out there in the Rust Belt trying to do the same thing with their union contacts, get their unions, not just through the endorsements and the leadership, but members on the ground out because they too are well organized. So this is very, very important. And I think Republicans are starting to sweat this a bit because, as you guys just talked about, voting starts imminently and it continues for about 60 days.
That's right. All I know is this whole show just spent a week in Chicago together and nobody was talking about going on a vacation together. Jeannie, Rick, what do you make of this idea of capitalizing on early voting? Friday is North Carolina. The 16th is then Pennsylvania. How does that train your focus on where to spend ad dollars?
Yeah, no, look, I mean, as you mentioned at the top of the hour here, the rest of the country is not seeing the campaign for president that's going on in 7 targeted
Comments from the U.S. State Department says talks last week made progress on Gaza ceasefire and hostage release deals. Both sides need to be flexible. It says over the coming days, the U.S. will continue to engage with regional partners to finalize a ceasefire and hostage deal.
It's like night and day. And so when you look at the microcosm on the kind of buy that the Harris campaign just did, and that is very strategic because they want to get all the best ad adjacencies that they can get. And if they buy now, they're going to get them. Everybody who buys later on is going to have to take whatever is available. So kudos to them for getting out with this big buy. But I remember it's like deja vu all over again. 2008 campaign, we didn't look as hard as we should have at North Carolina's early voting. And it's been happening for a long time. And Barack Obama held rally after rally where he could sign up voters at his rallies. And we woke up to find out that we'd lost massively North Carolina for the first time in a long time. And the reality was 65% of the election voters had already voted by the time election day had come about. We lost North Carolina a week before the election was even held. And so these things matter a lot right now. And with Harris's momentum, it's got to be very troubling to the campaign for Trump because he's got to get more action going on because he can't outbuy her with these ads. He can't outground game her. In fact, he's got basically the Elon Musk super PAC running his ground game in North Carolina, which is just getting started. So he's got to actually show up and dominate the airwaves and hope his vote gets out. And so the reality is taking a day off like Labor Day and not going to a place like North Carolina is a huge strategic failure for the Trump campaign.
Well, Rick, it was just last week that I had a chance to speak with Lara Trump, the co-chair of the RNC, who said that it has gotten tighter in North Carolina and Pennsylvania. Those are 2 states that the party is considering spending more money in. But with what you just said, is it going to be too late by the time those resources are actually deployed for it to make the difference it could have if they hadn't been essentially assuming North Carolina was in their pocket up until 6 weeks ago?
Absolutely. I mean, right now you are playing a rear guard action if you're not ready to start processing your voter ID work, in other words, identifying all your voters up until this point in time, and then now going to them and saying, please fill out your ballot requests and get it in. And that's happening on the Democratic side. We know they've been preparing for this. And all of a sudden you have this influx of new voters who are willing to support Harris. Obviously, the momentum is shifting to her since Joe Biden got out of the race, and that's what all these voters are doing who are flooding these headquarters. Is they're calling voters saying, "Are you now a Harris supporter? And if so, can we make sure you've got your ballot and you get it in as soon as you can?" The Trump campaign is still fighting the image that Donald Trump promotes all the time, which is, absentee voting or early voting is somehow violating the law. And so Republican voters are sort of stuck. They used to be extremely good at this, but now they're stuck because what the Trump campaign is telling them is one thing and what they ought to be doing is another.
Remarkable moment we're in here. Ballots go out starting Friday. Jeannie, we can't talk about the South without looking at Florida. And some voters there might have whiplash after listening to Donald Trump over the course of the weekend. He started by talking about, or at least mandating, that insurance companies do that. Then, after being pressed on this ballot question, a Florida amendment that he will now vote against, a proposed amendment to expand abortion access. This is obviously fertile ground for the Harris campaign, and they've been active in trying to counter-message Donald Trump. Is it possible for Donald Trump to ever get on message when it comes to the issue of abortion?
It's going to be very tough. You know, Democrats are taking it right to Donald Trump. They're starting this reproductive freedom bus tour, guess where? In his backyard in Palm Beach, Florida, because they too, just like Donald Trump, are looking at these numbers. The latest Ipsos poll has Kamala Harris up 0.13 or plus 13 rather with women. That gender divide is real, and much of it comes back to the issue of reproductive rights and abortion. That's why we've seen him struggling in the area of abortion, what to do on the amendment in Florida, talking about IVF as it's going to be paid for by the government, and even health insurance. Even people in his own party are saying that's a little too fast. We, support IVF, but we can't afford that. He's struggling because he knows he wants to do two things he can't do. He wants to take a bow for overturning Roe, and he also doesn't want to be hit by the backlash of that. And that's very tough to do. And I think all of this makes what happens next Tuesday that much more important, because things are moving very quickly, and that is going to be one big opportunity for Donald Trump to turn this thing around and get back on his feet and make some of these hits on Harris stick. And so I think that debate is just so much more important now than it even was a week ago today.
Jeannie, we just have about a minute left, but of course this abortion issue has made some Democrats suggest that Florida could potentially be in play for the party, and it's also looking at down ballot races in that regard. On that subject, Kamala Harris, according to people familiar who've told Bloomberg, is donating $24.5 million to down ballot, $10 million to the DSCC, to the DCCC as well, even sending money to gubernatorial races. Is that a signal of confidence that she has enough money to compete, or is that a signal that she's aware that even if she wins, it doesn't matter if she doesn't have Congress along with her?
I think it's actually a signal of both. It is a signal that she has benefited from some of the most impressive fundraising we have ever seen in either party in a very short period of time, breaking all kind of fundraising rules, or all kind of fundraising records, rather. And it's also the fact that she has this money, and she understands if she wins the presidency, but she doesn't keep the Senate, or, at least make room in the House, she's going to have difficulty passing her agenda. So I think it's both.
Yeah, that's true. All right, Jeannie Shanzano and Rick Davis, our signature political panel, thank you so much for joining. We'll be right back on Bloomberg TV and radio.
The top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything.